Alrighty. Are we live? Wait for it. Wait for it. There it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list in main channel. First link for the Scream Alerts boot camp and real estate course. But ladies and gentlemen, welcome to the day before the storm. So it's already getting active here. And if you're curious as to why the market was down and now it's up, it's because of jobless claims and continuing claims. It was actually your second miss of the year, and a miss in a positive direction, meaning that you had an upside in jobless claims. It's showing a little bit of weakness in the labor market. Again, to give you some context, I think out of the last 12 jobless claims, this is the second one that has came in higher. So ahead of the non-farms payroll, everybody's looking at employment. This is showing a much softer picture, at least a sign of hope coming into all of this volatility and expectation. So jobless claims, they came in a little hotter. Your continuing claims, they've actually hit a yearly high, and it's getting people kind of excited here, but it's definitely, I mean, we're still in the gulag. We are still in the gulag. So, Chatadonia, I hope you're ready. There wasn't much news overseas, a little bit of back and forth in Europe and China. Everybody is focused on the U.S. Jerome Powell is dominating the headlines the last couple of days. Everybody's looking at bonds, and even then, up until the data, the bond yields were climbing back to 4%. So that was very interesting. Yes, the if is still in play after today's data, 100%. But, Chad, it's going to be wild. It's going to be exciting. We got a lot to deal with. And then after today, all of the action is going to be tomorrow pre-market. So I hope you're ready, Chatadonia. What's up, man? Good morning. Oh, what's up, Warlord Wavy Bone? Danvi, Payday Devil, Dennis, Double O Bubble, OLGG, Yatana, Cookie Boys, good morning. What's up, Santi? What's up, Inverse King? What's up, Josh King? Gunnar, Nepal, baby, good morning. You ready to play, Data Junkie? Oh, Colt Samuels, baby. What's up, Vincent Estrella, Caballero, Riley Lowe, Ebolition, Sam Rat, Ryan M, Zen Long Stocks, Mopar, oh my gosh. Look at the chat. Oh, what happened here on Thursday? Y'all active as hell. What's up, Lori? Good morning. What's up, KVS? Good morning, Greg. Good morning, Tom Smith. Sunny, good morning. Inhumanation. What's up, man? Good morning, Mo. You ready to play Gus for the long term? I know you got the long term. I know it's game time. Mikey Leach is in the house. Laker J. Oh, I love to say that every morning. Love to say it every morning. Bright and early. What's up, Lucky Soldier? What's up, Marceline, Zandy, Johandi, Shine Guys, Neil, Enrique, Ahmad, Iman. Oh, look at the chat. God bless you all. You know that. Stafford, good morning. It's great to see you, Siraj. It's great to see you, Reggie. Lateral, good morning. You know, that's beautiful to see some of y'all bright and early in the morning and consistently. Oh, man. God bless you. John Doe Bulls. Woo. Oh, you the GOAT, man. You the GOAT. We all here, man. It's the cult. It's the cult, man. This is a collective effort right now, and I'm glad we're here. We woke up here for March, man. It's only March 9th. Actually, March is flying by, to be honest with you. So we have a lot to deal with. And welcome to the first quarter, man. Let's keep going. I'm glad that you're here. I'm glad that you made it. I'm glad that you made it, Chatadonia. Let's go. Let's go. So, on that note, let us get into the news, Chatadonia. Hope y'all feeling good. I hope y'all feeling good. Credit Suisse, they dropped close to a record low after delaying their publication of their annual report because the SEC raised last-minute technical questions related to the previous statement. The queries over revisions the firm made to cash flow statements in 2019 and 2020. JP Morgan turned on Jess Stolley, accusing him of deception and disloyalty not long after defending him in the Jeffrey Epstein case. It demanded that he repay all of his comp from 2006 to 2013, more than $80 million, and the cost of any payouts in 2 lawsuits against the firm. In the one MDB case, ex-Goldman banker Roger NG said he suffers from chronic PTSD and shouldn't be sentenced to 15 years in jail today. Futures retreated while 10-year yields were just north of 4%. Dollar fell against most of all G10 peers. Oil fluctuated while gold advanced. Bank of America is redeploying investment bankers as the deal drought continues. Brian Moynihan said the firm is looking to move staffers in units with the slowdown to divisions that are more active. Silvergate lost half of its market value in early trading after saying they will wind down operations and liquidate the bank. GE expects profit margins of their aviation business to continue to expand over the longer term as independent businesses. Oracle reports post-market with the focus on whether cloud services are slowing. Investors will watch Gap to see if it's moved past last year's missteps that sparked the job cuts. 5 borrowers are considering potential investment-grade bond sales today. Underwriters said at least 4 issuers stood down. It's looking to be $3.5 billion. Or no, that's from munis. Stock ETFs are distorting short-term treasuries too. A trio of academics argued, though commonly blamed for violent share price swings, the research suggests that equity ETFs add upward pressure to yields thanks to their big liquidations in the world of mutual funds. It's a grand claim with some anecdotal evidence to support. A hedge fund manager who made 119% return short debt linked to shopping malls is betting on fresh pain in U.S. commercial property. Popo Capital manager Daniel McNamara said older offices will fail to lure back workers in post-COVID era, making them less attractive to occupiers and spurring a wave of defaults. Fed frontrunner Janice Eberly is the favorite to succeed Lael Brainerd as Fed vice chair, People Familiar said. She served as chief economist as the Treasury under Barack Obama and has interviewed with Biden's chief of staff Brainerd and Janet Yellen, though no final decision has been made. Joe Biden's budget plan calls for a 25% minimum tax on billionaires, a person Familiar said today before the release. It will also double capital gains for investments and raise corporate levies. The proposal has little chance of passing Congress, but it gives insight into the Democratic strategy ahead of budget talks later this year and platform underpinning an expected Biden re-election campaign. And then Jeffrey Gundlach said 2-year Treasury yields can go higher even after hitting the highest level since 2007. And if history is any guide, the surge above the Fed funds upper bound this week is an ominous sign for anyone looking for rate cuts in 2023. Since 1990, reductions have only come after the yield has fell below the upper bound and stayed there for at least several months. Hot dog. 10 a.m., you're going to get Fed Bar speaking on crypto. 11:30, $65 billion of 4-week bonds and $55 billion of 8-week bills. And honestly, on that note, somebody sent it to me. Some Chads are betting, or you guys are involved in the auction. We could get in on the bond auction if you want. It's kind of weird. I don't know, but we can. I think we have till 11 a.m. today. You have till 11 a.m. today if you want to buy into the 4-week bond. I kind of want to do it, but I don't know the price. I don't know how it would pay out. And all, I have an idea. I was playing with TD Ameritrade bonds. Chad inspired me. So maybe we'll go over. Do I hear $1? $1, Bob. 12 p.m. U.S. fourth quarter household change in net worth. 12:30 ECB Vucic is speaking. 1 p.m. U.S. to sell $18 billion of 30-year bonds. 6 p.m. Peru rate decision. And then Biden is going to release his budget proposal today. Earnings include Oracle, Gap, and DocuSign. And then the General Electric Investor Conference is today. Initial jobless claims rose more than expected to 211 from last week from the 190 in the prior week. Mitch McConnell was hospitalized after he tripped and fell during a private dinner at a D.C. hotel, his office said, without giving any further details. The Senate voted 81-14 to block a D.C. law that pares back penalties for some violent crimes. It marked the first time in more than 30 years Congress has nullified a local district law, a remarkable reversal for Democrats. Biden's $52 billion plan to turbocharge the chip industry may hit a hurdle. Demographics are conspiring against his ambition to create millions of jobs and working-age population shrinks. A violent assault on Chile's main airport left a security officer and suspected thief dead. A group of 12 people attempted to steal $32 million in an armored truck with cash delivered from Miami via a plane. 80 former Congress members mishandled classified documents. The UK will avoid a recession this year, but sluggish economic growth means the economy won't regain pre-pandemic levels until the final quarter of 2024. The British Chamber of Commerce said. Meanwhile, property surveyors saw flickers of life in the housing market in February as buyers and sellers have returned. German authorities searched a vessel that may have transported explosives used in an attack on the Nord Stream pipelines last year, signaling the investigation to yield more on who was behind it. The strike triggered accusations, with Russia blaming it on sabotage by the U.S., Ukraine, and Poland. Israel protests. Tens of thousands are headed for protests across the country as the government plans to curb the power of the Supreme Court. The U.S. Defense Secretary will shorten his visit, and the Chief of Army expressed alarm over a threat from reservists to withhold service. Georgia's ruling party ditched a draft law targeting foreign agents after clashes between police and protesters in Tbilisi. The measure threatened to fine or jail people who received at least 20% of their income from abroad and failed to register. UK in talks with the U.S. to limit damage from the wave of green subsidies. China's inflation slowed more than expected to 1% in February from 2.1% in January, and factory gate prices fell 1.4% in the first month, or the fifth month year-on-year declines. Malaysia's central bank kept rates at 2.75. Japan grew their economy at an annualized 0.1 in the fourth quarter from a previous period and revised from an initial reading of 0.6. The yen-funded carry trade may be back on if the Bank of Japan manages to execute adjustments to the policy without turning in a markedly more hawkish direction, according to Bank of America. When Li Qiang ascends to the job of China's premier on Saturday, he will inherit a position diminished with political stature and authority. No other office has lost as much under Xi's bid to consolidate power. China consumption bets are too optimistic, top global fund says. The cost of shipping oil is surging. Even more vessels get tied up making deliveries as resurgent Chinese demand compounds the effect of ships sailing thousands of miles. Further, due to the sanctions on Russia, about 1.2 billion barrels were on the water last week, a record for this time of year, Vortexa and Kepler said. Rising volumes have boosted freight rates to Asia. Soybeans extended gain, rising in all but one session so far this month as global supply prospects grind lower. Wheat traded near the lowest in almost 18 months. Base metals retreated. Shanghai Metals Markets expects copper output to surge about 950,000 tons in March from the last 910. Daily aluminum production may drop on power shortages. Gasoline and diesel shipments from Total Energy refineries in France were disrupted for a third day. The walkouts may continue until March 13th, and they put 630,000 barrels a day of French refining capacity at risk. Drought in key soybean growing regions in South America is set to curb output. Brazil trimmed their estimate for 2022-2023 season by 1.5 million tons. In Argentina, the Rosario Board of Trade axed their 2023 forecast by 22% for the previous month to 34.5 million. Corn estimates were also slashed. U.S. buybacks are running at a record pace this year, though just 5 firms are making up the bulk. JP Morgan strategist said Chevron, Meta, Goldman, Booking, and Salesforce account for 2/3 of the $261 billion in commitments to date. Schroders won regulatory approval to set up the first UK private asset fund targeting individuals. JD.com slid pre-market after recently revenue slightly missed on volatile Chinese online spending. Uber gained after they said they're to be considering spinning off their freight logistic business, which analysts said would be positive. Etsy dropped after it was double downgraded to underperform at Jefferies. SVB Financial fell 32% after offering $1.2 billion of common stock. Nomura slashed their entertainment budget for executives, people familiar said, as they stepped up efforts to rein in costs. Shares in China suppliers of materials for chips surged after an unsubstantiated report of impending Japanese export curbs circulated on social media. Mark Mobius said he's betting big on semiconductor shares as the U.S. and China increase investment into the sector. Citi to recalibrate investment banking headcount. JP Morgan sues Jess Staley for liability for Epstein damages. California ends $54 million Walgreen deal over abortion pill. Goldman Sachs sells bundle of affordable UK homes to PGIM. California withdraws on Walgreens contract. Malaysia Prime Minister appoints Goldman Sachs critic to lead 1MDB task force. Time to invest. Prices for Rolex, Patek, and Audemars watches appreciated on average 20% a year since mid-2018, outpacing the S&P. Boston Consulting has said the stock index average annual returns of 8% from August 2018 to 2023, less than half the pace of a basket of pre-owned watch models from the top Swiss brands. So watches have outperformed the S&P since 2018, is what they're telling you. Just no dividends. Bringing in the big bucks. Rookie traders are earning salaries as much as $400,000 straight out of school in Sydney. The city has become the Asia-Pacific hub for tech-driven trading companies at a time when the finance industry is undergoing layoffs and pay cuts. Firms including Citadel, ICM, and Optiver establishes bases and hired rapidly and plan to employ even more. A little birdie told me or not, Tiger Woods' ex-girlfriend Erica Herman wants to nullify an August NDA with the golfer. Herman used to work at the Woods Jupiter, a restaurant he backed and accompanied him at tournaments, including his victory of the Masters of 2019. Apparently, he kicked her out of his house. Man, Tiger back with the women drama. Tiger with these hoes, bro. I'm just saying, Tiger just get, Tiger, bro. It's Tiger. Game, set, match. Russian and Belarus players will be allowed to enter Wimbledon this year under strict conditions, though confirmation of the decision isn't expected until next month. The Daily Mail reported players will be expected to compete under a neutral flag and won't have to make a public declaration opposing the war in Ukraine, but could be asked to sign a code of conduct. Oh man, look at this one. On this day in history. Damn, God bless you, Bloomberg. On this day in history, in 1997, the notorious B.I.G., a.k.a. Biggie Smalls, a.k.a. Christopher Wallace, was killed in a drive-by shooting in Los Angeles at the age of 24. He's considered one of the best rappers of all times, with songs including Juicy, Hypnotize, and Big Papa. Wallace's murder has never been solved. It occurred less than a year after the murder of fellow rapper and rival Tupac Shakur. That is today. Today is Biggie Smalls Day. Wow. That's sad, man. He was only 24. I love it when you call me Big Pa. Whoa. Throw your race in the air if you a true player, because I see some rate hikes tonight, and they should be going higher. Yes, higher. Yeah, anyways. That's it, man, bud. God bless you all. Good morning. Notorious, baby. Notorious BSF. It's your day, man. Well, hopefully you don't know. Actually, not really. Just don't, because that's the day he died. You know what I'm saying? Okay, he's getting weird now. Either way, we'll see. 5 memberships by Mopar Maniac. Was that the broken horn? Hold on, please hold. Oh, we in the game, baby. Amen. God bless. God bless. So, Chattadonia, I hope you're ready. Did we not get my pre-market movers here? Where are they at? Don't worry. We still got some, but that is the news of the day. Clearly, the biggest piece of news here so far is obviously the jobless claims that came in a little hotter. I do have some pre-market movers for you. Build-A-Bear Workshop BBW rallies 15% after the stuffed animal retailer said their revenue is exceeding estimates in fourth quarter and declared a special cash dividend for shareholders. Eli Lilly shares dip 1.1 after a study showed experimental drug solanezumab failed to show slow prediction of cognitive decline for people at risk of Alzheimer's. Etsy shares dropped 5.5 after the online market operator was double downgraded at Jefferies to underperform from buy, with the broker citing the stock's premium valuation and troubling buyer trends. Exact Sciences XS is upgraded to buy from neutral at Citi, which is also downgrading Guardian Health. Shares fall 3.5%. General Electric rises 2.8 after the company said GE Aerospace should see mid to high single-digit revenue growth over the long term to generate free cash flow in line with net income. Hilton Worldwide, HLT, they edge up 1% after Barclays upgraded the hotel operator to overweight from equal weight. JD falls 3.7 after the Chinese e-commerce firm generated less than expected in first-party sales in the fourth quarter. Loan Depot sinks 7.4 after their fourth quarter revenue and loss per share misses. Methode Electronics, MEI, falls 6.3% ahead of the bell after cutting annual earnings per share forecast. MongoDB shares are down 10% after the infrastructure company gave full-year revenue forecast that missed expectations. SVB Financial falls 29% after offering $1.25 billion common stock. Tesla falls 2.2, leading fellow megacaps like Apple and Microsoft as investors weigh the prospect of rates reaccelerating. Trade Desk shares are down 3.4 after the benchmark downgraded the advertising company to sell from hold. Uber gains 2% after the ride-hailing company was said to be considering spinning off their freight logistics business, a move that analysts said would be positive for the company, with Piper Sandler saying it could eventually increase the stock's chances of being included in the S&P. Ba-da-ba-ba-bop. There it is, Chad. There it is. What time is it? Oh, it's 6:18. We got some time. So that's your pre-market news. That's your pre-market movers as well. I'm sure we're going to get a little bit more today. I think we actually have one more set of data. Where was it? Challenger Jive. No, you already got that. I guess we have household net change in the middle of the day. And then that's it. And then everyone's just going to tweak over rate hike odds. So let's see what happens. But, Chad, I love you. Follow me on Instagram at The Trading Fraternity. I'm going to go to the bathroom. Then we're going to be right back. Then we get into the plays. And then we get into the pledge. And then it's game time. And happy Friday, Junior. Let's go. Good morning. Wake your ass up.
Winds up one way.
Wake your ass up.
And that is with Congress raising the debt ceiling. No one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default. There are no rabbits to be pulled out of hats here.
President Biden preparing to reveal his budget proposal amid a looming debt ceiling standoff.
The president budget will cut the deficit by nearly $3 trillion over the next 10 years. That's nearly a $6 trillion difference between the president's budget and congressional Republicans' agenda, which would add $3 trillion to the debt.
The president expected to defy GOP calls for deeper spending cuts, proposing a series of new taxes instead targeted at large corporations and wealthy Americans. Speaker McCarthy shooting down the prospect immediately.
You could always find common ground, your willingness to do that. I have not seen his budget. I do not believe raising taxes is the answer. I've had this discussion with the president personally.
Let's get to AMH down in D.C. Morning, Anne-Marie.
Good morning, John. Well, you can think of today's budget unveiling from the Biden administration really as a wish list for the Democratic Party. These are provisions and ideas. We've heard them before. The Biden administration campaigned on them, and they also were discussed when they had control of the Senate and the House. So things you're going to hear about is raising taxes on billionaires. They want to increase taxes when it comes to capital gains. They want to go after provisions that help, say, the oil company or private equity or venture capitalists. But again, as Greg Vallier put it, this is really all aspirational. But it's important. You might think, why do it then? Because what this administration is trying to show is that they have a distinctive plan that is different from the Republicans when it comes to the fiscal health of and the future of the U.S. economy, especially
Raise the capital gains. So we're going to get that budget today. That will be interesting. Either way, I don't think people are too hyped on that. More people are focused on the data here, and the Fed will probably have a bigger effect on your finances, ladies and gentlemen. So, Chattadonia, I hope you're feeling good. I hope you're feeling blessed this morning. I hope you're amazing, man. I hope you're amazing, but we got a couple of minutes left here before the ding ding, so I need to hear from you now. You've heard from Bloomberg. Yeah, you could call them biased. Everybody got a little bit of bias, man. You know what I'm saying? But tell me where your bias is at. What's your first play of the day, Chad? Keep it serious. We don't want to bring out any tasers. We love you. God bless you, but I need that first play of the day. What do you got, Chattadonia? What are you looking at? What's the first move you doing? You for the long term. Tesla calls. Good morning, baby. Bank of America. No play today. I'm blessed. Walking on water. AXP calls. Selling my SI put. Metalong. Apple puts. UUP. Roblox. SPY puts. GE. OCEA. Tesla puts. Cash. Bill. Snap puts. SPX. Snap calls. ES short. BCAN. Watching SIBA. Apple. 0 day puts. No place today. SPY puts. SPY call. SOL long. AMD long. Buy more Tesla. Mental preparation. Buying for the long term. Tesla short after the run up. KO for dividend. Oracle calls. Iron Condors. I'm the watcher. SQQ. Tech calls. NVIDIA puts. USIO. Boeing. Crisp. Snow. VIX. Shorting. SBNY short. Call. Netflix calls. Title is perfect. SIVB shares. Rivian puts. RYCEY puts or stock. XLI put. OCA 0 days. Netflix puts. Calls on if. Being patient. SIVB shares. BCAN swing. My bias is with Tobias. Who's that? Who's Tobias? OCEA's on the high. Ulta put. Exit Microsoft. GOOG calls. Apple. GE calls. Netflix calls. Sitting on my hands. Reading Ephesians 6:123. QQQ calls if it holds. SPY credit spreads. SPY shares and Tesla shares. Holding cash. Building cash. AMD calls. Apple calls. NSC puts. SPY calls. AMD calls. Fed bar. GM Chad. Short the DAX 40. Calls on 3,000 likes. QQQ calls. Bank of America calls. Adding more BBIG. Dow calls. Credit Suisse puts. Going to work. And Google calls. Let's go. Beautiful. Beautiful. You guys are beautiful. Has anyone told you you're beautiful? At least today. I hope I'm the first one because that was beautiful, Chad. Oh, my gosh. Good morning. Good morning. So I got a couple of plays. I'm going to be watching Meta. They were going up there the last couple of days. You had that little tweak out there at close too. Going to be watching them. Still got the small shares on Netflix. MDB, I like how it moved. We traded it after hours. I'm already out of it, but that could be a big mover, and watch for any reversals or continuations. Uber, it's holding up here, but it was definitely higher yesterday, so we'll see if any of that hype comes back. Ason, Dustin, he had news that he's buying even more shares. That stock was up like 20%. And then Bank of America and banks, I'm not giving up on that and going to be watching them. Then ACAD, that's one of the biotechs with the PDUFA, I think, Sunday. So watch out for that. And then JD.com for the post-earnings play. They're already down like 3%. So we'll see if we get a little China activity in there, baby. So that's it, man. That's what we got. That's what we got. I already gave you the fun fact. We actually have a little bit of time. So let me read you this. Are you ready for this? Here's your fun fact. That the initial claims is the biggest. This is the initial jobless claims post is the biggest upside miss in a year. My thing's tweaking out. Jobless claims are always a little noisy, but this morning's data pointed towards a slight softening in the labor market conditions. Initial claims rose more than expected to 211 versus 195, while continuing claims bounced to 1.7 million, also more than expected and the highest level in over a year. In normalized terms, that's the biggest upside miss on initial claims in a little bit more than a year, and it's only the second miss of 2023. One data point is pretty slender to peg on, which to bring in a dovish hat, but given the skew in market pricing towards 50, I guess it's understandable why there is somewhat of a dovish reaction today. Yeah, SIVB offered, they did an offering of 1 billion shares. People didn't like that. They said, no, sir. No, sir. No Powell talk. We're probably going to talk about rate hike odds because this will be the day before, but I want to see how the jobs report right there or the jobless claims affected it. So we will see. We will see. But Chattadonia, ladies and gentlemen, boys and girls, we are approaching game time. It is time to fuel up the Jets. It is time to get going. But before we do anything here, man, before we try to chase a dollar, before we try to enrich ourselves, we must pay homage to a very special group of people, and I am talking about the veterans of the United States of America, ladies and gentlemen. So on behalf of the cult, everybody here, not here, we want to give a huge special shout-out, all the active servicemen, past servicemen, anybody who has served this country, even the families, man. You have all made your sacrifice. God bless you and thank you, and I encourage you all to show love and appreciation for your veterans, man, and we love you, veterans. Thank you for everything, and shout out to anybody out there helping out their local community, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the people volunteering. Where y'all at, baby? God bless you and thank you for your service. And you know what, too? We appreciate y'all, and I hope y'all appreciate everybody making society go round. Amen? Amen, baby. Let's go. God bless America. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send to the Jets! Oh, it's game time, baby. Or nah. Let's go. Oh, good morning. Good morning. Are you ready? Are you ready? Did you get the boogers out of your eyes? Oh, maybe stand up a little bit. Maybe throw a couple of air punches. Get ready. The bell is about to ring. Oh, man. I hope I see you in 7 hours. Hope I see you on the final bell, but this first bell is very important. First bell is always very important, Chattadonia. So let's go. We've already went over the plays. I think we're good to go. I think the real question is going to be how do we open up here? And then watch out for the bonds. I mean, if anything's going to flip-flop today, even though the jobs report has us up, just keep in mind the 10-year was above 4% this morning. So we were kind of tweaking out. If you want to look at it, you're higher than any point of yesterday right here, right now. But this morning, we were kind of near the lows as bond yields were climbing. So that's going to be interesting, Habibi. That will be very, very interesting. How much time? You got about a minute, 25 seconds. Is there any pressing questions? There's no data for the rest of the day. There will be one set with household change and net worth, but that's about it. Otherwise, you're not going to get anything. You're going to get one Fed speaker today, but they will be talking about crypto. So I don't know how important that will be for you. Yeah, SIVB, it was just an offering. It was a big offering, though. It was $1 billion. $1 billion. Jobless claims came in hotter than expected, which means more people filed for unemployment. More people continued claims for unemployment, and that's why we're up there. Oh, I have something on 0 days today. I forgot. But pretty much the CBOE made a comment today on 0-day options. We'll get into that a little later. We'll find out here. Tomorrow is just the jobs report in the morning. Tomorrow is actually going to be a big day. It's weird because everybody was getting nervous today this morning, and we were selling off into it, and then that data came in, and then we were able to go up there. So very, very interesting. Bill, do you buy on the first and sell on the last day? Is as long as you get the dividend there, but either way, it should be borderline equivalent. And remind me today before 11, do you guys want to bid on the 4-week bond auction? We could get in on the bond auction today. FDA updates mammography regulations. All right, 1-0. Round 1. Fight. Jobs report's bad because it's good. This one is the jobs report that you want is bad, where more people filed for unemployment, meaning the jobs market is weaker. All right, we're up 0.03 on the NASDAQ? No way. So SPY and Dow are the real winners here so far. NASDAQ is behind. It looks like real estate, discretionary, and financials. Those are the only thing down. And then I'm sure SIVB, damn, they're down 37%. They're probably getting killed by, what's it called? That's probably what's killing financials. MDB down to 206. We flipped that yesterday at like 200. I might keep that one up there. Silvergate sinks 34% at open on plan to wind down bank. GE had a lot of news this morning. Damn, they're up 4.5 now. Even Boeing is up. LMT. Amazonian. I think Tesla's the only one that's still down. Tesla was down a lot more pre-market, though. SI is liquidating, yes. Amazon's going up. Let's see. Why can't you sell SI? That I don't. You should be able to. They're not bankrupt yet. MDB. SPY's going up. Okay, we're up a quarter. Let's see where we're at with the levels. Futures are above 4,000, so that's a strong open. You would fill the gap at 3,992. Really, if we could get above 40.17, then we start to chill out a little bit. Otherwise, we will find out. SI's halted, and they might be. This is one of their biggest drops. I think they are halted. Maybe that's why you can't sell. Nope, no, they're trading. NVIDIA's on the high. That thing's not stopping. MDB still down 10%. Where's JD? So JD, bad earnings. They were down 3. Now they're down 6% in the first two candle. Yeah, SIVB is getting destroyed. 38%. I kind of want to trade it, but I'm like, dude, I don't know. How do you even gauge 37%? Dude, that's actually, what do they yield? No dividend. No dividend from the bank. Some change taking forever. NASDAQ went red here. Dow is the one benefiting the most right now. It's up 0.4. SE, Coinbase on the high. Forgot about SE yesterday. Last 2 days have been doing good. Mm-hmm. 2 minutes in, can't buy options. Okay, I bought 10 shares of SIVB. 10 shares of SIVB at 163.75. It's small. I'm just hoping, again, just like kind of like yesterday with MDB, keep it super small on a higher mover, and then we'll go from there. Baba, Boeing high. OCEA halt. That was moving a lot pre-market. Where's TAP from yesterday? That one went down. Tesla's on the high. Amazon's even going up. Redfin. SPY's hitting a new high right now, too. Next level is 40.17. I mean, pretty much you got to get through like 407, 410. But this is the line that we were dealing with post-Bostic. Remember, that's where all the momentum's at. Tesla is green now. They were down 3% early in the morning. Let's see. The Young Bill. There you go, Young Bill. Coinbase 1 point. It's weird. Coinbase is up with Silvergate down. What's the other one? MDB. Mongo's going up. It's still more expensive than where we traded it yesterday. Where's Uber? Spy's hitting another high here, slowly but surely. It's been a while. I mean, yes, the last couple of days you were selling off in the first 3 to 5 candles. So let's see how this plays out. Uber's actually trailing a lot behind the move it had yesterday. Facebook still under 190. Who was the other one? Nvidia. They've been going crazy. AMD pop. Nvidia's still up though. I mean, Nvidia has been having a stellar performance even yesterday. So if everything goes up and they lag a little bit, I would not be surprised. Energy is actually up on the day. Energy is number 1 on the day, believe it or not. And then bonds are climbing up there. Like I said, if anything's going to flip-flop today, it'll probably be bonds going down, because if bonds go down, then that means the 10 years back above 4. But as long as energy and bonds hold up, I think the market could hold a little bit. But those are going to be your sensitive spots for today. Apple's on the high. Shop is up 3. Tesla now up 0.5%. Oh, there's Google. AXP raised their dividend by 15%. I think that's why they're up there. Google only 0.3. Meta's 1.6. Oh, even Snapchat, they came. Remember, wasn't Snapchat at $12 the other day? PayPal up 3.2? No way. Yeah. PayPal is $78. Square's up 1. It's weird because like tech is number like 4 or 5 on the day. The Nasdaq is still trailing behind. The other days I feel like with smaller moves, the Nasdaq was leading. GE is running. Yeah, they had the aerospace comments. GE at 92 is crazy. I think after earnings it was like $85. SI cannot go negative. No. All it could do is go to 0 and then they dissolve. EBS. I think they were up today. Still got some work to do. Oh, and then ACAD. All right, I sold out of the SIVB. $10 a share on that one. Should have went bigger. Just grabbed $100 off of that. And then let me see. And then I bought 100 shares of ACAD. I think I'm going to go for that gamble. That one pretty much from tomorrow till Sunday, you're going to get that FDA decision. They have had some bad history, though, in the past. And I think they've done offerings. They have a drug approval coming up, and they work on a drug for pooping. And I'm a big fan of pooping, if you haven't listened before. Uber lost all the gains. Apple's holding up. Tomorrow's data. I mean, after today, you got a little bit of upside, but I do think tomorrow's data will be strong. I think estimates even went up between yesterday and today as far as the non-farms. I think the median estimate has gone up 20,000 jobs. So really what a lot of people are saying is it's probably going to come in stronger, but it's not going to come in as strong as like 500,000. Trend today, I mean, watch the bonds. I mean, if bonds and any of the other broader assets don't flip, I think you'll be good. Other than that, though, you'll have a problem because you do have good news today. That's it. The jobs report today, or the jobless claims and continuing claims, out of the last 12 releases, this has been the second one that's actually came in decent, or at least showing a labor market that's slowing down. We didn't get CPI today. All you got are jobless claims, and I was telling you yesterday, jobless claims isn't that good. But this was like you didn't get any revisions today, and it was a finally continuing claims has hit their highest point in a year. Oh, NVIDIA's coming down now. Apple just hit a high. There you go, Tesla. Yeah, Uber's negative now. That's crazy. And then I think like Hilton and a couple of travel names are doing good, but not too hot. Man's not hot. Meta, giant red, a little bit. Meta's actually doing good, though. And then Google's trailing behind, but at least Google's continuing the climb. No, Google, you have more to go, Habibi. TSM on the high, too. Yeah, ACAD is just a biotech. It's going to be risky, though. I'm not too sure. It's either going to be the weekend or randomly. And I mean, I've played them. I played ACAD like 4 years ago. And I remember I played ACAD for a PDUFA 4 years ago, and it failed. And I don't even think they've gotten anything since. So you got to just keep that in. That one's an old company. They've been around for a while. No data at 10 a.m. You're just going to get at 12 Eastern household change in net worth. 3M went up. Let's see. Ultra. GE, 52-week high. AXP selling off. They were up 3%. Bank, yeah, banks are the worst on the day again. I'm telling you, the banks have been getting clobbered. So banks are approaching the low here now, even October lows. It's weird because not all of them are the same. Like, I think JP Morgan's still at highs. There's NVIDIA. NVIDIA's only down a third. And NASDAQ is caught up here with the SPY at 0.28. On the NASDAQ, 0.33 on the SPY, 0.42 on the Dow, and small caps are negative. And then oil is still leading. Industrials number 2, then communications number 3. Coin big dump. Yeah, coin was up there 3-4%. Now they're negative. And the big crypto news is Silvergate saying they're liquidating. Google on the high again. Amazon just staying pinned. Amazon's up 1%. And then Apple, I think, is the lowest one. Apple and Google are the big tech that's not doing as good. It was Tesla earlier, but now Tesla's picking back up. Good morning, my friend. How are you? Hope you're feeling good. Roku, 4%. Yeah, Roku's up 4%. PayPal was up 4%. There's a lot of weird movers here today. Did MDB bounce? They're still holding up. Oh, where's Crowd from the other day? No. Tap, that needs to go up. WWE wants to rigged matches. XOM and Energy one more time. Bonds haven't hit a new low of the day, but they've been chilling. And like I was telling you, just from the morning, I think bonds have a pretty big roll today. So see if they actually go up there. You see V coming down. Visa, I think it all just depends on the next set of data we have. I mean, right now, if tomorrow's jobs, CPI and Powell, if they have all bullish tones, then, and it all ends up bullish, I think everything's going to keep running up here. But then vice versa, if it ends up being negative, I think everything you see that is doing good, I mean, you'll be able to get almost everything at a discount. So it just really depends on these next couple of days. There's definitely been names that have been outperforming and holding up better than others, but in this type of move in the market, it seems like everything is going to be broad-based. So it's like if jobs report, CPI and PHILO is good, I think you're going to get broad-based gains, and then vice versa. If it's all bad, you're going to get broad-based sell-off. So it doesn't really matter how good something performed, more or less. And MasterCard and Visa are both up there, and they've been running. Microsoft is on the high now. Apple is the one kind of underperforming, believe it or not. There's Tesla now. Where's NVIDIA? So everything else goes up. NVIDIA doesn't go up. Remember, things were going down. NVIDIA was going up all day yesterday. MasterCard again. A lot of those credit card companies on the high. A lot of financial services like PayPal, Square, all of those. And then the banks are getting clobbered. New high on the market now. 4,008. So this is going to be a pretty interesting test, because this is where things get good. Again, 4,007 to 4,008. This is like the range you really want to try to break out from. And then if we can, we go up to 4017. Come on, Lord Habibi. 4,008. I guess we were just here. So this is kind of where we like had the second half of the sell-off on Tuesday. But 4017, very stubborn level. You're at 4,009 right now. And then bonds are even bouncing up there too. Amazon, Google, they're all doing what they need to. ES new high. I think NVIDIA no moon because it mooned the other days. But it could come up. It's back to green. Maxen, that's the solar play from yesterday. That was up like 30%. Any more data? No data. There's household wealth. Bonds just had a pop there. Looks like they're trying to follow along with the market. Honestly, the market's outperforming bonds here by a quarter. And then Microsoft on the high. Again, all your big tech. So new high of the day, intraday for the bonds, a.k.a. yields going down. Thessalonian, now you want to play. Let's go Meta. AMAT on the high. Octa's still holding. Where's Young Zim? Probably squeezing all day. I mean, you'll get a little bit of volatility, but we'll find out. 4012, let's see how you hold 4017 now. That's another big pop here on the market. You're up 0.5% SPY. Now the NASDAQ is leading, and it was underperforming in the morning. So let's see where it goes. But 4013, geez, that candle's getting big. Okay, yalla. Slag Eagle. Oh, I forgot about that. I have those Suave shares. Write those out. Google pushing. Bank of America, I have no idea. I'm sad because I already bought some this week. I'd want to buy more, but I do think the banks, though, there's a weird mix now, especially with financial services running. Didn't realize 15,000 people filing unemployment was this bullish. So this is why Powell kept getting all of that drama yesterday or the last 2 days, because everyone's like, what are you trying to do? You want people to employ. How do you explain that to those 15,000? So there's a lot going on with it. PayPal's on the high. Energy. That's it. Bonds, energy leading. We're going to be good. And then right when bonds and energy stop, I think we'll probably cool down. But you're going towards 4017. This shit is getting pretty wild, my friends. 40, 50. I did not think we'd get here this fast. I did not think it would get up to 40. So watch at 4017. If that really rockets through there, then you're going to have your real big upside. But I'm assuming it's going to stop there. I don't think it's going to go too crazy. That's it, though. But if it breaks through there, then it might start looking like a squeeze day. But I don't know. I don't trust it. But then again, I'm very surprised here, especially off of the first, 20 minutes. 4015.6 is the high. And tech was negative and has came positive. The Suave. Even DoorDash is up. I'm surprised Uber didn't hold up there. Well, everyone's going to be excited for tomorrow. I mean, all you have today is a glimmer of hope that the jobs report comes in soft, but like we've talked about, usually the correlation between the data. I mean, here's the irony of today is that don't forget you also had bad ADP yesterday. So ADP jobs report came in hotter than expected yesterday. You had your negative reaction mixed in with whatever what Powell said, but then today you're having a slight glimmer of hope on the jobless claims, and now you see the reaction here. So it's at least the forefront of everybody's mind coming into tomorrow, but regardless, it's just holding up a decent range. And then where are we at tomorrow? That's it. 416. Oh, my gosh. 4016. So this is the level right here. Now there's a decent amount of volume on the futures. See what happens if it rejects or not. If you go through here and hold, it'll be squeezy. If not, then this might be the high of the day, and we'll dance there for like another 30 minutes until we could actually break above it. Let's see, man. I appreciate you. God bless you, my friend. Meta stayed relatively pinned. Google's still running now. Google to 95. I think, yeah, we're up on every set of shares now with Google. Very good for you, Google. Very, very good for you. Okay, so you hit right below. No, you went above 4017. So you actually went above 4017 almost by 1 point, and there's your little mini rejection. So let's see. This is going to be a dancing spot. You either dive from here or we fight with it a little bit, and then if it breaks out, that'll be very bullish. And in the short term, relax. SIVB, we already flipped that. All been scammed, yes. I mean, if you asked me yesterday, though, I wouldn't have expected that we would have gotten, the jobless claims, like the strongest in 12 months or the weakest, which is good. But at the same time, nobody's even reacted to the jobless claims for about 3 months now. So that's the interesting part, and then coming off a bad ADP yesterday. Enphase, so 2 red candles. That's your first there in like 20 minutes. Enphase is going up, and then MaxN, they were on fire yesterday. Let's see, CRM. Oh, shit, we forgot the morning poll. Oh, my gosh. Oh, my gosh. How do we do that? Okay, I got you. Don't worry. There you go, my friends. Was Bostic able to comment pause? Well, either way, I mean, Bostic, we forgot all about Bostic. And I guess the good part is that you're at the Bostic level. That's where we were at this morning. So, like, in a weird way, you gave up all of... I guess we just would have been lower if there wasn't any Bostic. So now we're, like, day 2 of Bostic. And, again, it was at the 4017. Once we got past there, we took off. So that's why I think this level is going to be big here. But we already got past it. I mean, if anything, this was Powell's comments. And then now everybody is just getting primed for the data tomorrow. And then just remember, right after tomorrow's data on Friday, within 2 days, you're going to get the CPI. Manu Sox S. NVIDIA. Is NVIDIA climbing back up? Yeah, NVIDIA is working its way up there. So watch out. Chip makers will be the second round of fuel. Bonds haven't dropped yet, and I think energy names are holding up. I think that was just a quick breather, but that's where a lot of momentum is today. Energy's number 1. Tech is now number 2. And the NASDAQ is leading, which it was started the morning off as a lagger. But that's 7 points off from 40.17. So you've already sold back to 40.10 here now. First decent-sized drop. There's all those orders still chilling there above 40.17. Credit Suisse delayed their annual report today, so they should still be down. Maybe that's why the banks are down, but I think financials, all of them individually are doing bad, and then SIVB, that just does not help out the industry there. Apple, Amazon holding, Shopify going up. Bonds are hitting a new high before the market. They have a little bit to catch up here, or a little bit to catch up with the indexes. The 0-day news, I have it here in a little bit. Give it like, it hasn't even been 30 minutes. And I don't know, do you guys want to bid on the bond auction? I was looking into it. I don't think we're going to make that much money off of it because you don't know the price you're going to get the bond at. But we could do a live bond auction through TD Ameritrade if y'all want to buy some 4-week Treasury bills. You don't do it. It's the easiest thing in the world. Like you don't like. It's not like you're gonna watch like a horse race. It's not like, okay, we got the action looking for the 3 month. Can I get a 3.5? 3.5. We got a 3.5. Looking for a 3.75. We got the 3.75. Looking for a quarter more. We're getting up to 4 here. Looking for a 4.25. 4.25 to the man in the back there. We're going to take the 4.25 interest rate. Looking for a 4 week at 4.5. Do we got a 4.5? 4.5. 4.5. Oh, to Jerome Powell right there. We're going to give him the 4.5. Can we get a 4.7? Looking for a 4.7. 4.7 to 5. 5. 5. 5. 5. 5. 5. 5. 5. We got the 5. We're going to take the 5 in the 4 week bill. Going once, going twice. Sold to the retail trader on TD Ameritrade. Thank you. Thank you. Thank you. That's not how it is. It's just literally you run the numbers and then you put in how much you want and then you press buy and then that's it. We have till 11 a.m. So we only have an hour actually. We literally only have 1 hour to do it. The cutoff is 11 a.m. Eastern. I'm pretty sure we lose money though. So here's the problem is that if we do the bond, we could do a 4 week bill. It's supposed to pay 4.75, but I don't think you're going to get 4.75. I think you're going to get that cut in half. There's no coupon. And then depending on the price you pay, you're going to end up breaking even. And then there's a $25 fee for any bond trade. So it's pretty wild. SIVB. Yeah, we flipped out of that one earlier here. Yeah, GE, aerospace, what they said with their aerospace division, it was very bull. GE doesn't move like that either. But then there's another, I'll show you. We'll get into it here in a second. Let's just see if we get above 417 and it turns into Squeeze City. Today should be easy for a little bit. But you could go over, you could even buy other people's bonds. So, you could go on TD Ameritrade. There's some bonds that people bought in October that were 6-month bonds or 4-month bonds that mature next month. And you could just buy somebody's bond and take the payment there. I'm down to try it, though. I don't think we're either going to make a little bit amount of money or lose a little bit. The devil is in the details with the fees and the price you pay. And then you could go for the auction, but you don't know what price it's going to go in at. Damn, NVIDIA's back on the high. Spotify's on the high. GM offers buyout to majority of salaried workers. Wasn't GM up this morning? GM's selling off. And Ford is selling off. Even Tesla now. So watch out. You hit your 40.17. This is our best place we want here, but 40.17 is the level. I mean, if it does slip from here, you could go down to 40.05, but then anything below there, that little uptrend is neutered, but we'll see if it does the swings of yesterday. Just don't forget, yesterday was a constant, chopping block of back and forth all the way up until like 12 Eastern, 1 Eastern. Tesla's starting to slip there. A lot of the auto companies, Ford and GM, are at the lows too. GE just gave positive like guidance towards their aerospace unit, positive comments. Man, Apple's still at the high, so everything looks like it's still running. Low ticker got a little bit of juice, but you look to be balanced out here on the short term. Intel's on the high now. Alibaba's moving. JD's still down 6%. Broadcom 640. Just crazy. AMD. I know right when I sell AMD, it just goes another $6. Sad. That green turned red here, so we're getting back there. This is a first red candle or decent size red on the bonds. I haven't looked at the dollar. Dollar's down quite a bit, but dollar has been climbing up here as well too. Dollar bonds, everything seems to be going hand in hand. GE again. Dude, they're up 7% on GE. That's a slow mover, which is wild. 8% now. My goodness. Dude, that's crazy. I remember I covered that short. That's actually insane. GE is unstoppable. Brian Hum, baby. Blessing the Chad. God bless you, my friend. God bless you. Fed Bar Live. Isn't it on crypto? I don't know. We could listen. I'm going to go pee real quick. I'll go pee and then we'll see if we get into... That's not Fed Bar, is it?
Good morning, good afternoon, good evening. My name is Anna Gelpern, and I am a fellow here at the Peterson Institute and a law professor at Georgetown.
She looked like the girl from Fight Club.
It is my huge pleasure and privilege to welcome Michael Barr.
So he's just talking about crypto, so I don't think any monetary policy
Peterson and
will be brought up.
Talk about a very timely, cutting-edge topic of broad interest.
Yeah, she looked like Marla.
This is the start of an exciting spring program.
Okay, I'm going to go pee real quick. Follow me on Instagram, at the Trading Fraternity. I love you.
So is the global economy. On March 23rd and 24th, here at Peterson, we'll be convening economists and policymakers, some of whom are surely economists, to discuss the evolution of the international monetary system and the dollar's dominance, and the role of exchange rate regimes in shaping the world economy. Then on March 28th, we will release the Institute's Global Economic Prospects. This is our semi-annual outlook for the US and global economies. So if you want to know what the prospects are, tune in on March 28th. And then, of course, April 10th, 14th, after the cherry blossoms, in the lead up to the IMF World Bank spring meetings, PIE will host our annual Macro Week with central bankers and finance officials from around the world. But first, we have central bankers and finance officials right here, right now. Michael Barr took office as vice chair for supervision last summer in July. He's also a member of the Board of Governors, of course, and prior to his appointment to the board, he wasn't just vice chair, he had 3 chairs by my count. He was the Joan and Sanford Weill Dean of the Gerald R. Ford School of Public Policy at the University of Michigan, the Frank Murphy Collegiate Professor of Public Policy, also at Michigan, and the Roy F. and Jean Humphrey Profit Professor of Law at the University of Michigan Law School. He founded the Center of Finance, Law, and Policy and the International Transactions Clinic and Detroit Neighborhood Entrepreneurs.
We should have just played Bloomberg. That was awful. So I'm back here. So I got a couple of things for you. Hopefully you guys have liked the video. I don't know if you made use of that. You could be getting ads today here too. I'm still not too sure if it does come on here, but it's good. We do get blessed by the ads though, so they do actually pay me for it. So at least that's the only silver lining. So thank you for supporting. But in the meantime, you could use the like button on your monitor, and that will help you out a lot. But here it is. CBOE is downplaying the danger from zero-day options after trading boom. Liquidity attracts market makers to use 0 days, CBO official says. Contracts see broad usage from hedging to directional wagers. So CBOE is downplaying the loud warnings from some corners of Wall Street about the craze for zero-day options. It poses a systemic threat for the broader stock market. The Chicago-based firm helped fuel the popularity of the contracts that expire in less than 24 hours, known as 0 days. After it expanded offerings of the derivatives to cover each weekday. From his vantage point, the CBOE's global head of product innovation, Rob Hawking, says large institutions are likely driving the demand for a diverse range of strategies, from protecting portfolios to speculative wagers. In fact, dealers see the very source of potential instability caused by options boom are also using the contract to help hedge their books. Per Hawking, the large sanguine tone consists with JP Morgan, who sees a Volmageddon 2.0, a risk similar to the volatility implosion in 2018. I don't know if I've seen anything conclusive yet that is pointing to particular risk to the degree that JP is calling out, Hawking said in an interview. The biggest thing to point out is that same-day option trading is not new, and more importantly, daily expiries are not a new contract that we listed. By CBOE's tally, zero-day derivatives have made up more than 40% of the S&P option volume this year. That's double from around 20% in the first quarter of 2022. At first blush, more than 80% of zero-day option orders came through retail platforms, but Hawking, who joined the CBOE in 2018, according to his profile on LinkedIn, says that it doesn't mean individual investors are actually driving the flows. That's because institutions, with the help of algorithmic models, can slice a big transaction into small chunks and make it mimic trading patterns akin to small fry traders. So, in fact, more than half of the zero-day contracts are utilized as part of a complex strategy that deploys layers of puts and calls rather than single-leg trades usually favored by retail investors, and to the fact that their so-called strike prices are more clustered than those among retail-driven meme stocks, it's a sign to Hawking that professional traders are likely fueling the growth. In conversation with clients, Hawking notes a wide range of use cases of buying contracts to hedge portfolios or make directional bets. Its development may come as a surprise for strategists at JP Morgan that see the risk of these market makers blowing things up. The Volmageddon episode is one of the more famous instances of dynamics in derivatives markets bleeding into underlying assets. The main culprits were exchange-traded volatility products designed to pay investors the inverse of equal equity volatility. And yeah, so pretty much CBOE saying it's not a big deal. And then all of the big hedge funds are putting in small orders, and all of the option flow you see could be an algorithm designed to mimic trades. Fun fact. So there you go. But CBOE says keep paying us. Oh, switch gears. I don't see anything. Galapinski, no risk of Polish core. So you just made a move up and then had the... That's a big one, man. Dude, that's 10 points almost in a candle. That's 7 points. Real quick. Yeah, you rejected that hard. And then Tesla is coming down here. They've lost most of their gains from the morning. A lot of other things are holding. It brought you back up to VWAP, and VWAP looks very, very choppy today. I don't even know if it's actually accurate. I think VWAP's probably like right here. 4,009. You're above 4,000 on the futures, even on the market. Remember, 4,007 to 4,010 is a very stubborn point. Vice Chair of Supervision. Are you ready for this? So, let's see. I think we could go over it. I'll have my eyes on the news just in case. But, Chad, you want to see the bonds now. So, let me keep up. Let's see if we could do this small. I think we could keep that up here. High, low. You get everything now. We get everything, right? Yeah, perfect. So, you go to trade. Then you go to bonds and CDs. Right? Come on, load it. And it brings up this little thing. So there's two things you could do. Oh, I might need the bigger screen. But you go, let's say, U.S. Treasuries. And then boom, this little sidebar. So this one here is how you could buy other people's bonds. So like, and then Y to M, that's the yield to maturity. That's pretty much saying how much you're going to get paid. And then here's when it matures. Let me find one for you. So this would be like buying somebody else's bond. Let me find a shorter term one. That's May. Was it April? I think I saw these yesterday. Yeah. So here's how this one works. So you see this one, this bond right here, I think it was issued in December. So this was somebody bought a December bond in December that yields in April. So that's like what, a 4 or 5 month bond, probably a 26-week bond. So it's telling you make 4.56, and the whole idea here is you're just buying it at a cheaper price. So that's all. This would be like buying somebody else's bond off of them, and you're buying it at a discount. So like pretty much you're going to spend $1,000. So like let's say I bought 2 of them, right? It's going to cost you for 2 of them $19.88, but then you get yielded the face value of $1,000 a pop. So pretty much you're buying it at a discount, and then you're going to get $2,000 back. You end up making $12 because then you pay $19.88, and then on maturity date of April 25th, you're going to get back $12. So that's how you could buy someone else's bonds. So now you go to new issues and go to treasury auctions and click view. Here is, can we not do it? Oh, no. I thought I still have time. Oh, I can't do it anymore. That's stupid. Well, short-term treasury bills don't pay coupons. So if it's below 1 year, they usually don't pay a coupon. You're just buying it at a discount, and your yield is coming through the price you bought it at. Oh, bro, I was looking at this last night. Damn, so you can't even buy it. So now the auction date is over. Boo. Oh, I could have put in an order yesterday. You put in your order. You would have just came over here, and then you press like, damn, there's nothing else I could even do. Those are the only ones that we could click on. But yeah, well, I guess if we wanted to buy a bond, we could buy somebody else's. And then SPY has been coming down here last 4 or 5 minutes. You had your first rejection, sold off, mini bounce to 40.15. Now you're back to 4,005. There is no volume. Actually, Fed plans to continue to publish guidance on crypto. Fed is enhancing crypto supervision capabilities, says Fed Bar. But I doubt that's why we're moving. It's weird. Even the bonds held up. Is that energy that moved? Even your big tech didn't move down like that. Energy did chill out a little bit. I thought you had till 11 a.m. to buy it. But yeah, that's how you could buy the bond. So we could go buy another bond if you want. But I thought we were going to be able to get in on the auction today. Well, that kind of ruined it. So I think it depends. New auctions, you pay the fee. I don't think if we bought somebody else's bond. So like if you do this one right here, I don't think you end up paying for it. The fees. I don't know. We could try it. I've never done it before. That's why I kind of want to try it out. I have a general idea of the logic of it, but I do want to see how it plays out. They're going short here. Well, short into the green. Not bad. NASDAQ still up 0.5. Yeah, there's just a $25 flat fee for Treasury. So whether you buy $1 million or $10, you pay a $25 flat fee, and then there's no like commission fees on the auctions. That's on the Treasury auctions. Other than that, though, it's like the other ones, I don't think you pay a fee. So if you buy somebody else's bond like through here, I do not think you are paying the fee. Is this the one? This one says 4.45. See, this one's a 1-year bond. Jeez. So this one actually pays a coupon too, but then you only get the remaining coupons on it, and then you get the money back, and then you buy it at a discount. So that's how you're making money. So even on the ones that don't even have a coupon, so like that's the one where you're getting paid on the date, and then at maturity you get all your money back. Whereas the short-term like treasuries, the 3 months, you're just getting all of your money back, and if you buy it cheaper, that's where you make your money. You know, maturity just automatically gives it back to you. I don't know. Should we do it? Do you guys want to buy a bond or no? Should we put a test? $2,000, see what happens? Or should we wait? A ticker from last night, there was Bill, G Bill, and a couple of others. Run it. Okay, we're going to buy a used bond. So we have to go, that's the difference. We're not buying a brand new bond. We're buying a used bond. We're going to like CarMax of bonds. I don't want one with I want to try to get a treasury or like a short-term T-bill. I don't want to play with the ones with what's it called, that were like issued a year ago. So let's see. These are the highest yields. So here's the yield. This is pretty much saying yield at maturity, how much you'll get back. And then this is the when it matures, when you get your money back. So I'm going to look for like an April 27th date. And then right below VWAP right now, NASDAQ's up 0.5, SPY is up 0.3, and then Dow is up 0.2. And then Fed bar is speaking. That's a year. That's like 3 years. Jeez. This one is April 21st. That's the date it's dated? Oh, that's a year ago. See, I like these ones right here. I think this one could be the one. This one, short-term treasury bill. It was issued in what's it called? It was issued December 20th, so end of the year. Somebody bought this, and then this is a 4-month bond, and we could just buy it off somebody. Let's see, 2,000. Calculate total cost. So we're gonna make $10. So then if there's a $20 fee, we lose money, but I don't think there is a fee. You're coming back down here now too. I think it's better to buy bigger amounts, but let's see. See, so this is it by quantity. I want 2, dog. I want 2. Wait, I gotta buy 5? What do you mean 5? Oh, boo. The minimum on that is 5. Damn, they playing us like that. Oh, whoa. Big Chicle. So that's it. You just broke the gains from earlier. Bondlandia might have to wait right now. Bro, those are 2 big candles. This first candle here, but you've gone 414 to 4,000 here in just about 10 minutes. Oh, but Bradley Oh, no. Oh, it doesn't matter, Chattadonia. The Peach saved the day yesterday. Let's see what it does today. Oh, Peach Nation, get your ass up. Oh, man, I was going to say that candle was looking scary until we got that peach. That is crazy, Habibi. That is crazy. God bless you, Bradley Frizzle. Oh, thank you, my friend, and good morning. VWAP didn't drop too much on there. Dollar had a pop. Bonds had a drop there, too. And then the peach has arrived. I got you, man. Thank you. Thank you. We needed that. Amen. Amen. Peachy. It's peachy. That was scary. Damn, they really want you buying a lot of these. Damn, so I think you need to buy a lot more when they're used. And the minimum much higher. I feel like I'm walking into the casino and I see them like $50 a bet. I'm like, that's too much for me, sir. That's too much for me. What's this, $250 minimum? No. And then little bounce off that candle. Again, no news on that. Yeah, I think you actually need to get a 5 of the minimum. Yeah. Well, no, I thought we were going to be able to get in the auction, but it ended up going away. Well, Chad, I don't have even my other money's tied up there in our other cash balance systems. Sad day. Sad day. I thought we were going to get in it. I thought we were even going to get into the new issue, bro. Yeah. No dice. Yeah, so that's what we were doing. We were looking at the secondary market there for the bonds, but you have to, the minimums are a lot higher. So like on a normal treasury, I think your minimum is 1, but there, you know, if you wanted to buy someone's bonds, they're asking that you buy in larger quantity, and they'll sell it to you at a discount. Close but no cigar. Maybe next time. Maybe next time. Speaking of which, though, let's see where the long term's at. Damn, Twitch, y'all talking shit about me? Damn, that's cold, bro. Fuck y'all. How dare you? I look over there, I'm like, I'm just going through bonds now. They talking smack because I don't trade options. I taught y'all options, and that's how y'all come at me? Damn. Fuck y'all. Get real estate. Kids table. Very disappointed, kids table. Very disappointed. That's it. Y'all talk mad hype when y'all hit a couple plays, huh? Y'all, and then y'all real, yeah, why you trade a fucking future? Okay? Trade a fucking future. Stop fucking with me. You stood up. Thank you. We needed somebody. That's it. I don't get why the option people don't trade futures. That's it. I don't get it. It's okay. I am old. It's been, 15 years? You guys stay alive for 15 years. You'll find your way. Where is Bill? Look, we have 0.1% on Bill, Habibi. This is great. You've been paper trading the future. Is good. It's good. It's crazy. It's a very crazy experience. Very, very crazy experience. I'm sad I can't buy a bond now. I wanted to try it. Just put crush. That was a wild move already. We are going to see. Don't hate us, Josh. We're not the ones who ask you what bill is every day. That is true. That is true. That's it. Yeah. But that's what happens. You got bears. Bears are more arrogant. At least the people who ask to repeat, they're kind of more nicer. That's all. Just Twitch chat. You guys do it like once every 6 months. Y'all start talking smack and acting all like, what's up, baby? What's up? Yeah, what's up? I'm like, shut the fuck up. Good morning. It's okay. It's okay. Then the YouTube gets more racist during any political speech. The Twitch chat don't say any racial comments. The YouTube get mad racist. All of a sudden, I'm like, what the hell is happening? It's actually wild. It's wild. So it's a good mix. It's a good mix. It's a very good balance. It's fast mouse. It's because of your short joke yesterday. I was looking out for you, man. Express your disappointment of not being able to buy the bonds in the Arnold voice. I'm telling you, I'm trying to get the yard. They told me quickly get to the yard, and I went to the website before the auction is ever taken off, and I was not able to purchase. It is very disappointing. I have no idea what to do next. How am I going to get a fixed income return? How will I get to the yard? I need to go right away. This is bullshit. I don't get why they're trying to stop me. Go if you can. If you have any time, get your bond. Get to the yard quickly. Hurry. It's not worth any delay. That's how I feel. Get down. Get down. Quickly, get down. Explain your disappointment in Dave Goggins' voice. You gotta run. And if you run and you get tired, it's because you're a bitch. Get harder. No, I don't know. I don't know Dave. I like David Goggins, honestly. David Goggins gets me hyped. Like, if you listen to David Goggins and you don't want to go run 20 miles and, like, punch yourself, not even somebody else, you just want to punch yourself. Like, if that doesn't happen to you, like, you might be missing, like, something in your head. You know what I'm saying? Like, you might be missing out on just natural, like, human, like, something's missing up there. If you listen to David Goggins and don't want to go rowing a boat all of a sudden and carry your own boat, I don't know what's wrong with you, but something's wrong. Yeah, straight up, bro. I don't even have a canoe. I ended up at Dick's Sporting Goods. I listened to two. J-Alt sent me 2 David Goggins things. I listened to one of them. By the end of the first one, I ran to a Dick's Sporting Goods and I bought a canoe that I was carrying home. And then it wore off, and I was like, what am I going to do with this? And I had to call an Uber. And I was like, thank God y'all have Uber Freight. I need help with this boat. I listened to one of them. J-Alt sent me, and there's another one I haven't been able to. 0-day option, smiley face. You know they're not your friend, right? They're not your friend. I'm sorry if you're mad at me. It's okay. I get over things pretty quickly. That's like the beauty of being a stock trader and like semi-bipolar. I can forget things really quick, and I'm like, okay. So it's good, man. We're good. That's all. But you come at me, I don't know. I might, you know what I'm saying? If you come at me now, you can't. Don't be like those people like, I'm sorry. And then you come at me again, and then I'm like, well, you just apologize. I'm like, this is really confusing. Which one? It's the one Jay Alt. I don't remember the title of it. Can't hurt me and never finished. Just here so I don't get fined. Amen. Tesla off the bottom. I bought ACAD because I have an old video. So like I have a video from like 7 years ago, maybe 5 years ago, talking about ACAD. I remember ACAD from like IPO. And like it was like 2016. 2015. And I remember they failed, and then they kind of went back and forth. But I like their drug. It's for irritable bowel syndrome and pooping. And it actually has, like, if it actually gets approval and does good, they'll do good. And they are already making money off some of their other drugs. So they have a PDUFA coming up. I've just known the company for a while. I'm not really, swinging for the fences too hard. But I think I think it's decent. I think it's decent risk to reward. Natural gas storage, negative 84 versus negative 81. Did I even have a reaction? First time I haven't seen Boiler, the other one, move away. All weeks. Are you getting into making a website? That's good. Oh, yeah, it's ad time. 7:30. It's good, though. It's good. We do find out we are getting compensated for said ads. The schedule, it's like automatic mid-rolls. So that's what it is. They just do it automatically now. But it's good. I think we'll keep it on for another day. We'll get the totality of the data, or the total data, and then we'll see. It's a very humbling experience. I have this urge to close the stream and play free casino. Are you like 70 years old in retirement? Just go buy a bond, bro. I can't judge you. I was just shopping for bonds. You know what I'm saying? Oh, that was the ad that popped up? Damn, they know you. That means you susceptible. They know you susceptible, bro. Yeah, ACAD. Nothing to do with poop. Really? I like their IBS drug. Let's see. Yeah, that's for brain cancer. Well, that's kind of stupid. Well, I hope it helps people, but I want the poop drug. ARGX. Yeah, it is for rep. But March 12th is the expected date. Yeah, bro, what is up with this? It was the biggest real estate transaction of my life. It would have never been possible without this community. Love you, fair. God bless you, Kevin. That's actually really, really hype. Oh, nah. Oh, man, bro. It feels like just yesterday you were like, I'm going to get back into the real estate. And then now you telling me that, bro? Let's go. God bless, bro. Keep the momentum. It's just the start. And speaking of momentum, you have now bounced back up to the 4,010, which is right before you had this little 3 sell-off candles at a time. End phase is on the high. Delta Airlines as well, too. Man, that's hype. Kevin Wells, baby. Good work. I know you hitting them TLTs, too, huh? Yeah. Ooh. ACAD. Dude, it is for brain cancer. I really thought it was the poop drug. That's kind of sketchy. Again, I haven't looked at the company in 4 years, but how did you go from poop drugs to brain cancer? That'd be crazy. Maybe they're related. No, and then they have another thing with Parkinson's now. Bro, what have they done? They actually sell Nuplazid. Gotta start from the bottom. Interesting. Well, I'm down for the PDUFA, but definitely changes my attitude a little bit. SWBI. I'm getting some data on it. I'm not seeing signs just yet. Next March 12th PDUFA for trofinetide for Rett, which management is confident regarding timely approval. We adjust our model to reflect 2023 guidance for Nuplazid and OPEX, the latter of which came in below estimate. And they expect timely. So JP Morgan or Needham, they expect approval for it. Wow. Thank you to whoever posted that. It's really not the poop drug. I'm very shocked by it. So, yeah, it's for Rett syndrome. People look, they seem pretty confident on it, and they're already making money off of their Parkinson's drug. Been a couple of years, man. And King Trow, welcome, man. Welcome. God bless you. So, that was the peach, right? I think the peach was on one of these. No, this was the peach candle. So, we've actually gone up 11 points since the peach, after dropping 15 points in 15 minutes. So it's kind of doing what we did yesterday, but I mean, I would hate for us to not break out to another level. If that's the first high of the day and you go down from here, it's going to be a wild run. It's going to be a wild run. The beam, what was the other one? SVBI or SIVB. Damn, they got clapped here again. So that's one that down 39%. Meta is still up 1%. Google's still up 1% too. Apple was at the highs. AMD and Nvidia are still insane. Say 15 points in 15 minutes with Peach Geico. Okay, what's up, man? How's it going? I'm chilling, man. How you living? God bless you. And good morning and welcome, man. So you got the long term, you got that 10%. We've been talking a lot about cash management and budgets here, but I hope we don't do it. Brainerd College names Laura Rosenberry as next president. Barnard. Oh, wait, no, I thought that was the new lady to replace Leo Brainerd. I read Barnard as Brainerd. And then now we're near the highs of the day here. Very, very wild swings. Nothing has really changed. The only thing you had in the morning was the data. The jobs data, which was the first sign of jobs weakness that you've had out of 12, the second one out of 12 non-farms, or excuse me, jobless claims. Fed futures odds dropped by 2%. Edgar! Oh, my man. He's doing it. Bro, this is like some crazy, like, Edgar. Let's go, bro. Edgar strikes again. Edgar, I love you, man. God bless you, bro. Yeah, let me tell you, Edgar, I want to tell you how to think. Whether the tank tops are good to wear in the sun. I was going to tell you I was thankful. I'm thankful for what you've done here, Edgar. We need more people like Edgar out there. You know, you're making a difference, making a stand. Making a difference. Make it dentante. Dentante is what it's called. But thank you, man. Thank you. Edgar Donia. He has his own province. Come on. I like Edgar more than the Amtrak. Telling you, Edgar's better than the Amtrak. This guy, he's consistent. He's beautiful. I don't know. I'd stop. Edgar's done at least like 253 more than that number of the people membership. It's crazy. Oracle has earnings today, I believe. Theodore. Oh, what a name. Theodore Barry. I feel like you're a classic artist. Theodore Barry, bro. That's a name right there. You could sell clothing to books. Theodore, welcome. SWBI yields 4%. You know what else it yields? Death. Yeah. No, I'm kidding, but not really. But do you know that story? Do you know the lady, or what's her name? What's that one gun called? Oh, why am I blanking on it? It's a classic gun. Not the, well, pretty much the lady built a massive mansion in L.A. I've told you this story. Well, it's not Ruger. I think it's Ruger. I think it's the Ruger. Winchester, yes. The Winchester mansion. Winchester. So the guy who founded the Winchester, who created the Winchester gun, his wife got all the money, right? But then she built like this weird unfinished house in LA or in California, and it's the weirdest house ever, and people suspect that she's been haunted since she was so sad that the invention of the gun that her husband made led to so much death during the war. She like believed in ghosts and like she was crazy, like, cause like in the house is built. It's in San Jose. I thought it was LA, but it's somewhere in Cali. And then like go look it up. Go search the Winchester mansion. You'll see what I'm talking about. It's wild. It's wild. So no 4% yield for me. I'm gonna go crazy. Mm-hmm. Do you have to disclose possible haunting? I don't think so. You just have to disclose any deaths within 12 months. Should I go there today? If you want to get creeped out, if you're into that, you know, some people like that. Amazon's starting to move up now. So let's see if we get next leg here. Weird sell-off now, weird bounce. Now we are chilling. 40.11. Oh, wow. Is that the first level? No way. No. 47. Where did that trade go? Yeah, right here. There's another level here, but 40.20. So let's see what happens. You might get a decent pop or a decent sell-off, but you do have some orders lined up here. Yeah, PayPal's like 3% today. Google is been breaking out. Remember, this is the biggest run-up on Google since 2019. Biggest weekly run-up from 88 to 95. Which seems kind of small, but then you have NVIDIA over there just shooting up 70%. $40.53. That's a long way. I think that'd be great. I would love to close out of that one. Bonds are poor. Bonds and dollar, but specifically the bonds. And then energy is now below tech here. I think that'll be the travesty of the day, is if energy sells off, banks stay down, and then bonds sell off, I think any momentum will be sucked down the drain. But we'll see. Friday, Junior. I think market is bullish. I mean, think about it. You have jobs data tomorrow, and this is your first time. What's it called? You have jobs data tomorrow, and this is your first, or your only set of data that's jobs related right before the event, and it came in with more of a positive attitude than not. So I think you got people reacting that way. But that's the only reason. We needed this, kind of. On PHILO bond. I think that's one of them. Isn't that one of the cash management ones? Yeah, this one's floating rate. As long as it kind of looks like that, I think you're good. And just look into kind of how it pays out. But this one just floated rates. So I think your rates could change a little bit more. You could either get a little bit more or a little bit less. But I don't think PHILO's bad. As long as you get your stability. That's like the number one thing with picking any of these assets is making sure if you're getting into a cash equivalent that it actually like has stability. Because there's a lot of other ones. I think like, again, S-Junk. This one's a high yield bond ETF. But you notice, you know, this chart moves with the stock market more or less. So that's where, as long as it does that little like weird pattern, you're good to go. And then we still got to figure out, it's either, I'm pretty sure you could sell the day before, but either way you get the money. So it's like you're either going to have your equity. If you could sell before, like again, I think the T+2, you should be able to sell out on the ex-dividend day, and then the market, it shouldn't reset, and then you're good to go. But even if it does, you still should be getting a monthly dividend yield that would be equivalent to the price that it's moved. So it's like right now, like we've already made, I think that's how much you'll get. So it's like Bill, we've already made $12, so like $22, right? Or $12, double that up, you'll be at $24, you know, the rest of the month here. I think you'll get the same amount on dividend. So you either get the equity or it should be able to pay out. If we can double dip, it'll be good, but that is the part that I have not executed on yet. So we go down on tomorrow's jobs data. It'll be, which will be wrong in the fact it's smoothed out and too rosy. Is that numbers coming out tomorrow? I'm not following. If tomorrow comes in and the jobs are good and there's a lot of job gains, we're going down. And Fed future odds are going to rocket. If jobs come in lower and we see less jobs were added, even slightly above expectations, that would be positive for the market. And the Fed future odds may chill out. So now what people are looking at here is just like, that's why even today, people are asking themselves, how strong is the jobs market? The jobs market factors into inflation. The job market, people start thinking, how is that going to affect the Fed? So that's really what we're looking at. DXCM, I don't see news, but I'll check. Nothing coming in like immediately. I think yesterday, Dexcom on Abbott News, a buying opportunity, says Jeffries. Lunar on the high. The expected jobs number is now 240, I think, which has been raised. And I still see 225, but I think there's a different consensus that has it at 240. And last jobs was 500,000. So that's where, so coming into tomorrow, what people are expecting is that tomorrow's jobs data, it's going to come in, people are expecting it to be hot, and people are expecting it to be like a lot of jobs, but they're not expecting 500,000. So pretty much people are seeing that it's going to be hotter than last time. Or it's not going to be as hot as last time, but hotter than expected. But then if it's a hot number like last time, the market will get destroyed. Because like I'm telling you, people are thinking that the number will be high, but not that high. So if you do another 500,000 print, I think we'll be at 380 real quick. No, I don't know. Maybe you'll be at like 390. I think you'll instantly go down to 390 tomorrow if that's the case. But if it comes in at like 250, 300,000, I think that would actually be a positive reaction. And then people are also going to look at the overall unemployment rate. Bear. Well, I'm glad I wasn't the only person saying it. I think J.P. Morgan or Goldman said the same exact thing, is that if we get if jobs and CPI is bad and Powell, we're going to 380 minimum. That's what I said on the watch list. And then J.P. Morgan or Goldman, they put out an article shortly thereafter saying the same thing pretty much. Some people are even saying 3,600 or a new low. So a lot is riding on these next couple of days, even tomorrow. Tomorrow, especially CPI, because CPI has a different set of factors. You know, one's inflation, one's jobs, but there's a lot riding on this. I will be live early tomorrow. Yeah. We will be live on that. We will be here early for the non-farms. I will wake up early. Hopefully I could get an early poop in. Why what? Just because I think why there's so much writing on it is because of how the markets move this year. That's it. It's just like you've seen it. You've lived through it. This is what I was telling y'all. Just don't forget what you've gone through, but you've been living through it right now. That's it. You went from October lows. You had that little weird Thanksgiving to December, weird sell-off at the last Fed meeting. You stayed pinned. All of a sudden, the calendar changed. Then everybody just started saying no landing. And then we started getting 3-4 months of data coming down. Everyone's like, maybe it is looking good. Maybe it is the time. And then the bonds were like, boom, the Fed's going to pivot. And then they're like, no, the Fed's not going to pivot. And it's going to raise the rates, but we're going to take the market higher. And everyone's feeling good. Then Powell came in. He was ultra dovish, and it was looking good. And then it all just faded out of nowhere. And then the data started coming in hot again. So now it's just like, we've gone through a lot in the last 3 to 5 months, if you really, really look at it. So it's just like, if now the next sets of data shows nothing in the last 6 months has changed and the jobs are still really strong, inflation is coming back up again, and now the Fed has already hiked rates more in 3 months than everybody in the whole world was expecting the Fed would do in the whole year, then you're gonna have a massive repricing. Even now, just to say the least, I mean, I'll tell you this right now. Guess what, mother effers? How many of you remember this chart? This one's a beautiful chart. You know what's beautiful about it is that this shit is still diverged to the max. Do you see this? The SPY and the bonds? Yeah, that hasn't changed. And now you remember when I was just telling you it's only been 9 days? That was up here. So it's been like another 9 to 10 days after that, maybe a little longer, and you still have this. So this data is going to allow, and take a look. If the data comes in bad and we converge, you're going down. But also, too, though, if that data comes in good, please don't get it twisted. I don't know. I started with the bear case, which I think the bears could earn it if the data is there, but rightly so. To the vice versa of this whole discussion, if any of that data comes in hot, what do you think is going to happen? Or if the data comes in cool, the market could rip up. The bonds can cool off a little bit, and then that's what will get the bonds calming down, and then you'll be able to watch the market continue round 2 all the way until June, and then we could possibly rally until summer, or just June, summer, or is that August? I don't know. But maybe June, you could buy time till June, and there you go. My prediction is I think it's going to come in hot. I don't know. I was just saying, I said 500,000 yesterday just in the sense of I feel like if it's going to come in hot, it's going to come in hot. But I think it's going to be hot. I don't know how to put a number on it. And I said 500 because the numbers don't mean anything because they revise it. Now, granted, I will tell you that. Do you realize they didn't do any revisions to the jobless claims today? So this is not only was this the first or the second jobless claims beat this year, meaning that jobless claims came in hotter than expected. That's only happened 2 of the last 12, but this was the first time they didn't revise it. But we were talking yesterday, and I was saying, the number could come in as high as it wants to because they're just going to revise it anyways, but I'm expecting a slightly hotter report. And that's about it. I don't really know how to I don't know how to predict it there, and I don't even think you can predict it. And right now the skew, the range between jobs, I mean the lowest is 100 and the highest is 340 on the estimates. The Fed funds rate came down like 4 or 5% today, but it's still pricing in 75%. So, and in the meantime, in talking about all this, that little bounce there from the low, this doesn't look pretty, man. If this can't hold up here, I would like to see a new high, but you went to the 40.10, stopped out at 40.13, now you're at 409. Just watch any break of like 407, 406. We did squeeze on the hot non-farms last time, but then it eventually, as more data compiled, it started to hit the markets. It was really, we rallied on hot non-farms, and then the CPI came in a week later, and then bad CPI. Then everybody was like, oh shit, CPI's high, jobs are high, and then more and more data just kept snowballing. So that's a big flush all the way to 4,006. That's not looking pretty. See if you get any bid support. It's 18 million in an hour and a half. Volume is low. Volume is low, my friends. Volume is low. Apple, Chicle. Etsy had that rally. Apple kind of. Apple's doing decent. Yen breaking out. Yeah, yen is getting clobbered. All right, we're rolling there with it, and the bonds are dropping too, though. But like I told you, if bonds are hitting a new low right now, so we are coming down there. That was part of your support today, because if bonds keep going up from here, they're going to be back at 4% on the 10-year. Yeah, you're at 3.967. But I think today we were at 4. So where is it? I think. You get to 4 at like 94, 94.80 on IEF. Bombay. Welcome, man. And you just graduate? I like the cap. I like the cap. So someone could have 3 jobs that would show up on the numbers, but if the same person is fired from all 3 jobs, it would only count as 1 unemployment. Yes. And only if they filed for unemployment. Which is it's a very interesting dynamic too. That's like the freakonomics of the jobs report, is that do you realize not everybody files for unemployment? So it's like, and then even the process to getting it, the time it takes to process unemployment, like that's just all real world like effect of it. That doesn't there, but technically you could only have 1 unemployed person per person, but that same person could have multiple jobs. So bonds are still holding, but if they do keep going, bonds could drop a little bit more. They could drop like 50 cents here. They'd have to really, really flip. How do we think about it? It makes sense, but it seems like it's easy to use whatever way they want to. That's why people like go over the data in so many ways. That's why they look at service sector jobs. They look at part-time jobs, salary jobs, and that says a lot more. But that's, unfortunately, it's just diving into the data to really spot the difference. Because, when it's all said and done, that situation does exist, but it's not as if that is the predominant situation. So out of, 500,000 jobs being added in a quarter, I don't know if more than 10% of those people have multiple jobs. I think we might even be able to get data on that. But for the most part, it's not like a big portion of people mentioned on non-farms payrolls are people working 3 jobs, although it does happen. Do stock traders count as unemployed? Only if you file for unemployment benefits. That's the thing. There's people out there, you got to realize there's people out there who may have lost a job a month ago and they may not have ever filed for unemployment. And if they were looking for a job and something else happened, so it's a very tricky system when you really think about how it actually comes to life. 4,002 now. Damn, this sucks. So you're coming back down to 4,000. You've already, I mean, kind of no respect on it today. You dropped through it, then you came right back up. I mean, if you hit another low here, this downtrend is going to be violent and just very big swings. To swing that much, hit a new low, this chart will be pointing down after the open. But if you could rise up from here, that could start to look good, and then we build up from there. Yeah, that's where labor participation force comes into play. Exactly. And those are going to be big too. We can't forget about that. Labor participation and unemployment rate tomorrow will be it. Taiwan president to speak in New York City on March 30th. Athletic Greens, that's good, man. That means you getting fit. You looking at fitness videos, man. It's good. Honestly, bro, like I even learned something. Like it's crazy. I don't know if I should tell. All right, I'll tell you. So like I feel bad. I don't know why I'm ashamed, but like I shouldn't be ashamed. But I'm not that ashamed where I'm gonna tell you to the point, you know. But it's like, dude, I keep watching these workout videos, man. Like that's it. I'm not gonna lie to you, bro. The amount of dudes I watch working out on Instagram is unreal, or TikTok. So it's okay, but don't worry about, like, I just discovered that the back of your leg is like a bicep. I saw some dude attach a weight to his foot and then curl like his hamstring like it was a weight, and it looked like his little leg looked like a damn bicep. And I didn't even, now my legs, though, I worked out legs yesterday, and I feel amazing because now I'm like, I don't know. I'm picturing my leg muscle like a bicep, and I'm flexing it. It's so weird. It's so weird. I was tripping out. So it's good. I don't know. There's a lot of good stuff there. They call it the femoris. Dude, it's like a bicep. Your leg has biceps. I didn't know that. And now I'm like using my legs like there's a bicep. So now I move it different. It's so crazy. It's so crazy. If you trade in this range, it's possible, but I think you had a little bit more bullish impulse. But sadly, I mean, it's doing what we did yesterday just without Powell. That's the only thing I'm worried about. See, pumping. I don't know, man. I found way too many workouts off of Instagram and TikTok. And that's it. It's good. I joined on that note. With that, Miss Chantel, she was like, I like that you watch workout videos and you're not afraid to tell us the amount of workout videos you watch. I'm a member now. Thank you. Amen. Yeah, it's good though. I'm gonna start doing legs now. Honestly, I've made a new commitment. All right, you're flushing here. That's below 4,000 now. That's not a good sign. More volumes coming in here to the downside. You're still up on everything. Small caps are down 0.5%. Banks are still the worst on the day. Interest sensitive is going down again. Staples, real estate materials, and tech is number one with energy number two. So not only have we given up bonds, we've also given up energy, like I was telling you earlier. Yeah. Oil ETFs are going negative now. And then bonds are hitting a new low, climbing back towards 4. That's just, like I was saying it an hour ago, that's the only momentum killer you're going to get. And it sure enough is here. I forgot even China too. BAC play is getting clobbered. But I'm cool with that one. That was down $1,500, $3 a share. That was actually wild, but I like Bank of America. I do think the banks are I just think they're going to have a delayed reaction, but they are definitely getting individually murdered beyond doubt right now. So even like JP Morgan too. JP Morgan just gave up all the yearly gains. I've been doing the hip flexor stretches, yeah. Now I'm like working out legs. I did two leg days in the last like 4 days, and I've never felt like this in my life. It's amazing. I don't know how to describe it. It's game time. That's it. A whole new world, bro. A whole new world. It's burpee time. I'm on the pre-workout. I got you, man. 30 minutes. 30 minutes. You could do legs every day. You need to calm down, sir. You need to calm down. Okay, you like this stock market. You could go down every day. It's like, calm down. Let's get a relief rally or something, you know? Let's just calm it down. Dude, this chart is hideous. Bro, these are wicked moves. I guess at 20 points, you're dancing within these ranges. I think it just gets bad. If it's already looking bad. If you set a new low, you'll go to 3996. If you break that, though, that won't be pretty. Then the gap is at 3992. Intel's on the high. HPO or Hippo. HIPO, Hippo Holdings, 9% down. They just flushed right there. Nano Dimensions rises as ISS supports Murchison's proposal. Financials, I think it's something being caused with the bonds. I think maybe they're probably going to have to adjust it, and maybe they can't make as much as they raise deposit rates and all of that, but I do think ultimately they are going to benefit from it. I think Bank of America could still drop a decent amount more. I think all of them can. Bank of America kind of led. I think Bank of America could go down to $29. So I think $2 more. $2 more on Bank of America. Then you hit another low, but I think it's still pretty low for them. And I know their earnings were they were slightly worse, but they did better than some of the other ones. They were like mediocre in terms of their earnings. Lunar's going up there. That's been a random runner the last couple of days. Amazonian, they're coming down. Apollonian, SPY's dropping. Nvidia's negative again, but barely. Yeah, Goldman was a little weaker. JP Morgan was the strongest one. JP Morgan had the best earnings in the last 12 months out of any of the banks. So we'll see if they could actually hold up. But they've given up their yearly gains here too. I think Dow is, or yesterday it briefly went red on the year. So there it is, new low on the day. This is a hideous setup now. So watch 3996. If we break out of this range, it's just going to, it's better to kind of cuck and hold this up. Otherwise, you break here, you're really going to probably fill the gap, and then we're going to be stuck in yesterday's zone. Yeah, the low ticker is, that's it, 30-second, 1 minute, 5 minute, all low. All low, all gassing. The bank, dude, I can't believe, the bank selling off like this is like wild. This has been every single day for this week, down 2 to 3% every day. Where's Bobo? Boeing barely down. Lockheed. $1. Bonds are trying to get a bounce, but if bonds go negative, you're going to be at 4%. And then dollar was down a quarter. Now it's only down 50. Dollar still has a little bit of room, but if that goes, everything we said we didn't want to happen here for upside is not happening. Oil's selling off, bond yields are coming back up, and now the dollar too. You're just not really where you want to be right now. Unless it flips. Surprisingly, we're still green. And NASDAQ is now doubled up on the SPY and the Dow. And SIVB came down. They're down 40% on that offering. Yeah, they plummeted. They took steps to bolster financial positioning. Santa Clarita Company sank 41%, their biggest decline since 1998. The slump in shares to their lowest level of May 2020. They announced a stock offering, sold substantially all of the available securities in their portfolio, and updated their forecasts for the year to include a sharper decline in net income. While we view these actions combined with weaker guidance as a clear negative, we do not believe SIVB is in a liquidity crisis, especially following the significant proceeds. But they cut the price target to 200 to 250 from 250. The firm said it sold 21 billion of securities from their portfolio with a plan to reinvest the proceeds, which will result in an after-tax loss of 1.8 billion for the first quarter. They also announced the offering for 1.25 billion of common stock and 500 million of securities that represent convertible preferred shares. That's actually crazy. Wait, why? Did SIVB, did they do crypto? Bro, did y'all hear what I just read? That thing's wild, actually. They literally just said they sold $21 billion of securities and then did an offering for $2 billion total. That's very wild. And then they lowered their net income, and then they said they're still gonna lose money after cutting all of that. Even after selling those assets and everything, they're still gonna lose money and cut their net income guidance for the year. This is SIVB. We played it. I flipped it here in the morning because I'm looking at it. I'm like, damn, no, this thing looks like a discount, but like you're literally at almost a 5-year low, 2020 lows here on that, but they've been around for a while, but so is Silvergate. But now they're just dying. They were up at 720 at one point. No, it's based in California. Silicon Valley Bank. The bank is a commercial bank that serves emerging growth and middle market growth opportunities. They're focusing on technology and life sciences, and they operate throughout Silicon Valley. They provide asset management. They have 21 billion in assets and holds 189 billion in deposits. And then they just sold 21 billion dollars of securities today. So that's like 10. They sold 10% of their assets, but I don't know when this was updated. Seems like they do like a lot of biotech funding. And then watch out here for the low. What do we have? Rising rates have hammered the values of the bank's bond holdings. That's what I could see, but with all the banks right now. But still, I'm trying to. SIVB is like, bro, that's like a wicked piece of news to get right now. That's why I'm like, is this related to the crypto stuff or what? I don't see what's it called listed as one of their clients. Silverbank. Or Silverbank. Saudi Arabia seeks U.S. security pledges. Wall Street Journal. One more push. Well, we got 15 minutes, then Euro close. and you're right at the level. Some respect to the 39.96. You're back above 4,000 now, but a quick rejection above here, that won't be good. But you've dealt with 4,000. It's not like the market's too, like yesterday, you couldn't get to 4,000 for the life of you. The TikTok bill, they announced it, but we have no updates on it. And technically speaking, it doesn't mention TikTok. It's just a broader explanation of the other ones. Or a broader explanation of what they could do with any sort of social media company. I don't know. I just saw that headline for security pledges. Man, 8-week bills came out. I'm mad I didn't get in on it. We're getting 8-week bill numbers right now. SIV involved with taking in private? I don't know, actually. Banks lose when companies like Carvana go bust. Indeed. It depends if they hold it, but usually they make money initially, like off of the funding fees. But definitely. But even right now, I think even with all the banks, I think all the bonds could be blowing up a lot of people here. As the yields keep going higher and higher and higher, your bond, if you have to write down your valuations on there, you're probably getting killed. I mean, we were just looking at it. I mean, like I was showing you with the bonds, do you guys get what happens with like the bond market? It's kind of interesting. It's this is like bond 101 of how you're making money sometimes. But like it's like straight up, people bought bonds at a different time, and if they want money, they're willing to sell them right now at a lower price, at a discount. So that's how you know it's like that's where you're getting your money from pretty much. So like take a look. So it's like just imagine like this. Let's get like this is a great one, I think. We'll just click the first one here. But like this bond was issued in 2021. So somebody bought this bond in 2021, but they're willing to sell it now $5 cheaper. That's actually a great yield right there. See, your price of the bond is $95, but every bond is worth $100. Does that make sense? So it's like that's how people, not only does this one pays out and you're getting paid out a coupon on it, so you get like a little mini dividend, but even then at the face value, somebody is guaranteed to get back $1,000 per bond, or let's say $100, and you're buying them for $100 at a time, or $95 at a time. So that's where the discount is. They're like, okay, we bought this bond yielding 2% 2 years ago, but we're willing to sell it for less than what we paid so we could get money right now. So this is a theory here I could definitely get behind as to why the banks are getting clobbered now. Because as the bond yields keep running up here, depending on what they're holding there, you know, they have bonds at lower yields. You're going to have to write down those valuations. I'm not going to keep Zim for too long, but I'm definitely going to write it out here for a little bit. So you get the difference in price and coupon on the yield if it pays a coupon. So like the treasuries, like the short-term 3-month treasury bills, like those don't have a coupon. You just get your money back. And like even the government, the government even sells them at a discount. But like let's say you buy one of those, all you're doing is you're buying it cheaper from somebody, and then it matures in a month, 2 months, wherever. And then if they sell it to you at a discount, you're just going to get the full value back. It's like buying a coupon. I'm using coupon like a grocery coupon. And it's like buying a coupon for $100, but then selling it to some guy for $90 and being like, hey, I'll sell you this $100 voucher for $90, and you could use this voucher in 30 days to get the $100. I want my $90 right now. So it's kind of like being the bookie. It's like buying somebody's bet. You know how sometimes you have a sports bet and they'll make an offer for you? That's literally what it is. So if you buy the bond at a discount, even if it doesn't pay a coupon, you still walk away with the yield because if it matures in a month and you get it 5% cheaper, then you just got a discount on it. Or selling food stamps, yeah. Yeah, 10 minutes, you're near the lows of the day, but you're still green. I mean, we're definitely still up from pre-market. Pre-market was ugly. So the jobs report, this is kind of where you're holding, but you start to break here, you kind of eliminate some of the uptrend. Banks, I mean, it's what we're talking about now. I think banks, because I thought the banks would be benefiting more off higher rates from customers, but I think we might be getting to the point if people are forecasting 6-7% rates and higher, maybe the banks are losing money on their bonds. It's the only thing I could think of. Otherwise, but something's happening with it. Bank stocks have been totally demolished over the last week. You're getting paid for providing liquidity, pretty much. And then if it's guaranteed and backed by the government and it's a short duration, there's really no risk. It just doesn't help, though. A lot of bad. I mean, Silvergate is bad for the banks, and now SIVB. Huge reversal on CRM. Zim, like I said, I'm going to try to flip that or before the earnings. But I'm not holding that one for the long term on Zim. Let me see. I'm going to see if I get some more info on the bank stuff now. SIVB. I know we still have that up there. Made a flip on it, but still pretty wild. No one's even saying anything about the banks even here. Latest updates were just inflows to cash and then raising CD rates. That was the only thing. And then people reacting to the earnings from a couple months ago. Good info on the last night's watch list. Oh, God bless, man. I hope it helps. We've talked about it a lot, and at the same time, I'm excited the world we live in now. That's why, I'm saying, we should play around with the bonds. We should go look at, cash management, make sure your brokerage is paying you, but it's not going to last forever. Trust me. I'm just telling you, though, this is going to be it's a weird era that we live in where you're getting higher than a good dividend yield to own nothing. So I don't know. I feel like that's some world economic shit right there. You know what I'm saying? I'm gonna own nothing. What do you mean I'm gonna own nothing? And I get 4% interest rates. All right, whatever. I'll take it. You pray for me? Thank you, my friend. I needed that. Always. Yeah, it makes a lot of sense. And it's a good amount. You got to realize at 5% yield, you make all of your money back in 20 years. Now, I get it. There's some 20-year-old who just listened to me say that. It's like, why the fuck would I want all my money back in 20 years? I can make that in 20 minutes. AMC to the moon. It's like, chill the fuck out, bro. Okay? I get what I understand, but I'm just saying without having a risk of losing anything. So, you know what I'm saying? We're at the very least, it's crazy. You can drip the cash. You could. That's a strategy with bonds. That's what the Fed does. If you don't know, the Fed rolls them over. So what you could do is that you could roll over your coupon payments, and you could roll over at maturity too, and just take all the money you made. And then, so let's say you made 5% the first year. You could take all of that money, and then take the additional 5% and then go put that into another bond. And then you could keep doing that. You could do that 12 months at a time if you wanted to on the 12-month yield. So you can drip it in its own little way. It's just no equity potential. You don't really own anything. You own your dollar, and it's a promise to repay you. But it's not like you are walking away with equity, and that could change in value like a company. Yeah, it's been 40 years since bonds were this favorable. Exactly. So it's just like, it's really good if you could be productive. And like I said, the best part about it is that some of you already with your brokerages, you're already ready to go. It's not like you even need to do anything crazy. Fed rate monitor went up a little bit. And holding 4,000 still here, but just watch if this goes any lower. It's weird. It's not even like holding for it. Yeah, it's just right there. Like you've bounced up and down above and below 4,000 like 7 different times today. Okay, 4 minutes till euro close, coming into the low. See, look at this. Is someone's bond from 2016. This is a 7-year bond that matures in April, and they're willing to sell it now. These are all old bonds. Bro, it sucks that the minimum on all of these is like 5. Would higher bond rates lower business spending? It should. I mean, it'll make it more expensive to do stuff. And then also, like, the base logic we were talking about even with the video yesterday is like, and we had this talk the other day, is very simple, is that you have when bonds are like this, it just people now rationally make a decision to put their money in other places. So, like, in a weird way, especially if you have a business that is not depending on your growth rate, some people, it may make sense. If you can't grow your business 5-6%, you might just buy a bond, right? Again, investors, if you're worried about the risk to make 5, 10, 20%, you might just go and settle with 5% there too. So it does change spending and investment habits. All right, we're going a little lower. 4,000 now, 3,995. So watch here. This is another key level. This is a new low of the day. I think SIVB it's either connected to Silvergate or that'll be your first like mini crack in the banking system for now. 3,996. There's a lot of bid support here. And there's 1 minute till euro close, so get ready. And then futures are below 4,000 now. How can you lose buying someone else's bond? If you buy it at a premium, so sometimes you could pay more. You could end up paying $101 for every $100 of value you just lost, and then obviously the fees as well. You gain it back in the coupon rate if there's a coupon. So that's the thing. Not every bond pays. The short-term bonds don't have a coupon. They don't have any sort of monthly or quarterly or annual payment that they give in the form up until maturity. So like that's it. Oh, so if it's a short-term, less than 12-month bond, you only make money by buying it at a discount. That's it. Otherwise, you're not going to. The goal is to buy it cheaper, get your maturity, and then it goes up in value, or you get the full value back and you bought it at a discount. Ad blast. It's good. Just take a second. It's humbling. Enjoy it. Every 30 minutes you get to reflect on all of the available opportunities you have. Maybe something they want to throw you an advertisement for, but it's humbling. You see what I'm saying? It's every 30 minutes. It's very, very good. You get to just be humbled by it, and it's like, wow, wow, this is great. And then you did your service then. Yeah, Euro close. Done now. You didn't break that level here. So there was a lot of bid orders. I mean, I think futures are back to 4,000. No, they just hit 4,000 and came back down again. Aye. And so far, since hitting, I'm surprised we even hit 40.17 today. Blizzy B, you've been working, turned into a lurker. We still love you, man. We still love you. Hope you're doing good. Shout out to long term. Microsoft ChatGPT. GPT is now available in Azure OpenAI service. So Microsoft AI news right now. And then 8-week bills draw 4.82 allotted at high. Damn, I was supposed to get in it. No. The 8-week bond, 4.82 allotted at high, 60%. What's the price now? I want to see. It was 3.9. So some sold for 4.65 to 4.8. So over 2 months, you get 4%. Depends on what price you buy it at, but it seems like you're really just going to be getting 2 months of that 4.8. So it's like 4.8 divided by 12. And then you're going to get so you're pretty much getting 1% in a month, I would say. But it all depends on the price you get allotted at. So that's the part that I'm looking at. I don't know how they operate it there. And then it's still I've ran calculators. Some say you're making a lot more, some say a little less, but it all depends on the price that you pay for the bond. And then none of them have coupons. So on the short-term treasury, that's it. But with bigger money, it works out very, very good. Taking over a lease on the bond, yeah, pretty much. The downtrend is still firmly in play. It's only been 4 minutes here since Euro close. And there it is. You're still below 4,000. You hit it real quickly. SPY is back to 3,996. The yen is recovered a little bit. So Euro close, the yen is liking it. So that's kind of a good sign. I mean, let's see if the bonds come back up. Like I said, bonds and energy today, they have their own little breakdown. And energy's still number 2. Energy and tech are actually matched up. We don't have covered calls and puts for all the stocks we invested in, no. We did a couple of covered calls in the long term recently. Like, where is it? We did Airbnb. We got 40% on that covered call. Our Redfin covered calls came back a little bit, but we're down. And then Uber covered calls. And I thought we did one more. We were going to do some on Abby Vine's Snapchat. But lately on the first rally, just how we rallied this year, I really wanted covered calls because we went up so much so fast. It seemed like all of the premiums were really, really juiced. If I was going to long or short SPY in which direction, which way would you go? If I didn't have anything, I wouldn't do anything. I would wait until at least tomorrow. Otherwise, I would go both ways. I just don't think I don't think anybody could confidently say what's going to happen. And sadly, we're just going to be responding to outdated data. That's just going to lead you into another set of outdated data. But I don't even think it's, I don't think anybody has any idea where we're either going to be 5% higher or 5% lower by next Tuesday or next Wednesday. Rita, do you love me? I can't believe Rita's even still holding. This is what, week number 2? Tesla, I mean, I like it. I grabbed shares there a little higher, but now all of a sudden the articles are coming back out again. The Haynes, we never did Haynes covered calls. Buyers, no, they were, you at least had a decent amount of data, but other than that, I mean, I think today was low volume, and then we're in the middle of, what's it called, of getting ready for the data. I'm getting ready for exciting tomorrow. I have Tesla. I have 100 shares to the long side. I'm down on them, though. I only grabbed them a couple days ago, and then boom, the 2 days. And then another new low. New low is creeping right now. And the video is still fighting. Everything started to chill out. I think it's the bonds. I think the bonds and energy now. And we're kind of just fading some of that momentum. Because we were really low, though, pre-market. That's the problem. So, like, in a weird way, today's holding a pretty wide range. But now you're getting to the first candles following the jobs release. I mean, we were holding up very nice from after that. I think it is the banks, SIVB, and then everybody else, and now more bond issues. And then if the bonds do come back above 4%, like we were talking about the other day when we were negative, the bonds weren't even at 4. This morning they were. Yellen to appear at Senate Finance Committee budget hearing on March 16th. Triton to buy additional 8.9% of Caverian shares. I have no idea who that is. All foreign. Yeah, healthcare is actually in the green by a quarter. Banks, materials, and real estate are the worst on the day. Banks are down 2%, materials are down 0.94, and real estate's down 0.4. $3,991. All right. Looks like it's fill the gap moment now. 3,991. You're breaking a little bit lower. 3,996. 4,000. No respect. It's kind of holding it there, but You're closer to filling the gap than not. But then the last 2 days, I think we've gotten within what, a point or two of filling any gaps, and then it bounces or reverses. Let's get the flush. Sideways better than down. And, I mean, if it just shows one of those days where your little bullish impulse, if it gets faded, I mean, that was kind of the theme of yesterday, too. You know, Powell's little if comment. It was looking nice for a little bit and you were working, but none of it's holding. This, like, negative, ominous pressure of the 75 basis points and everything. It's just kind of hanging on the market. I was very surprised we even went up to 40.17. I think that's actually wild. And that's what I'm saying. If you could hold this, it could kind of stop some of that downtrend from there. But overall, it does seem like it's hard to be a bull right now, especially with the uncertainty as far as tomorrow. But, you know, you're going to get that very easily. After tomorrow's data, that'll clear up everything on either direction until Tuesday. The GATX. I think I'm going to close the GATX. I remember that one. $28 gain on that. Keep it very, very small. Next month ES are 40 ahead. I need to look at the NQ. Yeah, they are. They've been 40 ahead. I'm not worried about that. I'm worried about the spread. Oh, you can kind of roll right now. They're all within 1 point. I might do that. Yeah. Okay. What is it? NQM23. Okay, I closed the NQ and I'm going to try to roll it over. Oh, shit. Is it not going to let me? That's going to be annoying. Yep. Oh. I think I'll have to close the ES, but I don't know if that'll give me the cash instantly. No, I was going to try to roll over the NQ. It said it had enough in the beginning, but now I think the NVIDIA play, because that's 30,000. Why do they do this to me? We have something that's killing it. Why don't you select roll? That's the long term. I think it's the NVIDIA play. That and the win too. I shouldn't be getting an ad right now. Can you close? I could. I think that's weird. I mean, it's the same 17,000, but it's not giving. I have way more cash than that though. I know the ES took up 30, and then the Nvidia though. I think that's what it is. It's either Nvidia, and then the win. That was surprisingly more expensive. All right. I think we'll get rid of Nvidia. Oh, and the Tesla too. I forgot about that. Yeah, that's another 32. Or that's 10. Yeah, bro. I didn't realize Nvidia is expensive. I guess what 100 shares is how much? 24 grand. But then they charge you way more on the interest for shorting. Okay. Microsoft popping. Okay, I'm going to close out the Nvidia at a 600 loss, unfortunately. But if that doesn't fix it, then we have a bigger problem. Yeah, it was the Nvidia. Scammers. Okay. So there's our new NQ. 1244. We got to make 23,000 back on that. But yeah. Yeah, now your Nvidia puts will do good. I got you, bro. I didn't realize it was that big. So pretty much it costs this double the buying power of one NQ for 100 shares short. It's very expensive to short Nvidia. I didn't realize that. So the same, I don't know if you saw it, the buying power effect was literally double this. So we rolled over for NASDAQ. I'm going to hold the ES for a little longer before trying to do any type of rollover. But now we're at least at a decent price. Still a quarter. So if you roll over them in Q now, nothing changed. It's a higher price. So it's good if you're shorting, bad if you're long in a weird way. But for the most part, they always keep their 30, 40 point gap. And then right now, just remember, I've been looking at this the last couple of days. And it's been, the spreads were like 3 points. So the spread was like a couple of $100. So that's where it's like now all of a sudden today, shout out to Chad who brought it up. They were like, you should roll over. And I just looked. And now it's actually like it's a quarter spread, which is exactly what you want. So now they're starting to get liquid, meaning people are rolling over now. I think even yesterday we saw big volume on it, but people are starting to do that. How's you? Thank you, Tristan. You can wait too. You don't have to really roll over right now, but I do think you can get a little bit ahead of it now, save you the time and energy. Otherwise, tomorrow will be another good time to roll over. So I'm not going to roll, like the ES needs a rollover too, even though this is a shorter term trade, but I'm not going to do that one until after the jobs report or even after CPI. Yeah, there's 8 days left. You could push it all the way up to like a couple of days. No, Rita, we just have to roll over the contract so we don't get exercised, and we haven't been exercised. So in that case, what's that contract worth? Contract's only worth $1,700. So now we could actually make some more money. 18, 19, 21, 22. If we get 2,200, we'll get all of the premium back here as well. But we have 8 more days on. I'll wait on Rita as well too. Or we could just take or you could take 4,000 profit net on Rita and call it a day. Oh wait, I'll push that for the next couple of days. Jobs report tomorrow, yes. Tomorrow morning. I like Ulta, but don't they have earnings coming up? I like Ulta a lot. That's one of those names that I wish we got more for. Yeah, 4K net on that is not bad at all. Do they already have the earnings, or is it on the way? Because the thing, I'm even looking at Rita there too. You got to pay to hold that one. I thought the margin would be free because of the covered call, but it's still a good profit. Otherwise, you could roll over to the 105s and then you hold, and then if anything, you'll make $2,000. But you could get paid a lot up front right now. ZNs, I do need ZNs. That one will wait till after jobs. I think it's still even lower from the rollover, which is crazy. It's around there. I don't have any Oracle plays, but Oracle can move a lot. We've seen a lot of crazy earnings out of Oracle. I think people are expecting them to not do as bad as expected. There's Tessie, Googly. Where is Google? I think I might take the Google now. We got back up to the first average. Down. Take 470. Okay, I sold the Google shares 94.70. That was like 500 profit. Well, Andrew's coming in it tomorrow, so I like anything negative that could go green. I did it earlier in this week, and I paid for it though, because if I try to sell out of anything that's green and I don't want it to go negative, that's where we'll run into that problem. You just saw Snapchat. Am I okay? Yeah. Is it weird that I post on Snapchat? It makes me feel younger. Silva popping. I didn't sell. I'm keeping the banks. I like the banks a lot. And then we're coming back down 3995 here. And then I sell out of Google. You get big volume now. I thought it was about to rocket. Why do you like the banks? Because they have done good in high interest. And now I think they're getting a little bit of the growing pains with it. But for the most part, they should be good. I still have the covered call on Rita. You have 4,000 net, even including the covered call. So even if you take the loss on the covered call, you're walking away with 3,900 net. Or we could roll over the covered call, open up like maybe get like $2,200 for a 105, get another 2,000 of upside, but then we'd have to hold it till then. No, I think City is down. It was up all the way up until like yesterday or something. Yeah, now it's down $1 a share. I did get rid of NVIDIA. I had to, because I needed to do a rollover, and then it was that play was fucking up my margin for the futures. It cost as much as a damn NQ, which is weird because it doesn't move the same way. I actually think I could get right back into it if I wanted to, but with half the amount. The premium Rito, it has stayed up. Buy a call low. Well, my call's already in the money, so it's kind of hard to ghetto spread it. But really, the best strategy would either be rolling over or just taking your money. So it's like, as if I roll over and the stock drops 50%, we'll lose half of these gains. We'll be up 2,500, but then you'll make like another 1,000 off the contract. It's pretty much going to keep the same gain. So I'm going to just wait here a couple of days. Let's see. And then we'll be able to go from there. You'll have 8 days till we have to decide. And then depending on where the premiums are at, depending on the stock, I think we make our decision and see what makes the most sense. Making early long-term purchases. You could do it. We've done it before, but usually if you could kind of control it and stick to the plan, the time will make you wait. You know, usually like if it looks like a good idea today, I mean, you'll really know in 2 weeks. Because that's what, next deposit, 2-3 weeks. XLF skewing all factors, including momentum, implied correlation. It is. I think, and that's with SIVB too. Because SIVB is down 40% right now. And that's wild. For there to be a big bank down that much, and then Silvergate announcing all of like that. You had two really bad sets of news here in that world. Let's see. President Biden proposes $6.9 trillion budget for full year 2024. There's a lot. There's a big budget. $6.9 trillion. Wait, for 2024. That's next year. Is that Boeing? DraftKings, AT&T. Those are all on the low right now. Too much, Bob. Boeing is selling to back to 205, man. Boeing's been all over the place. Oh, ad time. That's good. Biden budget would add 17 trillion in deficit over the decade. Higher than his son. I don't think you know his son that well then, sir. I'm going to take the under on that one. I'm just saying, I think you still short by a while, bro, honestly. Like if I was still like in my party days, I would look up to him. You know what I'm saying? Like for like that dude, that's what I don't get. Like you guys don't realize Hunter be doing all the shit you joke about. All that shit you be saying in the chat. I'm like, what are you going to do with your tax return? You guys are like, I'm going to go buy hookers. It's like, no, you're not. But he is. 100%. 100%. He actually living that life, bro. I respect him for that. You know, he don't talk it. Like, he really about that life, man. The gap has been filled. It has been filled. So, yeah, I don't think he's I don't know. I don't think the budget is that high, is what I'm trying to tell. That's the moral of the story, comparatively. Go easy on the big guy. You don't want me to go missing. It's not even negative. I'm not even saying it negatively. Said I respect the guy. It's all out of just funny positivity. And the fact is, you're allowed to talk about it now because it's not like it's not true. Like, you know, that's the thing. I think everybody just came to, like, we're at the acceptance phase of it. Like, you know what I'm saying? Like, the son of the president is a crackhead, and that's okay. It's America. There's nothing. Oh, see, I don't know. Maybe they don't like that budget. Hold on here. I think that's the dollar rocketing up here. Only news is the budget, but you filled the gap and you are flushing right now. I would say I would pin it to the budget. That's the only thing that could be causing this. But, I mean, it's been a very long time since you've reacted to political news in the market. So I would even say the budget's kind of a reach to say that's what's happening here. But I'm sure you're going to get people talking about it. And then tax increase over the decade, 3% increase in defense spending to 886, 27 billion for NASA. He wants more money for the FAA after travel disruptions. IBD exiting Uber and Crocs. Oh, come on, Uber. You don't need that now. That'll be bad for Uber, even Crocs too. Increasing dollars. Not good for the deficit, but then increasing the deficit might make people think we're going to have more aggressive Fed, and then that could lead to the dollar, and then it's one thing where if we mess up every other currency, the dollar gets stronger. It's kind of it's a very wild paradox. Like that, if you didn't notice, when inflation was going up, the dollar was going up because the inflation was so bad, and then it spread globally that it was hurting all the other countries. So in a weird way, the dollar became the safest, strongest, even though it was printed and shoved down every single country's budget. That's crazy. Even the rollover from here to here, that's $1,000 on the rollover. That's wild. I feel sad letting go of my NVIDIA, though. I wanted that. We're going to default. Well, that's what I was worried about looking at some of the budget. It kind of highlights there's a very stark difference between what Biden wants to do and kind of how things are, that in a weird way, the more crazy the budget is, the more likely we have tension on the debt ceiling issue. That is kind of part of the work. Because, again, they're saying they want to raise taxes. They want to do a lot of stuff that I'm sure Republicans are going to disagree on. The video is, I got you guys. Don't worry. It's worth it. I'd rather have my rollover than not, though. So I guess it's kind of worth it. Mm-hmm. Yeah, well, we'll see. I'm not really worried about the debt ceiling, but I mean, it seems like the Biden administration's coming in hard, and that could add to some of the drama. And then they did it to fucking Obama in 2011, and it was first term as well. So, especially, I don't know who's running for Democratic. Is there a Democratic candidate? Because that's the thing. If they do want to fuck up Biden, they might push it. Because that's what they did to Obama. And then they were like, screw you, Obama. You want to get reelected? You have to agree with somebody. And then that's why on the second time, when Obama didn't run for reelection off his second term, the debt ceiling didn't work. Because Obama's like, well, I'm not being reelected. So, you better do what the fuck I say. Otherwise, I ain't doing shit. Thank you. And people, I know what you're feeling. And that's okay. But does not change what we must work on. So I don't know. What are you talking about here? I heard a budget. And I said, who needs a rental car? Sorry about that. Let's get back to our regular scheduled programming. Thank you. Yeah, I tell you the budget of Joe Biden. What's his name? Joe Budden. Joe Budden. You know Joe Budden? Huh? Yeah, like one. Here comes the 2 to the 3 to the 4. Everybody out on the dance floor. Is that Joe Budden? Or is that Migos? Or is that Chingy? You know, you remember, I'm whatever. You get what I'm saying. When I did my budgets, nobody stopped me with my budgets. My budgets were terrific. Everybody knows I did a terrific budget. Everybody tried to stop me on my debt ceiling. What's a debt ceiling? I have no ceilings. I'm like Lil Wayne. You know Lil Wayne? I pardoned him. Good guy. I love him. Love all of his music. His skateboarding stuff's great. He's a beautiful guy. Great artist. MO. We don't want MO to go up. It's possibly the greatest budget of all time. Easily the greatest budget of all time. Without a doubt. I make a budget. Everybody loves it. What did I make money. I said, let's go buy oil. We bought oil. They said no to buying oil. I bought the oil. It's the best budget. Everybody knows. The best of all time. Yeah, Trump is the only one that needs work. I don't know, man. Maybe God just didn't want me to sound like Trump. But he's like, I'll let you do Biden easily. I was made for this moment. I don't know why. Out of all the voices, anything I could have done, this Biden comes so naturally. I can let it fly, you know. I feel free when I'm Biden. I don't know. You feel the freedom. I feel like I'm building back. I'm building the budget, but build back better. But when I'm doing it, seriously. I mean it. It's not hyperbole. I can do this all day, and I get like even my eyes right now. I'm like glaring at the screen. I'm like, what do you, come on, is this like the screen's not in the union? It's fucked up. Oh, Lord, that's a bond bouncing. Bonds are bouncing right now. Anyway. Have you ever talked to your girl or mom in Biden voice? Oh, yeah, all the time. Sometimes it's weird because, like, my girlfriend is, like, I don't know. I think she's a spy still, but, like, sometimes she, like, cracks up at it. And then sometimes I'll just, like, be in the car and we're driving. And then something inspires me. And then I'll go full Biden. And then she just looks at me like, what the fuck is wrong with you? So, I don't know. Oh, I could do Kamala really good. You want it ready for Kamala? All right, here's Kamala. Ready? Cool. I'm glad you got it. I stopped once somebody said, "Where's Kamala?" Exactly. That's the impression. You don't get it? It's beautiful. I executed it perfectly. Perfectly. I ain't seen Kamala in second. It's been 3 years now, dog. What do you mean? How long is Biden? I see Biden. I'm cool with Biden now. Me and Biden are homies. I don't even trip out on anything. He like, I'm going to raise capital gains tax. I'm like, that's cool, bro. That's it. I ain't seen Kamala in 3 years, dog. Hell no. It's not like I even saw Michael Pence anyways, but still, I don't know. Kamala, I had high hopes for Kamala and for Janet Yellen. I had high hopes for both of them. I was like, let's go, man. The era of the woman is International Women's Month right now. You guys know it's a damn month? I thought it was just a day. Apparently, this is Women's Month. But yeah, I don't even know how to impersonate Kamala. I ain't seen Kamala in a long time, bro. That's it. She went Hollywood. We never hear from vice presidents who was VP before Biden. I thought you was like, who's the vice president before Pence? Biden. We did, man. That's why let me take you back in time to the George Bush days. The last time we had a vice president that wasn't your current president or Michael Pence, it was Dick Cheney, and he was shooting motherfuckers in the face with a shotgun. That's a true story. So that's the only time we heard from Cheney and anybody else. And then before that, I don't think anyone. Who was Dick? Was it Bill Clinton? I forgot who it was. But yeah, nobody really cares about the vice president. But Kamala was hype, bro. I thought Kamala, like, dude, they were touring, bro. Yeah, the guy who got shot apologized. He said, "My bad for getting in the way of your bullet. I should have looked both ways. That's my fault." Oh, Al Gore, duh. Yeah, duh. Yeah, and he was like, climate change. Dude, Al Gore, I don't know if he's happy or sad. He's like, I started this climate change. You know, wasn't Al Gore like the reason we have the internet too? Al Gore is actually a pretty smart guy. Then he lost to Bush. Sorry about that. Listen, we don't need a climate change when we could change ourselves. So now watch this drive. Beautiful. Nvidia. Turn up your mic. Are you sure? You should do stand-up comedy. I mean, we'll see, man. You know, one day I'm going to take a crazy bet on the yen, and I'm either going to become a billionaire or I'm going to lose everything. And then if that happens, Then I'm going to start, I'm going to be like D-Lucky experience and have to start gambling with Chads for $2,000 a session. And then maybe I'll pursue stand-up. It just depends, honestly. You know, I'm more Fati. We'll just see where things go. You know what I'm saying? It just depends on if I fall off and how hard I fall. And then, you know, we got different options. I could probably do like a Biden tour and do like Biden impersonations too. So that's it. You could play the yen through futures. There's also ETFs. IG emailed me to warn that yen has larger margin. I'm sure ahead of Friday. We still have that. We still have the Friday Bank of Japan. I low-key kind of forgot about it ever since this little fiasco with Powell. Does this ever get old? No. I'm telling you, man. I think we have good conversations, man. It's great every day. Even like on an economic side, the market is fascinating, especially when the market's a shit show, like it's been the last couple of years. So it's fascinating in that end. It's, you know, I think the community is awesome. Like the only thing that gets old is like people where like they're just like angry all the time, like that. I'm like, how are you still angry? Like I've even had people mad at me for like years. Or like you get people, I'm like, how are you still there? Like that's the only thing that gets old about it, because I'm like, what's up, man? But 99% of it, maybe 95% is pretty legit. You should get on SNL. We'll see. I'm a little rough around the edges. I'm a little too much tinfoil for the mainstream, and I'm a little too aggressive. That's it. If I gotta just like if I took one of those like diversity learning courses, you know what I'm saying, or like a what's it called, like a be nice course like they make you do like at CNN, like I'd be legit. I could definitely, we definitely have a lot more opportunities, but I don't know if I'm willing to do that. I got to go through like a re-education camp. I'm not really down. Bro, look at this thing is tripping out. Sensitivity training, that's what it is. Yeah. There is no law that you need. Well, it's not like I don't think I'm like mean, but you just can't say certain things. That's all. We live in China now. Like I can't call that. I can't even say that, I don't think. But it's good. Nothing wrong with being nice. I mean, I try to be nice. That's what I'm saying. It gets old when like it's like clearly I'm like trying to be nice and people will just like, you know what I'm saying? It's like you don't want me to be nice, huh? Other than that though, it's nothing wrong with being nice, but definitely like I don't know, man, like you can't just tell everybody how the Federal Reserve works and how we're getting scammed on interest on excess reserves. Need one arm. We'll see. Arnold just came out because we were trying to buy the bonds. There's a lot of cool people in finance. I mean, that's why I like finance, because you could do whatever you want and just stay in your bubble. Like, I don't know if you guys realize, like, you know how many like Jesus loving billionaires there are out there, and there's just like so many like tinfoil ass mother effers like Hugh Hendry. Like, that's what you do, really. You just go and you just make a bag, get in financial investments, and then you don't have to really rely on, like, being in the public. That's the thing. There's difference if you want to be in a public industry versus you could just make your own investments, keep it private, and just live whatever life you want to. Whereas if you go on media and online, you're kind of you are expected to follow a societal. There is a societal border around it that you need to follow that constantly evolves. Fox says they've dropped merger with News Corp as a concept. Yeah, I thought we were going to squeeze 2 this morning. I can't believe we hit 417. JP Morgan ordered to hand over more Jamie Dimon records to the USVI. I think that's related to the Epstein shit. Yeah, Karuta is the wild card. That's the thing. You got to realize if Friday is good or bad based on the jobs report tomorrow, it's like no matter what, in a weird way, Powell or Karuta could pull out a wild card. So we've seen that before. How many times have we seen a Friday death dive and then Bank of Japan's like, we're going to stimulate it all. And then it just goes crazy. We see that was like what, 4 months ago, 3 months ago? You guys remember that Friday? I remember it. I think it was the day, or no, it was at the butterfly day. I think it happened twice. It was day on the butterfly and then the other one, and then boom, it was just Bank of Japan, and then the yen started rocketing, and then it saved the thing. No. This is the last Karuta. So this is the final meeting of Karuta since 2015. So he's been there for almost 10 years. I think a little earlier, but he has one more meeting tomorrow, and then Ueda, the new guy, comes in after that. Lunar's on the high. NSC's getting mollywopped. Damn, NSC's down to 214. We would have made $15 a share. So you got part 2 on that. And then SPY's bouncing up here a little bit. This is the final Karuta. My Karuta. No. Well, a lot of people are expecting he won't surprise because it's his last meeting. And, you know, like, if Karuta comes out with a surprise, like, he's just a real dickhead. Like, you got to realize, imagine Norfolk Southern train derails in Alabama. What the fuck? Bro, another Norfolk Southern derailment? What are y'all doing? Hold on. I ain't never seen this many trains. This is crazy. Can y'all just, like, slow it down a little bit? I don't even think trains are, like, that fast, but... Dude, this is, like, kind of weird at this point. So, yeah, they're actually I think it's getting to the point where the stock is responding on it. I don't think you guys realize how crazy that is. Look at this. NSC is already down 15 or $20 from where we shorted it. But, like, they're even getting a red candle in volume off of that news. Just because that's like your 4th or something now in a very, very short amount of time. Or I think at least the 3rd. Train derailments happen all the time. It's now covered most vastly by media to create fear. That's all it is. Look up the stats. So, although I don't disagree with you fully, I don't necessarily agree nor disagree, but there is a lot of drama surrounding train derailment statistics. So ever since the Ohio one, and then we kept getting the Houston one, and then another one, and then another one, everybody started looking into this. But the problem with that stat on train derailments is that most of the stats is like if you averaged all of it over the last like 20 or 30 years. So it's like from 1990 or 2000 to 2021, there was like 20,000 derailments or whatever. So then if you took that by the year, the average is 1,000 a year, but that's not necessarily how it happened. In the sense that a lot of trains derailed in the early 90s or late 90s, the 2000s. You had, you know, certain areas, but it's not like you get a constant 1,000 train derailments every year. That's just kind of how the numbers boil down to it. And then as well as the amount of derailments that lead to property damage, death, destruction, all of that good stuff. Murdoch says we're ready to engage with WWE on TV rights renewal. So I don't know if WWE will pop, but Murdoch says they're going to engage with them on rights renewal. We could have a good talk today on 10%. I mean, at the end of the day, though, I mean, today's discussion should be very simple. If you really want to make a lot of today's discussion beneficial to you and useful, it really should be coming down to understanding the jobs report tomorrow. And then if you really want to get ahead of it, getting ready for CPI. So that's, we've talked about it a little bit, but I think really, I hope everybody in here understands the jobs number at this point and what is going to happen, because we've done it so many times. And this is getting us back to kind of what we saw in October and some of those earlier months where strong data is going to be bad, weak data is going to be good, and the jobs data now, that's going to be the main driver of everything tomorrow. And then that leads us into the CPI on Tuesday. Norfolk Southern train derails in Alabama. No hazmat leaks. So that's good. We can. On data bad for markets, weak data bad for the market. I think weak data will be good. I think the market will rally off of a low jobs number. So, like I was telling you here, I believe the statistic is that for the last 10 months in a row, jobs, non-farm payrolls have came in higher than expectations for 10 months in a row, almost a full year straight. So if it came in lower, that would be a welcome surprise. I mean, technically speaking, if the jobs report came in below expectations, which I don't think it will, but if it did, that would be your first time in almost a year of that happening. But if it does come in high, if it comes in at 500, I think we're dead. I think if you get a jobs report just as strong as last month, we're totally screwed. Where is it? I think this is the pretty picture. Yeah. So take a look. I guess it was since April. So April 2022, jobs report came higher. I guess they say August, September. Why? Is that it? No, that's the 3-month average. Oh, I'm tripping. But this is where it's at. The 3-month average of jobs is like just under 300. And then this is the expectation for Friday, tomorrow. 300K would fall in line with the average, but I still think 300K, I don't know, 300K estimate right now is 200, 220. Bloomberg has theirs at 250. So 300, I don't know. I think 300 would be confusing, but more, I think I would tilt positive on 300, maybe. But then that would depend on labor force participation and then employment and then wages. So if it came down to 300 at face value would be bullish, I would say. But then I would also argue that you would have more emphasis, though, on the other metrics that come out. So if you have 300,000 jobs, that would be bullish. But then if the unemployment rate dropped on those 300,000, then that would be bearish. Or if wages went up, that would be bearish as well. If it's super hot, do you think an October style squeeze? What do you mean, like where we dump and then run up? No, I don't think that could happen. No, I think we die. We die, no bounce. It might be volatile. It might be like last Powell where we have a big drop, a fat run up maybe one time and then it sells off. But no, and I say that because you have the CPI data the next day or the next 2 days, and then you have Powell. So if that meant, like, remember, October 13th, that was the final event. That was CPI. That came in high and people freaked out, and then it led to, hitting a very, very low. So no, I don't think If tomorrow comes in really hot, I think we're going to die. And I don't think you're going to get a bottom bounce like wick that leads everybody to reverse just because we're still high and you have follow-up data. Then last jobs report is 500,000. And God bless you, Oscar. Thank you, my friend. But yeah, and then last time was very, 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 very hot. Salesforce cut hundreds of jobs. Insider. Ad. Well, here, let me go to the bathroom if you guys are getting an ad. I'll be right back. Follow me on Instagram at The Trading Fraternity. I love you. And follow me on Instagram. I love you. Say what's up in the chat, man. Don't be shy. Amen. Amen.
Devastating barrage against cities today. At least 5 people were killed. Hundreds of thousands more plunged into blackouts. The Russians were said to use a new mix of weapons that mostly evaded air defenses. In Israel, tens of thousands of people headed for protests over the government's plan to cut the power of the Supreme Court. There may be demonstrations in 20 cities. Protesters are calling it a day of resistance to dictatorship. Prime Minister Benjamin Netanyahu and his allies say they're trying to rein in a court that has overstepped its authority. Is the COVID pandemic over? Well, that answer to that question is revealing another divide for Americans. The latest Gallup poll shows it's basically 50-50 whether Americans think the pandemic is behind us. 51% say they don't think it is. 49% said they do. The Washington Times reports that's a new high since Gallup started asking the question nearly 2 years ago, as many states began to lift their restrictions. And Californians are bracing for more severe weather. Heavy rains and damaging winds will sweep across most of the state today and tomorrow as a powerful Pacific storm brings another round of floods and mudslides, as well as snow on some of the state's highest peaks. Flood watches, wind advisories, winter storm warnings blanket most of California and its neighbors. Some areas could see as much as 15 inches of rain. Global news powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg. David.
Thank you so much, Lisa. As I said the last segment, we're waiting between the Jay Powell testimony up on Capitol Hill that we had on Tuesday and Wednesday and the big jobs numbers coming out tomorrow to really give us a preview of those jobs numbers and how they might affect the Federal Reserve. We turned on to Michael McKee. He's Bloomberg International Economics and Policy Correspondent. Mike, thanks so much for being with us. What do we expect? What's consensus on the jobs for tomorrow?
Well, consensus as we go back to the pattern that we were in, to the trend that we had before the January numbers, the consensus forecast is 225,000 jobs. The last month, it was 517,000, you'll remember, and that basically changed everyone's mind on Wall Street and turned thinking about the Fed upside down. Everybody thought they were sort of on a glide path to maybe being done with raising interest rates, and then we got that huge jobs number followed by a strong CPI number, and everybody then started pricing in extra rate moves, and now they're talking about the possibility of another 0.5 percentage point move on March 22nd. So tomorrow does have a lot of import. If we go back to where we were, the pressure is still on probably to do more. We'll see what happens when we get the CPI numbers. But if we do drop below consensus, maybe into the 100,000s, then we could see the Fed back off a little bit and not be quite as aggressive sounding at their next meeting.
Mike, are we seeing any little indications of any loosening of the job market elsewhere? I mean, certainly we got the jobless claims numbers out today. It's a surprise. They were higher than people expected them to be, I think by 21,000 or so. And there was also a Bloomberg New Economy report, as I recall this morning, about the construction industry, that maybe it's not quite as tight as it was. Are we seeing some glimmers with respect to labor?
Yeah, you could call them maybe green shoots. That's appropriate since it's almost spring, but we're not quite there yet. We did see in the JOLTS numbers that came out yesterday, everybody watching for those, big decline, the biggest ever really in job openings for construction workers. And people have been wondering why that's been so strong, even though the Fed's raised interest rates so much. Mortgage rates have gone up and activity's really dropped off. Builders have been working through backlogs, but maybe now they're going to start cutting workers. We'll see tomorrow if that's the case. Unfortunately, the jobless claims numbers come with a big asterisk. When New York schools go on vacation, which they did last week at spring break, New York education employees can file for unemployment benefits. And so for a week, they get a check, and it pushes up those numbers, this time by 16,000. And if you subtract those 16,000 from what we got, you're back to 195, still the same old numbers in terms of jobless claims. So the evidence that the economy and hiring is slowing is still very slim.
So Mike, none of us begrudge somebody getting a job, for goodness sakes. That's a good thing, all things being equal. But if you're fighting inflation, even more important than whether people are employed is how much they're getting paid. What are we seeing in terms of wage increases, and what do you think we may expect tomorrow?
Yeah, SIVB
wage increases have been relatively small. They've slowed down a little bit, but not very much. And the latest beige book yesterday said,
all right, it's interesting. SIVB, bro, they're actually wild. But here's the deal. Shout out to Handsome Rob. He sent me this fat email on SIVB. It's actually quite interesting. So he's saying that pretty much they were like a new disruptive type bank. They were heavily in venture capital with massive leveraging during the pandemic. They were all on that Kathy Wood shit. That's not news, but pretty much they rode the VC boom like a champ. Their deposits grew from $61 billion in 2019 to $189 at fourth quarter 2021. But now what they did is like they increased their loans, and pretty much they did all these like held to maturity portfolio, and they started buying all of these bonds. So like here it is. Oh, damn it. The screenshots aren't loading up as they're not big, but he's saying pretty much it's their held to maturity portfolio. They increased their security portfolio by 700% at a generational top in the bond market, buying $88 billion of 10-year mortgages with an average yield of 1.63 as of September 30th. So they had mark-to-market losses of $15 billion in Q3 compared to $11 billion of tangible common equity. So then pretty much they just bought all of these bonds, and it looks like they bought them all in 2019, 2020, right before the Fed started raising, and then they just totally got clapped. Oh, wait, did I just... Oh, I thought I just stepped on the horn. Yeah, low ticker is gassing out of nowhere. Meta just plummeted. SIVB. I want you to see these screenshots. But he sent me go look at SIVB's balance sheet, the HTM held to maturity bonds, and you could pretty much see it all. I wonder if they gave an update here today. Yeah, so I mean it's pretty simple. They pretty much got all this money from venture capital and buying these illiquid investments and innovation and all of that shit. And then they got all of this money, and then they put over almost $100 billion into longer-term yielding bonds, but they did it at the end of the year, right before Powell just started raising rates. They're not getting liquidated; they're just getting murdered. Like it's not like you're getting liquidated. They just think about it. They bought bonds at 1.6, and those same bonds are going for 4, 5, 6% now, maybe higher. Just depending on which ones they got, but even on a just basic treasury function, they've at least lost half of the value, just like I was showing you earlier. So it seems like now all of those problems are kind of catching up, and then if yields keep going higher and higher, you lose more and more money, and then on your balance sheet, that just does not look good at all. Because now so if you already were in a precarious spot on your balance sheet, and now next quarter bond yields shoot up again, and you have to write more losses down on your bonds, then there you go. You're not really holding up too good. And I think that's kind of what's spilling over to Bank of America and JP Morgan, all of the bank. Bro, I can't believe Bank of America is down 5% right now. This is actually huge today. I don't know if y'all realize this. This is like a massive dump here on the banks, and this could all be as a result of that, and then maybe people freaking out with the bonds. And ETH. Well, this isn't even related to crypto. So that means that SIVB, this isn't like a reaction of crypto at all. SIVB is losing. Well, they're losing money in the sense of their balance sheet. So it's like it's like when I lose money on my big long term, my wealth goes down. So my balance sheet changes. So in that case, it's just like they had all of these assets. So pretty much they had $120 million of assets, but now those assets are only worth, let's say, $20 billion. So now so if they needed any money, right, and now let's say everything else doesn't do good, you're holding these illiquid investments, you could only live off of what money you're making. So now it's like if they needed any liquidity, like today they said they sold $21 billion of assets. You got to ask yourself, how much did they sell them for, or really how much did they pay for them? So now, because that way, if they sold for $20 billion, but they bought them for $40 billion, you just took a $20 billion loss just to get any working capital. I blame 0 days. Meta puts. Yeah, we got out of Google earlier. I had to close the NVIDIA so I could roll over. It's like selling your long term to buy weeklies. Well, not really. It's because it's not like they're making new investments. It's just they made it's like buying an NFT at the top, and then you're like, oh, I'm gonna hold this for 10 years. I don't care. I don't need the money today. And then 2-3 years later, you go through you just lose your money. And now you still have these assets, but the assets that you thought were worth money have now decreased in value 50, 60, 70, 80% or more. And then I don't even know if they were even shorting any bonds. So just like they bought some long-term assets for 10 years, and then the party stopped, and then now they needed money, or now they need money to keep operating, it seems like. But if you wanted to sell those assets, you're going to sell them at a very steep discount. Yeah, JP, this is weird. I mean, it's not. That's the crazy part. We're not even talking crypto. Now we're talking about bonds blowing up banks in America. I think this is the first sign of it, but I don't know if it's there yet. It's kind of like reverse guilt issue, but then again, the question is how many banks are even short on the bonds. I'd be more worried if you were if you had big positions, or you went short or long, or however you hedged them. That could be the risk. But that, at this point, it's kind of the bond market. That's your Volmageddon, low-key. For where's my Volmageddon boys at? Because that's where it's like all of a sudden now, that would be the unforeseen risk of bonds leading to, anybody who made big investments. If anything slows down, and now these assets and their valuations are very, very, if you don't really have that much in money that's liquid, then you're clapped. Bro, you're about to hit it. You're at a new low right now. You've already filled the gap. You bounced up to it one time. Couldn't get above 3996. It's just like yesterday. I mean, it's already almost 10 o'clock here. Yeah. kind of same formation as yesterday. If you start breaking down here, we might go a little bit lower and then chill out for the rest of the day and see. We should be 10% more on that budget down. Well, everybody, I mean, the budget isn't, it's more of a political statement rather than it's not going to go through. It definitely raises the odds of problems here with the debt ceiling. But at the end of the day, most people are expecting none of this is going to pass. So most people are saying this is just more, in a weird way, this is kind of like Biden getting ready for re-election. And at the same time, it highlights, this is all from a political perspective, but it highlights the stark differences between Democrats and Republicans in the political sense that at least it highlights that the Democrats have a different way. Last thing you want is your budget to look the same exact way. And pretty much if everybody can agree with it, then that means it's not really that different, where this is going to be a talking point where Democrats can say, no, look, we are trying to raise capital gains taxes. We are taxing the rich. What's your plan? Give tax cuts to the rich? Like, you see what I'm saying? So it's more political, I would say, than not, but the deal isn't going to pass. Most people are expecting it's not going to. A lot of them are dead. A lot of the proposals will be dead on arrival. LMT is moving up here. U.S. Senate confirms Werfel to be IRS commissioner. The levels is right now, we're the same levels as yesterday. 39.60. Now we're back to 39.84. Same shit as yesterday. Just, I think 39.83, 39.80 is one level, then 39.70, and then 39.60 flat if we go lower. And then the yen is bounced this whole time. I'm surprised the market, but now dollar and bonds have kind of chilled, but dollar is trying to work its way back up here. SIVB is dangerous. I don't know. SIVB is kind of creepy. I'm telling you, we saw it in the morning. I flipped it. I just thought it was a bad, I thought it was just the offering, and then I read into it, and then it seems very ominous. Like they literally just sold $20 billion of assets, which we're all presuming at a loss. I think they did say they lost money on it. Then they lowered their net guidance income and then did an offering of $2.5 billion total, all in one day on the same day that Silvergate files to liquidate and dissolve. So it's pretty crazy. One bank bought $500 million of the offering, but they were able to sell. I mean, people are buying it right now. I mean, the market, they had marketable securities. I mean, it's still holding a good value. So going lower, because think about it, offering, you're just selling stocks. So if people, oh, wow, is that a gap down? All right, you're flushing there now. That's getting kind of ugly. Chattadonia. Habibi, this don't look good, Habibi. Habibi, this one did not look good, Habibi. You see this one? Oh, that's not good. I think Chips might be getting it next, of course. I had to sacrifice my NVIDIA. Still be down on it, though, but either way. And then NVIDIA is getting murdered, or Tesla. Baba. We're in 2,300. I'm on the next month NQs now, but so those still got a little bit more. AMD gave up all the gains, dude. I don't know. The banks are kind of creeping me out today. That's it. I think that's kind of the biggest problem right here. Because now this is Today is like the seed is being planted of a whole nother issue nobody has thought about. I hope not, to be honest with you. That's the last thing that is when it gets crazy. Disney has a lot of rationalization on Disney Plus. Bob Iger speaks at Morgan Stanley conference. Disney has to look at unfavorable promotion prices. Bob Iger is speaking at Morgan Stanley. That would be a black swan. It would kind of be like the guilt issue hitting America, but with our bond market. But the why, though, that's a hard question to answer, because it's like, did everybody make that bad of a bet? You would need a lot of it, and then you don't even know if anybody's like short on them, long, and what other types of agreements they have. But I think a big issue could be if bonds keep losing value, there could be significant write-downs ahead. Or technically speaking, if anybody ran into an issue right now, you'd have a problem. That's it. Let's say hypothetically you're down 30 to 40% on your bond portfolio, right? And then you have a headwind that causes you to lose 10% of your income, then you have a problem. But other than that, it's a very weird seed being planted here. Yeah, bro, banks are single-handedly down 2.5% right now. My George Soros trade is brewing. Maybe. I mean, if this confirms, I think we'll react to it early, but it's going to be it would trade like the guilt issue with the UK late last year. Bank of America. I just get nervous. SIVB makes me nervous. And then the fact that I think everybody's kind of like coming to this conclusion now. They're like, oh, that's why the banks are dropping. But then it's just kind of more of a potential issue. A potential headwind that would not be good. No, yeah. NSC actually reacted to that too. And then Disney, Bob Iger, he's speaking now. No movements, but low-key, you've been in a pretty wild downtrend since Euro close. So this was Euro close into the low. You bounced and then just been selling off since. It's been over an hour, 20 minutes. Average on. I'm considering it, honestly. I'm mad that I bought it yesterday in the 2 days before that. But now it's kind of like in the middle of this candle. This is one low. I think it could drop another $2. I think maybe after jobs report, if jobs report is good tomorrow, that could be our first buy. Otherwise, save you another 2%. Yeah, new IRS commissioner too. No, I closed out the NVIDIA. I had to. It's too expensive. Because I needed a rollover different play. So I took a $500-600 loss on that. Made me sad. Bond yields are going. I mean, bond yields are going up, but that means they're going down. Yeah, I got rid of the Googles too. I mean, we've taken some decent share profits so far this month without any bigger losses. If anything, bigger losses on that ES and then anything else. But anything else is chill to be holding. December 21 Bears not complaining. No, the bank was SIVB. That's like one of the biggest stories today, and I think it's kind of just, I think it's low key. I mean, I flipped it in the morning. I went to the long side. I was even thinking about going to the downside again. I was like, I didn't even think it'd move more than 30%, but I think everybody's kind of just picking up on this story. Then you're watching the banks, then the banks effect. Dollar's shooting back up right now. Is that the bonds? No, that's the bonds. I don't know. Bonds and yen. The correlation with yen and bonds is good, but stocks have been selling off. PM and MO. I don't know why Altria. Altria's been moving a lot lately. Even JP's. Dude, 5% on JP Morgan is wild. Bro, all in like 2-3 days. I don't think banks are worried about auto loans. I think your biggest worry is bonds. It's starting to make a lot of sense here. Especially since you're watching a casualty with SIVB. So, like, pretty much it's just banks own more bonds than anything. And if that would be the unforeseen circumstances, if we start noticing that a lot of these banks now don't have as much money since the values of their bonds and their balance sheets are getting affected. And that would be if bonds keep going down. JPM haunted. What would make banks run? I think the situation not getting worse and then the realization of higher rates benefiting them. But maybe it'll just be broader momentum or the bond market cooling off. I think if bonds bounce, then you might even get a bounce there on the bank stocks too. And we're dancing around here. I mean, ironically enough, you got things bouncing like bonds and the yen. The dollar staying pinned. I think if energy could come back up, you'll be good. But energy just gave up all of the gains from this morning. Yeah, every day this week. It's because I bought it, bro. I'm sorry. I apologize. Dreamly. JPM doesn't even yield a lot, though, still. Like, we bought it at a good price, but it was like barely 4%. Still 3%. It's not bad. I saw it the other day. It was yielding like 2 something. Media is going to run with the bond issue, turn into bank stress, attacking Powell. Maybe, but at least the difference is that this time around, you're actually like, you have a casualty. That's what's I will see with SIVB. It's still early. Whatever we're talking about, this is my imagination getting the best of me. But that's why we got to see where it goes from here. But if it actually turns into SIVB going underwater and they really have a problem, then we'll see. Utilities are the number one on the day, and then staples are up, and then healthcare and energy. But it's hard to say flight to safety. I think everybody's getting it. But then realistically, I think flight to safety, it would coincide with more bonds and then more dollar. I'm scaring you? Don't be scared. You got an ad coming. You have an ad coming on your way. That should humble you and distract you and make you not freak out too much. See, look at that. Boom, bro. You're chilling now, bro. You're good. I like the ads. They slow the game down. New properties? No, I'm still in escrow on selling the other one. I've been looking. I need to find a bunch. I don't know. Does anybody have any cash flow in rentals anywhere in the nation? I have some guy who wants to buy a shit ton. But I'm very picky. I've been telling him, I've sent him a couple, but they weren't even really the best deals, and I told him. But he wants something in the next month. 29-year bond auction. So 30-year bonds coming in right now. Yeah, dollar and bonds will start moving. Bonds are liking it for now. 3.87 versus 3.871 when issued. So slightly higher. I don't know why. I think people were expecting that to be a little bit worse. So you're actually catching a bid, even though the yield is higher. Slightly. Short-term yields fall. 30-year barely goes up. So if that bond auction holds up, and now the yen, I think you might be able to bounce here. Should be on the lookout for it. NVIDIA scamming. Let's just see if the banks actually recover. Could have been worse. Could have been worse. Yeah, UUP, but bond, that's weird. So 30-year bond auction came in slightly higher. I think people were nervous that the yield would be much, much higher. But even the dollar's dropping on that. The banks are dead. I mean, if they get any relief by the end of the day, I mean, there you go. You'll get your own little reaction in that sense. That'll help out. But for the most part, we got to see how that one plays out. If the banks blow up, we'll see. Give it a week. Give it at least a week. Who knows what happens with all of the data. But you have to. I'm sorry if I'm scaring you. This is all just my imagination. I'm just thinking out loud here of what could possibly be there. Because we've been saying it the last 4 or 5 days. We're like, why are the banks getting murdered like that? The banks were targeted, and they've moved way, way worse than anything else. But and then now the SIVB stuff today. So it's just a potential thing that could happen. Yeah, Treasuries extend gain after 30-year bond auction. Time 10:05. Oh, I should have went to the bath. I'm going to go pee. I'm going to get me a carbo. It's game time. So, Chad, follow me on Instagram at the Trading Fraternity. I love you, okay? You're blessed, man. You're blessed. Oh, and here it is, too. Add me on Snapchat. I think Snapchat's letting me add people now. I was able to accept a bunch of friend requests yesterday. I don't know if my hairline is still on there. Maybe I'll post a picture of the guru. I don't know. We'll see. I'll be right back. I love you. God bless you. And I'll see you soon.
Bank of America CEO Brian Moynihan about the likelihood of the R word, recession. Take a listen.
The U.S. has this big, huge economy which goes and moves along. And so, if you think about our team at Bank of America's research team, which is one of the best in the world, if not the best in the world, under Candace Browning-Platt and her leadership team, they basically have a recession predicted beginning in the third quarter this year, third, fourth, and first quarter. But it's a slight recession. It goes down 1% or 2% and then moves back up and then gets back to 1.5% growth in the latter part of next year, but still below trend growth.
Well, with a possible recession looming, U.S. jobless claims rose to the highest level since December. Markets actually jumping off the data point, suggesting perhaps some softening in the tight labor market is a good thing. Joining us now to talk about what this means for the Fed is Bloomberg's Steve Matthews. Steve, the market reaction was interesting. No one should really be cheering for higher unemployment in theory, yet it's seen as a positive for the Federal Reserve. Walk us through it.
Yeah, it is seen as a positive in that, the Fed, we got the JOLTS data earlier this week, job openings. And one thing that the Fed is looking at is job openings compared to the number of unemployed. And it's running at nearly 2 to 1 right now, 2 job openings for each unemployed worker. The Fed sees that as unbalanced and would like to see it closer to 1, which is what it was before COVID. And so when you see some pickup of unemployment, it's not that they're cheering for people to be thrown out of work, but they would like to see more balance in the market. And, this is just 1 week. So it's like I would, it's interesting that there's any market reaction at all because there may have been some special factors. Right. So who knows, if this is noise or whether there's something really going on.
Well, it's interesting because as we were talking about Chairman Powell during the testimony specifically, you were now seeing 50 basis points priced in as the rate hike at the end of March 22nd, I believe. What is the threshold to get to the half-point hike?
Well, tomorrow we get the employment number for last month, and that will be critical. The economists surveyed by Bloomberg are predicting 225,000. If you get something like that, that is probably enough to tip the Fed into doing a 50 basis point hike, because the Fed's goal right now is to see below trend growth. And if you get something like 200,000, 250,000, that suggests that the market, the economy is picking up, that you have a very strong economy going into the first quarter. And that's not exactly what their goal is right now.
Well, let's game this out then. What happens if we get a soft jobs report? The first, I might add, after 10 consecutive payroll beats. How does the Fed approach that?
Well, if we get a soft report, that basically leaves the door open for 25 basis point hike later this month, although it really shifts the attention to next Tuesday when we get the Consumer Price Index report, and CPI is going to be all important. If the jobs report is ambiguous or weak, that's going to really put a lot of emphasis on CPI next week.
Bloomberg's Steve Matthews walking us through the important data point we're going to get tomorrow. And, of course, the initial jobless claims today. We thank you, as always. Joining us now for the market impact, Chris Verone joins me right here on set, partner and head of technical and macro research over at Strategas. He was also ranked as #2 macro analyst on Wall Street in the 2022 Institutional Investor Survey. I didn't know that. It's pretty cool. Congratulations.
Thank you.
Let's game this out the way we did with Steve Matthews here. If we get a hot payrolls report, the 11th, after 10 straight beats, it's pretty easy what the equity reaction will be. Equities down, yields up. What happens if it comes in soft?
Well, first, let's take a step back and say what's the utility in thinking about the whole year coming down to 1 week of data or one data point? I'm always a little bit skeptical when the consensus gets very, very focused on one print. Let's take a step back and look at the trends. Trends in yield is up. I think whether it's a soft number or a hot number, I'm not sure that changes here. What I would be really curious about, after a week of pretty hawkish language from the Fed, let's watch the two-year yield here. We always joke, let's abolish the Fed and just watch the two-year yield. It's all you really need to know about the direction of monetary policy. Very hawkish Fed. Let's see where twos close. My suspicion is we have not seen the high here. But at the end of the day, whether the terminal rate is 5 1/4 or 5 3/4, I think the die's already cast. The 75 basis points of delta between the two, I don't think changes what the longer-term outlook likely is.
So, soft labor jobs report. What do we get in terms of the immediate reaction?
Yeah, so I guess my suspicion would be, and I really don't like boiling down a market to one level, 3940 on the S&P has been the level over the last couple of weeks, and I have to give that the respect it deserves. But what I'm a little bit struck by is, you know what's making 52-week lows here are the banks, and that's with rates up. So let's take a step back and say, okay, what is the message of Bank of America on the lows, JP Morgan breaking down, all the regionals weak? There used to be a time in this business where you would say banks down doesn't forebode very great things for the equity market at large.
Okay, well, let's go to the bond market then, because we're already seeing some price action here. I mean, for me, it was the round numbers, 4% on the 10-year, 5% on the 2-year. And you did see those thresholds get crossed, but not sustainably. What is it going to take for them to sustainably be above 4 and 5% respectively?
Well, it's funny. My suspicion here is that rates up the market can actually tolerate. It's when rates start to fall, you have to beg the question of, hey, what is that actually saying about the economy here? So this window where risk has worked the last 4 or 5 months has largely been with rates steady to up. I would actually get more worried if you began to see particularly the short end start to fall. That would steepen the curve. You don't want curve steepeners at this point in the cycle. Curve steepeners are when all the bad stuff happens. So we're in this little window here, and we've gone back and looked at this historically. You can get good S&P rallies with the curves inverted. It's when the curve begins to steepen, that's typically where some of the trouble begins to emerge.
Well, let's connect the dots here then, because you said 52-year lows for a lot of the banks, a lot of the financial sector.
Yep. I like this 52-week lows.
Yes, yet we are anticipating higher yields. So it feels like that's contradictory. When you're looking at higher yields, shouldn't that be a positive for net interest income and therefore the stock?
You'd absolutely think so. And it kind of brings us back to the old lesson of price action versus news, right? When the price doesn't respond to what the news suggests the response should be, raise your antenna. And I think about kind of the three things that have driven rates: curve, NIM, and probably real estate. I wouldn't say all three are in particularly good shapes here. There's competition for deposits. We see it with the 2-year Treasury at 5%, right? Why do I need my deposits in a bank account in Bank of America that yields nothing when I can get 5% in a Treasury? I think that pressures NIM. I think when you look at the shape of the curve, well, yields may be up, but a very inverted curve is typically not the framework for domestic banks to do particularly well.
Yeah.
And then look at these office REITs. Vornado, decades low. SL Green breaking down. I suspect these banks have some exposure to that, and it reflects some of the weakness there.
All right, so big picture, 30 seconds, 39.40 on the downside. What's the upside?
Yeah, I think the upside's probably 43.50. That's kind of the largest rallies we've ever gotten with an inverted curve is 25%. So 25 off the October lows gets you somewhere 43, 43.50. I would have to guess that's near the top end of the range. But the real big picture is this market's not monolithic.
Yeah.
For as weak as banks are, industrials act great. Right. For as weak as parts of healthcare are, parts of consumer act well. So I'm not sure this is a year that lends itself to one call. I mean, last year was about hitting home runs. It was long energy, short tech. This year is pick your spots, don't get picked off first base.
You heard it here first, folks. Chris Verona, Strategas, walking us.
I like it. So he's saying banks are probably getting pressures from deposit rates, where now they're going to pull what people are pulling their money out of banks to go get higher yields on treasuries. Disney linking sports betting with programming is inevitable. Disney and sports betting news. Again, Iger's speaking right now. But then he's also saying that what's it called? He's saying there's also exposure to all these other banks, but I think everyone's kind of perplexed on this whole banks are destroying everything. It does make a lot of sense, but it seems like there's like 5 other factors going on. But at least you guys heard it. I mean, with the targets to the upside and downside, a lot of people are feeling the same things. I'm glad. I mean, that range is something. I think we could go a little lower. But that was a good convo. Great convo. And then he was saying pretty much, if you didn't get what he was saying, he's like, last thing you want right now is yields to go down. Because if yields start going down, that means people are buying them up this late in the cycle. That means you probably have a bigger problem. And he's pretty much saying the curve reinverting becomes the issue, which I could get behind if you've ever listened. I think we go 380 minimum. Yeah, depending on how this next couple of weeks play out. If it gets bad, we're going to 380. If not, we'll be good. It's crazy. Bonds are still ripping. Dollar is down. The yen is up. You're actually diverging. This is not good. So, again, banks are down. Bonds are going up right now, and stocks are going down. You haven't seen this one in a while. It helps close the gap here a little bit, which is good, but it has been quite some time since you've actually, at least a couple of weeks here, since you've watched bonds go up and then the stocks go down in opposite directions. Could be pre-data jitters. I mean, if anything, though, I think that's part of it, but I feel like the pre-data should have been calmed down a little bit with the jobless claims, but I think today is just a little bit more, I think, broader fear that's just been creeping in, and then that, I guess that goes hand in hand with the data. But then also, I think the banks right now are just weighing on the market in a very unusual way. I wouldn't even say unusual. I just think borderline negative. Just not even borderline, just straight negative. The debt ceiling got a little bit more precarious here. We're coming lower here, though. Chad, you've already broken 39.80 here in the last 4 minutes, so this is another level. But 39.74, you saw how that played yesterday. That's where we flushed a little lower, and then you bounced up from there, and that's where all the action took place yesterday. 39.73 low, and then 39.60 goes below that. Now we're down 0.35. We were up 0.5, I think. Yeah, the dollar. Bonds are finally catching a red, but I think positioning is starting to take over. No, JP Morgan, I would not blame the move on the Epstein news. JP Morgan is all the banks right now. All banks as a whole are down 3%. And that's after consistent 1 to 2% drops all day, every day this week. So that's just more, I mean, the banks are getting clobbered right now. There's a couple of things going on. We've been talking about it here for the last 30, 40 minutes. Yeah, you got more volume here to the sell side. A decent sized candle. But we're just flushing now. You got 2 more points, 3 more points till the next level. And then if that breaks with velocity, we're going to probably test a new low. I think we're even going down from pre-market. Yeah, you are now. This is like all in the last 4 minutes. You are lower than where we were pre-market, and that one was not good at all. Yeah, if it wasn't for the Bostic bounce, you would have been in the death zone already. But today, day before the data, you have divergences forming. Or at least the same divergences, just getting a little bit more stretched out here. All right, because even dollars down, bonds are still climbing. UWM holding short interest rises to 27 to 30 days. There's Apple coming lower. No, I had to get out of the NVIDIA short for other reasons. I wish I still had. I could add a smaller amount, but I figured I'll just clean it up there. And I sold out of Google. I think I took one more thing today. it? Google, GATX, and then I bought ACAD. Then I flipped SIVB in the morning. Catch me up. Well, we started the day. Jobs report ended up positive. You got off of the pre-market lows, which were around right here, just maybe like a half a point higher. And then we did good for like 20 minutes, and then we just started selling off there. And then banks, SIVB had a huge issue. They did like an offering and sold billions of securities. Banks are unusually low, but it could be all of this contagion and then threats to deposits like we just heard. And then that's pretty much been it. And then Biden released the budget, which is very, very high. But that surprisingly didn't have too much of an effect. But this was when the budget did come out. It was around here. And then that's it as we get ready for the big non-farms tomorrow. Thank you. For the MOVE index has been leading all of this, even after today. Oh, man. And the MOVE index has been doing one of those. It's been doing the 3 days in a row now. Not only did you have 5 days up, you chilled out, but now this is the third. That was yesterday, though. Or is this today? 3.9. It's saying it's down? No way. Should rock it up here. Non-farms will be out an hour before the bell tomorrow, and we will be live too for it. So I'm going to be streaming early tomorrow so that we could watch it. McConnell being treated for concussion. And then the Qs are on the high now. Thank you for sunshine. Thank you for rain. Thank you for power. Thank you for rates. It's a beautiful rate hike, 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 hike. Why are we down harder? Because the banks go. Well, the banks are catching symptoms right now. But we'll see what happens with it. And I like that last guy you just heard. Usually that wouldn't be a good sign for anything, but I think everybody is still kind of now juggling the broader market, what just happened, the data, what's going to happen with the rate hikes, all of that. It does look a little shaky here. But that's the thing. If tomorrow... It's very simple. If tomorrow's jobs report is good, you're rocketing up. If it's bad, get ready for the gulag. 39.40 is what that price he was talking about, but I really think 3,900 flat. Maybe 39.30 to 3,900 if tomorrow's bad, and then 4,000 to even 4,150 if tomorrow is good. Or maybe if it comes into neutral, not easy, then everybody pushes towards CPIs. All right, you're dropping again. New low, 39.73. We are starting to dump a little bit quicker right now. That was a bull trap. This morning, it definitely was. Yeah, no, that's picking up big. It's weird. Ever since Euro closed, too. This has been a nasty sell-off. 39.70, no respect at 39.73. You literally flushed that level. And now you're about 1 point higher than yesterday's low. You've given up all pre-market gains. We are coming right back down, my friends. Right back down. Oh, what? Someone just bought up all those sells, though. So, see, that was a big flush. But you have a lot of volume coming in now. I don't know what the daily volume's looking like. 41 million by hour 4. It's kind of slow. Yeah, bonds up, dollar down, SPY down. Well, bonds are doing good today. This is weird. I'm telling you. You have a go just pull up Bank of America, XLF, and then pull up the bonds, and you'll notice this is a very weird day where now you're getting the bonds actually doing good. Banks are getting clobbered. SPY is moving exactly opposite to the 10-year, and then the dollar is actually sold off after having this weird last month or so. But you're definitely getting a volatile setup coming into tomorrow. Oh, my God. That's it, dude. That's 10 points right there in the last 5 minutes. You have dropped 10 points, new low between here and yesterday. 39.60 will be the next level. Holy shit. So 39.60 is the next level. I don't know where we go from there. I think it'll be 39.30, and then that'll be it. Or 39.58, then 39.41. The 200-day and the 100-day are actually matched up perfectly today. So I don't know if we're going to – if we do it today, you might get another 200-day moving average test if this keeps up. But it is weird because you do have some bounce factors still holding. So like the yen and the bonds are showing that we don't have to necessarily die, but the fact we are dying kind of makes it a little sketchier. So 39.58, then 39.41, 39.40. That is the 100-day and the 200-day. Bro, 10 points in 5 minutes. Another low, 39.66. Okay, a couple of orders coming in. You literally just wicked into a new low. Let's see. The move index is actually slightly lower today, but it's elevated in the last 2 weeks, even the last month. This is dropping very, very fast. Yeah, NQ came down. Well, I'm glad we got that little rollover. But then the ES is still getting hurt. You have like 6 more points till the next level. I don't know how it's going to play out here. A lot of bid support, but volume's actually really low. But then the bid support's very shaky. Bonds are hitting another high. The jobless claims was positive, but it's still it's not the big one. Like we were saying, I mean, just think about the comedy of it all. Is that if you wanted to react really good to a jobs report today, jobless claims, then why did we go up kind of off of the bad jobs data yesterday? It doesn't really go hand in hand. That's the problem. No bounce. This is kind of like last week. So remember, last week was exactly the same thing, I believe. Where then Thursday, Friday, and then this week we started high, sell off every single day, and then we'll see Warner delays Suicide Squad again after fan backlash. 39.65, another new low. So that's it, man. 39.60. The line is already there. It's actually where the yen opened up. Let's go, yalla. And it's moving quick. It's not like the last couple of days it would take you a while, but like you're moving 10, 15 points in a pretty quick amount of time here. Raul's Flooring Services. Okay, that's a little vertical. That's your first bounce here in 10, 15 minutes after flushing every level to a low. 39, I don't even know. When's the last time? Last time you were at 39.60 was last week, and that's right before we tested the 200-day. Yeah, so anytime we've even got around here, you end up hitting it. When you're below the lows of last Thursday, which is today, 1 week on the dot. Yes, the jobs, we will be getting it tomorrow morning before the release, or before the market. The only other people who get it will be Department or Bureau of Labor Statistics. The banks want a Lehman so bad. Well, we'll find out. We'll find out. If that, I would be a trip, man. If we go through the same thing Europe did and the bond issue could be very, very wild. Oh yeah, watch out for your ads, Chad. I'm sorry. Be careful. It's 10:30. Yeah, we're gonna be live tomorrow before the bell. Ads and all. You'll get your ads tomorrow, 2 in the morning. So it's good. It's good. Hard Mountain Dew here. Benort Corn. What's up with Benort Corn? Is Benort okay? Low ticker's running right now. A lot of things on the low ticker. Oh, Benort Corn. Benort Corn and Ethereum now taking candles. They're all going. So all the risk on assets. Interestingly enough, though, that candle looks like it's trying to fight for green. I have YouTube Premium now, yes. I didn't mean to. I did it for a trial because I wanted to download a video. And I didn't want to like get like some sketchy YouTube downloader. And then it said you could download videos with Prime. And then come to find out you don't even get to download the videos. But then I signed up for a trial. And then I never canceled the trial. So now I have YouTube Prime. But I have been getting used to using YouTube and closing my phone. That has been the best upgrade ever. Especially for the gym. It's been great. It's been great. But they got me. The trial and then I didn't cancel. Nah, 50. I think 80. I don't know if 80 is the high. I think yesterday we hit 80. It closed at 78. Bro, you're hitting another low, so get ready for 39.60, Chattadonia. I think you have blood in the water. I think the banks are making you have more fear, and then now this is just emboldening the bears, and now it's just kind of showing all the bulls have kind of been weak. Low key. The closed phone function is the best. They're geniuses. I know. So I am a YouTube Prime member or premium. Whoop. Flush. 39.62. So just get ready at 39.60. Dude, low ticker is dominating now. Nothing on the high ticker is just volatility indexes that are going up here. So you're really, really flushing here. Even MasterCard's giving up. Visa, those are some of the leaders there in the morning. And I think the banks are still getting demolished. Bloomberg said the R word. Yeah, Bank of America. Bank of America Monahan, CEO, is talking about recession. Again, another baby flush, and then doesn't hold. 39.60, you're still literally into the low candle. 39.60, and then if this level doesn't hold up, 39.41, that's going to be the 200-day and the 100-day all at once. So ain't that something? Crowd on the low. $39,624. You'll get like a little bounce. It's kind of air braking here, but this has been quick. I'm telling you, I just put out a stream alert too. Bonds are going up. We've talked about the reasons why you could go up right now, but one thing comparing this to the last couple of days, the speed of this is actually fast. I mean, we still have 2.5 hours, but and then the other problem is that your next level below this, below 39.60, the only other problem is that the 39.40 right here, this is your 100-day and your 200-day moving average. So that is kind of the problem that we are dealing with here. Netflix on the low too. I got you on the NVIDIA sacrifice. I know. SIVB downgraded at S&P. Outlook negative. 300K with no increase in unemployment equals 2 to 3 move down. I don't know about that much down, but I don't know. 300K is still like, some people are pricing in 250. I think 300K could have a slight positive effect depending on everything else, but no, for like a 2 to 3% down percent move tomorrow, you're going to need like 500,000 jobs again. I don't even think, dude, the dollar is like pinned. Dollar's not even reacting to any of this. Is the recession over? We have not heard that here. I think if we go below 200,000 on jobs, you're rallying. That'll be your first beat in a while, but the only way, like, I think it has to go above 300,000. I think you get a negative reaction. And then everything else, 300,000 to expectations, it's going to boil down to individual factors, unemployment rate, participation rate, and wages. What if SI has a lot of equity, not just bonds? That's why the liquidation. It could be. And like that guy was saying, chances are these banks are all kind of connected to some degree. So it's like, in a weird way, somebody else has exposure to this. Like, it's not, there's a good chance another bank is connected to Silvergate or SIVB, and they both have their own little ways. All right, another low here, 4 or 5 minutes at the low, 396.160, a 1.6 away from the level. Yeah, today was a clapper, bro. That's a big move. This is borderline as big as Tuesday now. Yesterday was nothing compared to this because you gapped up, and then now you've sold off lower than any other point, and now you're getting back to the Bostic bounce level here. The 200 days, 20 points higher. And then now the 200-day and 100-day are within 1 point of each other. It's literally the same thing. New York governor writes letter to Walgreens, Rite Aid, and CVS. The banks are down 3.25 right now. Okay, it's getting a little choppier on Bookmap, but I'm still worried about the fight. You might get a little bit of a bounce, buy some time, do nothing, kind of like yesterday. Like yesterday, we kind of did this, but this one's just a lot more violent. And then maybe we dance around. That one was right at 39.70. You hit 39.60.98. I think the banks are a big part of today. I think because, I mean, even with the bonds up here, but I think the banks it's too early to freak out on the banks. If anything, just keeping it, simple, just looking at the jobs data tomorrow. But, dude, I don't know. 50% on SIVB, that's not pretty. But now Morgan Stanley, Citi, all of the banks are leading the way dumping right now. $39.61 now, even on the futures. Oh, shit, I didn't even realize that. Yeah. So now you're below 39.60. This is going to be 39.60 on the futes. All of the volatility indexes are at the high, 39.60. Oh, this don't look pretty, man. SIVB is just it's a different animal. Again, it's not even related to everything we're talking about with like crypto. It has nothing to do with crypto. That's the terrifying part. Sam Bankman only makes that problem worse. And then what was the low? 39.60.98. I think let's 5 more points here. I think you either get a bounce here or 5 more points lower. But I think Apple's tweak. I think the banks are tweaking out now. Tech has given up its gains. Tech has gone negative. Only thing up is utilities and staples. And then low ticker once again. I'm going to just keep up XLF. Might be the catalyst if the banks become a problem. But I just be careful. I don't want to talk about it too much because I'm like, this could be here today, gone tomorrow. Everyone just reacting to it, but it's definitely thought-inducing. Definitely captures your attention. Schwab drops 11%, worst decline since April 18th. So that's another bank. Bank of Canada. Rogers is speaking, still worried about upside risks. And then bonds still keep going up. Let's see. I mean, nothing really happened. You had good jobs data, but SIVB, I would say, was the only, a real event, more or less, that if you wanted to see if something happened. I'm looking at SIVB's balance sheet now. I haven't seen the update, though. I'm trying to see what they do have on there. Same thing as September. I guess September, October, you had the gilts breaking. So now we have our interesting one. Because now this is not UK, and this isn't because of policy. This is just all of a sudden one bad problem with a bank. And now the last thing you want is just everybody to start asking the question of, so what's your bonds worth now? That's kind of the only problem here. Top tick Thursday, baby. Okay, so that's the bounce from that first level. It looked nice for now. That's what, 5-6 points on the ES? So there you go if everything catches up. That was a dirty drop, though, man. Even then, this is looking like a little wishbone. SIVB printing the low ticker, man. Down to 120. Bro, this thing is down to 52% right now. That is actually insane. Something similar. No. It's just now the banks today is your first. This is the first time in a long time you have saw a bank with risk is the best way to put it. That's the only way I could explain this. That's all it is. It's just nobody was worried about U.S. banks. Nobody was worried about anybody unless your name was Credit Suisse or you had crypto. Now, today, you just had this this reaction here to SIVB and what they kind of announced. It's highlighting now another segment of a problem that nobody's really looked into. And quite frankly, it's so early. You know, this could be like, you know, it's like a kid scrapes his knees and you're like, oh my gosh, we got to go to the hospital. It's like, we don't know yet if this is serious or not, but at the very least, a new risk, a seed has been planted today is the best I could put it, but I wouldn't call it Lehman Brothers, at least not yet. But I think it's way too premature to say that that's what's up with it. There's a rusty nail in the knee of the banks. Yes. That's why. So we don't know how serious. Maybe you got to cut the leg off, but I love it. Here's the best way to describe it is the fact that we're talking about risks with a bank and most people are thinking it's because of crypto or Silvergate. And that, my friends, should tell you there's a problem. Like, do you see what I'm saying? That right there explains all of it. Crypto, that's an easy one. You know what I'm saying? Like, that's an easy one to figure out. You're like, okay, crypto, oh, we don't know this. Oh, yeah, but no. You mean to tell me there's a bank down 54% right now, and they just sold $20 billion of assets, and now it has nothing to do with crypto? That's weird. That is definitely not on the bingo card for this year at all, or even last year. Federal Trade Commission votes to block Black Knight ICE deal. SIVB halted. So you might be able to bounce then if that chills out the other financials. That's crazy. They finally halted it. They didn't get clapped on 0 days. They got clapped on bonds, it looks like, which is wild. So that's why I'm saying this isn't like, do you understand what I just said? Like, you're like, did they get clapped on crypto? Did they get clapped on 0 days? They got clapped on an old bond trade from a year ago. That's weird. Not weird. It just means they just made a bad decision, but it's definitely different than everything else. But that's just kind of telling you that now that's another worry you're going to have here. Yeah, so here it is. I can give you some more updates on it. Here's a recent event reaction. SVB's decision to sell $21 billion in available for sale securities, resulting in a $1.8 billion tax loss, comes as a surprise considering the bank's ability to source off balance sheet funds for deposit. To ease the capital hit, SVP will issue $1.25 billion in common stock and a $500 million mandatory convertible preferred share offering. General Atlantic will also buy $500 million in common shares in a separate deal. So the latest update too from their things, security losses. So this was before today. They were saying SVB is sitting on a $15 billion unrealized loan loss provision. Whoa. Yeah, you just buttered that. You drop big now. No news. The latest was Bank of Canada, but now 39.55. That is a big flush. 39.40. If you really think this is going to continue now, the next test is the 200-day and the 100-day. That's this final line over here, and now you have given up most, if not 90% of all of the Bostic bounce now. That one was a big one. Look up Credit Suisse chairman. They've been getting, again, you could even argue the bank problems could have started there. 39.55. 39.53. Futures aren't even dropping that much, surprisingly, but SPY, that is a new low on that candle. Oh, man, lots of sells. Damn, the Russell is down 1.9. SPY's down 1. Or NASDAQ's 1.1 right now. SPY going a little lower again. 39.55 is going to be big for the futures. You're already in the low on the S&P. Oh, is there no bids below this now too? There they go. They're trying to get back up there. 39.52. So another new low. That's it. You're 12 points away from the next level. Another new low. 39.52, 36, 25, 39.51. Dude, there's, again, no headlines on this. This has been all day. You've just been straight up just dumping. And then the bonds are catching a bid. $39.50, $275. All right, I bought 3 MESs for a flip to the upside at $39.50, $275. I'm going to try to flip that. And there, we'll see if it could go up to $39.60. Get out there. Jeez. Is this seat? I think it's something related to banks and bonds. That's the only thing I could explain on that. Okay, that was a good entry there, but may not last too long. And then Apple flush. SIVB is unhalted now. I don't know. It's just, I think it's all banks today. That SIVB shit is weird. So again, this was before they had $15 billion in unrealized loss position and $91 billion held to maturity portfolio. Their ability to shift to deposits balance sheet alleviates concerns that liquidity crunch would force the bank to realize losses. Meanwhile, slowing cash burn and startups opening to lower valuations can help stem the deposit outflow seen in recent quarters. And then let me see, so yeah, they had over 15 billion of losses. Then they sold 21 billion today and took a $1.8 billion loss today. And that's just all on bonds. SIVB, I wouldn't call it systemic risk, but it just looks like, I mean, not everybody was protected from making a really bad decision. In a weird way, it's like a Billy Huang trade, but it's public. And that's the company. That's it. I mean, it's not like it's a secret. Like, that's the whole point is like I'm reading old analyst comments and they've been talking about their, $15, $19 billion in losses saying, oh, they could get around it. Oh, it's this, and they're going to find a way to do it. But today they kind of just faced a setback with it. So I think because that's it. It's just bad. It's just a bad decision. They just bought bonds at the very low, and then Powell just raised the rates like a madman. Maybe more banks have the same bonds. It depends when they bought them or how they managed it. SIVB, I don't know. I mean, eventually, in a weird way, people did buy $1 billion worth at higher valuation. SIVB is hitting another low after the unhalt, but I have no idea. I think SIVB is just up in the air. I don't even know their current market cap right now. They're at $7 billion. So Roblox is worth more than SIVB. So hard to say, Habibi. Hard to say. The bill position, you don't have to close it at the end of the month. You can hold it. It'll just reset back to that low, and then you'll get paid the monthly dividend. The fact it's happening now is alarming. We won't feel the real effects of rate hikes till later this year. I don't think it's I could agree with you on that, but I think the problem is now I think this is what happens when we start talking about 6% rates. I think we found the level. Maybe this is where the bond market can't handle anything. Like, right, I think the market for the last year or so, it's done good under 4% or so. But it seems like, just like the UK, remember the UK gilts, their limit was 4%. So maybe when we get maybe short-term interest rates at 6% and this forecast of a much higher one, maybe that's where we start to run with bank tension. But I don't know. I think, again, everything we're talking about right now is assuming. That's all it is. I think you make the same amount by holding it or flipping it. So you're either going to get 25 cents a share for the dividend, or you should be making 25 cents a share on the equity. They didn't hold the bonds for so long. I mean, these are bonds that they want to hold till maturity, but you got to realize they bought all of these bonds in 2021. So they made all of this money from 2019 to 2021, and then somebody at the bank was like, yo, let's go buy billions of dollars of 10-year bonds at 1.6% right now. And then we can make 1.6% for the next 10 years. And then everybody at the bank was like, yeah, that's a good idea. So then they bought, like, what, $90 billion or a little less? I think like $60 billion or something of bonds in 2021, at the end of 2021, at 1.6. And now those same bonds are going for 3%, almost 4%. So do you see that? So now, even up until today, they had over $19 billion of unrealized losses. So they were like, it's okay. We don't have to, we only lose if we sell. But now as things are slowing down and other things, they're like, okay, we kind of need money. We're now not even getting deposits from private equity, yibbity-bobbity-boo. So then they took a loss and they decided to sell them. So by buying your bonds at 1.6, and then 1 year later, those same bonds are going for 4%, you're missing out. That's like a 70% loss, 60% loss, because that same bond is trading at a fat discount, offering a way higher yield. So they bought those bonds when they were much more expensive. Why sell the bonds if you didn't leverage? It should be a safe asset. You shouldn't lose. Well, if something slows down. So it's like I'm saying, it's like going and buying an NFT and being like, it's okay. Like, it's like having a good job. Like, let's say you have a good job. Let's say you made a bunch of money in the market 2020 till 2022, right? And then you're like, I'm going to go buy this NFT ape for X amount, and I'm going to hold it for 10 years. You're like, it's a good idea. And then the prices start going down. You're like, oh, I don't need it. It's fine. I'm going to hold it forever, right? And then you lose your job. And now you lose your job. And then now you have to pay for other things. And now this asset that you thought you were going to hold for 10 years, other circumstances put you in a more difficult position. Now you're like, okay, well, we're not getting our deposits. What are we going to do? So now they're like, okay, we could take some of the tax loss on it, but then let's get some money out. They didn't sell all of them. They only sold 20 billion only, but that still resulted in a 1.8 billion net loss right at the paper, right when you took that. So that's pretty much it. So it's like they didn't need to sell it, but it seems like everything else is slowing down for them and other issues are compounding, and now their biggest source of, money on their balance sheet, or one of their biggest, they need that money. Yeah, I agree with that. That's the second part of it. I'm not focused as much on that because that is true. That it's not only like not only did they buy the bonds at an awful time, they also invested into a lot of private equity. You see what I'm saying? They bought a lot of private equity that was just dog shit, and they bought it all at the highs. Like, they were on the Kathy Woods hype. So it's pretty wild. But I'm more worried about the bond issue because that highlights now if anybody runs into a job loss, AKA, you know what I'm saying? If anybody has a problem and then they have a big bond portfolio and the broader problem forces them to take those losses on the bonds, then somebody's fucked. Let's see. And SIVB is halted again. I'm trying to see where the investor level is. Oh, yeah, you got to add. That's good. I'm looking for something. It'll be great. I got you. Yeah, send it to me. I can find it. It doesn't come up on first search. And then another low, my negative on my MES now. Yeah, back to break even. This is where I bought in. That was a good bottom tick on there. NVIDIA tanking, of course. SIVB unhalted again. Now it's coming down. Bro, that's crazy. 58%. The CEO has already lost 60% of his pay just on that. There it is. All right. So here's the investment letter. They say, today we took strategic actions to strengthen our position, increase sensitivity to take advantage of potential for higher for shorter rates, lock in funding costs. We've sold substantially all of our available for sale assets with the intention of reinvesting the proceeds and commenced an underwritten public offering to take strategic actions which are intended to further booster that position. SIVB dying. SPY is dying now too once again. We're taking these actions because we expect continued higher rates, pressured public and private markets, and elevated cash burn levels from our clients as they invest in their businesses. That's it. Come on. Will enable us to increase asset sensitivity. We plan to increase our term borrowing from 15 to 30 billion and hedge these to mitigate higher funding costs in the future. You're dumping even more now. This is slightly below the level we were just at, though. I'm surprised. Like, you could take a look at that MES. That one's trading very interesting. You're only slightly lower, but we'll watch out here again. 39. I mean, shit, it's 39.40, and then that's it. 8 more points. 8 more points, Habibi. Damn, NVIDIA dropping too. They got me. But we did good on the NQ for now. I'm glad we had that rollover in. He will do his thing here today. That's crazy. That NQ rollover was $4,000 from the top. That's actually hideously disgusting. I think maybe those other futures will move more, but shit. Why are we flushing? I think it's the bank shit hitting And then that's pretty much it. And then breaking momentum from earlier. I think this is a mix of momentum, getting ready for tomorrow, and now some pretty bad news with a lot of counter movements and other assets there. Another new low right now, 39.46. 6 more points until the 200-day moving average. Ay, ay, ay. I'm trying to read this here. We had ample liquidity and flexibility. They didn't seem too worried. It seems like they're just doing this to try to reposition. Karuta's tomorrow. We actually haven't even had that yet. I think right now the big test is the 200-day. That's all that matters right here. All that is going to matter is that. Confident the future in the long-term tailwinds support SVB. I mean, honestly, they don't sound too worried. So I don't know. Based off of just skimming this investment letter, it doesn't seem like they are. They didn't warn of anything. I think they just kind of felt like they're ripping the Band-Aid off. And they're like, listen, man, we're going to take these losses, but we're going to reinvest it all. And since we think interest rate is going to be high, we're going to take it and move it over. And then actually in the long term, it'll benefit us. So it's kind of like they're just kind of re-rolling. They're kind of like refinancing, but they just refinanced in an awful way. So it seems decent, but my goodness. Would I put $100K in Bill if you're waiting to invest? At the beginning of the month, try to get it at a good one. But, I mean, with Bill, unless they cut rates, I mean, your only risk with Bill is if another bank blows up overnight and then they cut rates immediately. But other than that, I wouldn't be opposed to it. I mean, my first trade with it, we stuck in like $10,000, $12,000. I think they're trying to cap. I think they're just trying to hedge a little bit better by taking the losses now, rolling over to new positions, and then make better hedges. It'll buy them time. That's kind of what I got from that letter. And it seems like they didn't mention any worries. So it's not like they were bringing up issues of like contagion. They didn't bring up anything related to crypto. It's not like they said, this is going to threaten our guidance and lower it. They guided down a little bit, but then even said there is some good things that you could do beyond that. On the ES, I'm going off of SPX Cash. SPX Cash, the 200-day and the 100-day is 39.41 and 39.40. But even then, the futures are getting a little light here. And volume, I don't know. Volume on SPY doesn't seem that crazy. And then bonds are up this whole time. I mean, honestly, I think it's them buying it. Now that I think about it. Just like, I bet you they just took their loss and then maybe this is why they're rolling over. I don't know. But this is the first day in a while here, too, where the market is absolutely dumping and then people are going to bonds for protection. That's actually quite wild. The dialogue could be damage control. It could be, but at the same time, I also think, I don't think it's like too. I think the fear is worse than what's happening. I hope that makes sense. Like I keep telling you over and over again. I'm like, yo, we are just hypothesizing right now. We're talking about the scenario, but I think the fear is bigger than what happened. It's $19 billion is still a lot of money. But at the end of the day, it's like this has had way more of $19 billion of effect on all of the bank stocks. I think the fear that other banks could have this problem is a bigger worry than actually what they did. Because if they still have enough money to buy the bonds and roll over, they'll buy themselves some time. But I think the real issue is this. It's a fearful topic to be discussing. We're only down 1%, but we were up about 0.5%. So it's almost like a 1.5%, 2% top to bottom move on the NASDAQ. Every bank does have this problem, yes, because they all own some level of bonds. Some are better than not. Some hedge better than others. And a lot of the banks are connected. The chance of contagion with one bank, that's the problem because the banks all work together. Especially the bigger you are, the more connected you're going to be. It's a late cycle, but this is going to buy them time. So it's not like they're going to go underwater today. Really, by the end of the year, beginning of next year, you're going to hear about SIVB again, and if they have to make another issue or if the bond rates fuck them. SVB actions highlight Schwab cash sorting risk, says Raymond James. SIVB is resumed. $58, 56%. Yeah, Schwab is down 10%. See, are you ready for this? Here's the headline. 4 biggest banks lose $47 billion in market cap in value today. $20 billion alone. So you're looking at SIVB and you're like, oh, they lost $6 billion. JP Morgan lost 4 times that amount almost, just off of this reaction. Bank of America, $15 billion. Wells Fargo down $8.5 billion. And Citi down $3 billion in market cap. So the fear is bigger than everything. They said they lost $1 billion and they still have the $19 billion of losses. But you've lost more on valuation just off of that news than the actual damage itself. 3946, you're about to hit another low right here. Watch out. These pops are not lasting. And 0, look, you don't even see one little bid here. Bro, look at this. Usually the bid support comes in out of nowhere, but as of now, bro, there's no floor. No ceilings, no floor. What? Average on, I know, right? I mean, I'm kind of down for some more, though. But I'll just wait till jobs report. Because then that way, if jobs ends up good and we have a rally, just buy the shit out of the banks. Hopefully, though, but this is kind of this is a new development. This is what I can tell you. It's definitely looking like a new development. Yeah, that ES is hurting. It's good, though, on the NQ, though. We're getting that back, but I had to roll over that one, but no fear. The NQ is a problem of going too big, though. I did 2 real quick rather than waiting. SIVB had a problem. Jobs won't save the banks. It'll buy time. Jobs would have to surprise big time. Yeah, but it's going to be double whammy after double whammy. So it's bob and weave. Even if no matter what happens with the jobs report, you still have CPI on Tuesday. What's happening? I think good jobs today a little bit initially. It was decent. You were kind of feeling good, but then SIVB started the morning off with problems, and then it just spread to all of the banks. It looks like I would definitely blame today on that. But other than that, there was nothing else. And then you had the Biden data. TLT time. If we could find out that if we're about to turn into fucking the UK, then yeah, I would buy the shit out of bonds. But for now, this is early. But I would keep your head on a swivel. The bond auctions today were solid, actually. Even the 30-year was as good as it could be, considering most people would have expected it to be a lot higher and worse. But maybe because SIVB was a buyer today. I don't know. The headlines tomorrow, SIVB isn't alone. Yeah, it costs $40 billion of market cap on banks today. And that, I think, is probably the big story. Banks are still down 3.2. I mean, we're still hugging the lows, and we got, hour, 45 minutes left? Damn, you mean to tell me the banks are going to get clapped, and they ain't even, they ain't even going to blame this on Ethereum. If this turns into a bond issue, everyone's just going to blame the bonds now. And then all of the stuff that happened with Ethereum, no one's going to ever see it, and they're going to blame the 10-year bonds. That's crazy. This could be Sam Bankman's get out of jail free card. That's it. If this turns into a bond market issue, ain't nobody going to give a shit about crypto. But we'll find out. Biden going live on the budget. Pretty sharp. Again, 393. We'll see. 100 days stubborn, but you got to get above 39. You have to test 39.60. I think you're going to test it at least one time today. And then I think more likely you go to 39.60, go a little bit above it, everyone gets excited, and then Raul comes in, and then we make the final approach. But we still have a lot of time left. That's the only problem. Call on Docu. They have earnings today, I think, right? I'm a big fan of selling covered calls, especially as of late when we had these rallies. I'm kind of mad I didn't sell my Snap the other day and the Abby Vibe, but so far, covered calls have been great. Even on any of the long-term covered calls ended up working out for us very well, actually. There's so much I wasn't expecting today. Like, I wasn't expecting we were going to hit 40.17. I thought that was no way. And then we hit it in 20 minutes? And then you sold off of that, and then this all just developed. And meanwhile, SIVB has been going on since the morning, but then it just snowballed into some crazy shit. You know what I'm saying? Today had no respect at all, and a lot of sketchiness in the sense of imaginations are running wild. Now your imagination is thinking about the jobs report. Now your imagination is going towards the banks. It is quite the ride. This feels like the pivot point. We got to give it a couple of weeks. Because like I'm saying, I think SIVB could be big, but it's still too early to tell. And they're at least bouncing here. There is a very thin line between imagination and panic. Amen. U.S. Treasury releases Green Book with full year 2024 proposals. And now you have Biden. Norfolk Southern is testifying. SIVB, all the banks are moving here now.
The middle class
The middle class does well.
Poor have a way up, and the wealthy still do very
We're gonna
well.
fuck shit up.
And third
Okay, I'm
one
gonna
is
go
to unite
pee.
the country. Didn't think we could do that. But as we've seen, all the talk about we never get any cooperation with the other team. Last 2 years, we passed some pretty big things with bipartisan support. You know, I ran to grow the economy from the middle out, the bottom up, and not the top down. And I know when I grew up, my dad's kitchen table, not a whole lot trickled down economics into my kitchen table for my dad. That's why I wanted to come here today and lay out the next part of my economic plan. My budget I'm sending to Congress today. If I could hold for just a second, I want to be clear, and I'll be clear to the press as well. The fact is that the Speaker of the House he's a very conservative guy, and he has even more conservative group with him. But he and I met early on, and he said, what are we going to do about budget? And I said, well, let's make a deal. Let's meet. I said, I'm going to introduce my budget on the 9th of March. You introduce yours, and we'll sit down and we'll go line by line. And we'll go through it, see if we can agree on it, or we disagree on, and then fight it out in the Congress. So I want to make it clear, I'm ready to meet with the Speaker anytime, tomorrow, if he has his budget. Lay it down, tell me what you want to do, I'll show you what I want to do, see what we can agree on, or we don't agree on, let's see what we vote on. Now, I'm not going to lay out the entire budget. That would take the rest of the day. But no, it's a detailed budget. But I want to give you the contours of what we're for and how it's in stark contrast to what appears to be what the other team is for. And my dad had an expression. Someone would come up to my dad and say, let me tell you what I value. My dad would say, no. Show me your budget, I'll tell you what you value. No, I'm serious. My expression my dad would do, show me your budget, I will tell you what you value. Well, folks, let me tell you what I value with the budget I'm releasing today. I value everyone having an even shot, not just labor, but small business owners, farmers, so many other people who hold the country together who've been basically invisible for a long time. So at the end of the month, after working like the devil, they just have a little bit more breathing room, my dad would say. After you pay all your bills, you're sitting at a kitchen table writing out the last bill, you have just a little bit of breathing room. So my budget reflects what we can do to lift the burden of hardworking Americans. And there's more than one way to do that. And that's what brings us down to everyday cost. How much do things cost? Not just whether inflation. We brought down inflation 7 months in a row. We're going to whip it. But in the meantime, there's other ways to take what is inflation in your budget. I just met, I won't embarrass them by pointing out, I don't have permission, but I just met a woman who has health care costs that are $600,000 a year, $7,000 a month. Well, guess what? How can you possibly deal with that? Well, we just dealt with it, by the way. We just dealt with it. For example, prescription drugs. We pay more for prescription drugs in America than any other advanced nation on earth. We say it again. In the United States of America, for whatever prescription drug you're buying, you're paying more than any other nation on earth, advanced nation. We're finally beginning to change that. I've been fighting that for over 30 years. Because of a law that I worked on for decades, and that I just signed last year, we took Big Pharma on, and we won. For the first time, we won. The other team didn't have a good idea.
We did it.
None of them voted for it. They think Big Pharma should be able to make extraordinary profits, exorbitant profits at the expense of the American people.
How dare
That's not hyperbole, that's a fact.
Not hyperbole.
Medicare finally has the power now.
They got
to
it now.
negotiate for lower drug
Let's make a negotiation.
By the way,
Yeah,
they've been
listen
able
up.
to do that to the VA.
Yeah, you know what the VA?
VA, they're able to say, we're only going to pay X amount of dollars.
Yeah, they do that shit. Nah. 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 Nah, it was me. What the fuck he said? Yeah.
They couldn't do it for Medicare.
Couldn't do it.
Now they can.
Now we can.
And it's going to
Let's
lower
go, baby.
prices for seniors. Here's the deal.
I need to be the hype
Not
man.
only, for example, the woman I just mentioned.
Yeah, Janine.
In 2025.
Guess
will
what?
Not have to pay more than $2,000.
Nada. 2,000. Nada 2,000. Yeah. Yeah.
Folks, it's not just going to save people's lives, it'll save people money. So they don't have to go
more than money.
bankrupt and try to stay.
Fuck BK. They ain't SIVB.
Save the government.
We're going to save the government, bro. The government won't save you. You save the government.
These guys keep saying, how are you going to cut the deficit?
Yeah, how?
Well, guess what?
Guess what? Listen up.
Your tax dollars don't have to go out paying all that exorbitant price for Medicare to drug companies.
Tell them.
It's rational.
Tell
It's going to save $160 billion in tax dollars.
You hear that? 160. 160. 160. 160 billion.
Americans have diabetes. They need
How
insulin
many?
delivery to stay alive.
We're going to keep them alive.
How many people know somebody who needs insulin for the diabetes?
Raise your hand. Yeah, exactly.
Well, they're paying
No, don't clap. Raise your
between
hand.
$400 and $700 a month.
They getting scammed.
They
were until I came in.
Well,
Hey, man,
what?
tell them.
That insulin was invented.
Tell them. We invented that shit.
I mean, literally 100 years ago.
100 years ago. That's a century.
You know how much it costs?
You know how much?
Make
Run the
that
numbers.
insulin?
Do the math. You got a calculator? Huh?
You know how much it costs?
You know
to
how
make
much?
it
Go,
in
get it out. Calculate it. Calculate it. Calculate it.
$13.50.
Yeah, 13, bitch.
The charging, the kind of money they charge?
That's a scam.
Guess what?
Guess what? Oh, it's over now.
Guess what?
It's over now.
Now
It's
we've
over
lowered-
now.
We've lowered the cost of the insulin.
Ooh!
To maximum $35 a month. I was at a town meeting in Northern Virginia last year. A woman stood up and she was a little embarrassed to speak. She said, I have two daughters with diabetes.
What's up?
And I can't afford the insulin.
All right, thank you, Joseph. Always a pleasure. Always a pleasure. That was cool. I like the hype man. I don't know. I was just getting too into it. I've heard that speech for like 37 times in my life. So at that point, I figured, why fight it? And I should just start rolling with it. You know what I'm saying? That was a lot of fun. That was the same one, but it's good. You got your budget today. Don't worry. Powell, more of a likelihood to destroy your life than Biden in many different ways. So, yeah. It's not, none of that was hyperbole. No, none of it. He really means it. I know, I'm just re-enchanted by that speech. I know, it got me excited. That's good. I made your day. I hope so, man. I hope so. Some people, that wouldn't make their day. So that's good to hear, man. That's good to hear. You've been listening to the speeches since you were 3? Not since roughly 2020, 2021. I think we've heard Biden more than 37 times. I don't think he goes on once a month. Or once a year. It was in the first year, but no, we've heard that one a lot. I'm hyped. SIVB had a little bit of a bounce there, but we got an hour and a half left, Chad. That was your first little mini bounce here in a while. So let's see what happens. Listen to budget speeches? No. Even though that is a budget speech, it's the same. I mean, that's borderline. Did anybody hear anything new? They need the Bear Stearns horn from earlier. This one? I got you. They were talking about the Tel Aviv thing this morning. There's a lot of things going on in Israel. There's shooting, and then the court, they're trying to stop the Supreme Court. They got a couple of things going on, and bonds are dropping now finally. So 90% of this rally the bonds are moving opposite, and now they're kind of moving in tandem. And then the dollar hit a low of the day on that, which is wicked. What did I study? I studied political science and philosophy. And then I ended up on Wall Street. What a waste. Right. And then my teachers are mad because I would read my Bible too. So now it's just like, you know what I'm saying? Just like, I should have either went to I should have worked on Wall Street, or I should have just went to missionary school, you know, but now, I don't know. I think I just confused myself. This drop is insane. I mean, I love that comment somebody in the chat said. Very simply, there's a fine line between imagination and panic, and that's kind of where I think we're at. So you went to 39. I thought we go to 39.60 and then the flush, but not so much. Okay, you're dumping that quickly. All the orders came back here. Apple flushing into the low. I think banks got a little bit of relief, but now this is tech and everything else. Oh, yeah, ads should be coming in. It's good. It's good. Stern Bear. I think that was all the fangs there. Where's even NVIDIA? I can't believe it. Right when I close the NVIDIA, it goes right back down. Yes, love thy ads. It's good. Don't worry. I mean, have y'all ever watched TV? So if you get 2 ads an hour for 7 hours, that's 14 ads in a day. But I swear I watched TV the other day and it was 14 ads in 12 minutes. So it's not bad, but it is kind of annoying. YouTube has kind of boxed us into a weird ad strategy. Because then I was able to have it turned off, and then we turned it off, and then they start putting ads. So then you're like, why are you putting ads if I'm not getting paid for it? And then you turn it on, and then right when you turn it back on now, they start adding multiple mid-roll ads, and then it just gets weird. It wasn't this many. I mean, there was a solid, I think it was 9 months of 0 ads at all on the channel. And then I just remember that one day you guys are like, why are there ads on here? And I'm like, there shouldn't be. Because I had monetization off for a very long time, and then we were still getting ads. I even checked on my phone; you would get ads still, even if I didn't monetize. So then we turned it back on because we're like, you're just scamming us at that point. I did have to sacrifice for NVIDIA. Biden, yeah, we were just listening to it. He's pretty much announcing the budget. I'm getting murdered on those Bank of America shares. I'm actually shocked. Dude, this banking thing is weird today. Apple, another new low. SPY, another low. Even down on the MES now for that bounce. The banks is SIVB. Today is just slowly turned into a panic day. That's it. 39. Bro, you're at the 100 day right now. Mm-mm. 39.42. This is it, Chad. Even the VIX is up. VIX is at 20. This thing was dead the other day, but it's still kind of subdued here. But that's it now, Chad. We're hitting the level. This is going to be the moment of truth. Wait, why did rate hike odds just plummet? Whoa, 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 whoa. Hold on. That's weird. That was at 2:15. So that was 15 minutes ago, right here. That's probably why you got your bounce. But, yo, that's actually why. Bro, this is tweaking. Bro, everything's tweaking. Today's panic. That's it. There's no, like, even the fact that rate hikes just moved down 20%. Very, very weird. It's at 66%. No, it was up. 30 minutes ago, it was at 80%. It was at 81% while we were dumping, and then you just hit that new low, and then banks keep getting a little worse, and then now all of a sudden rate hike odds have dropped by 20% for no reason. No, that's not good, because it's kind of like in the sense now, if people are pretty much, if you get more worried about the banks, what's going to happen? Yeah, recession fear comes back, and now people are like, we can't have rates that high. No, there's no way. Maybe if the economy deteriorates too fast, then they can't do 50 basis points. So now let's give it 15 more minutes, but that's a surprise development now. If you thought today was surprising, you could add this one to your list right now. The rate hike odds just dropped the most they have all week, I would argue. At 3.7, so 2 days ago. Yeah, 2 days ago. Today's Thursday, so Tuesday. They're back to the same odds of Tuesday now, I think right before Powell started talking. Very weird. That's an interesting one. The disconnect on SIVB. They talk about their expertise, etc. If they were all that good, they shouldn't have been in this position in the first place. I do agree with you on that. However, the last year, everybody, no matter how good or bad you are, everybody has been able to use unprecedented as one excuse. You get like one or two mistakes you can make in the last 2 years, considering last year's stock market was one of the biggest historical changes. So, like, honestly, even if you were a professional money manager and you lost the money last year, nobody really crucified you just because it was one of the worst years in literal stock market, bond market history. So, I think it was kind of wrong place, wrong time. I don't, they've been around for a while, but it really just boils down to they made a very big bet on bonds at just historically the worst time possible. They top-ticked the generational high on bonds, which is weird, or the generational low, but that's about it. So, yeah, SIVB sinks most on record after liquidity sale. They sink 60% on Thursday after offering $1.2 billion and announcing sale of $21 billion of securities. Multiple analysts have pointed out that high deposit outflows as the catalyst for liquidity sale, which stoked fears from the banking industry as a whole, sinking the KBW Bank Index 7%. This is the largest drop on banks since 2020. The security sales represents nearly all of SVB's financial available assets for sale and will result in a $1 billion after-tax loss sale in the first quarter. The capital raising effort should cover the losses totaling $2 billion. And Truist analyst Brandon King says the increase in balance sheet asset sensitivity should lower the left tail risk to higher interest rates, but expect material value per share dilution from the proposed capital raise. The proceeds from the sale are expected to be reinvested in short-duration U.S. Treasuries and hedged with received floating swaps. KBW analyst Christopher McGrady says SVB financials will exit 23 on a notable lower earnings run rate due, and it's possible that 2024 estimate is in the $16 to $18 a share range, pending the price of the capital raise. They say balance sheet management for the group is unquestionably front and center, and it's possible that banks' more volatile flighty deposits could trade lower on this news. Evercore, John Pancari says we favor their strategy to shore up liquidity and reposition balance sheet for increased sensitivity, particularly in lieu of the Fed's more hawkish tone. Management's updated outlook reveals incrementally weaker deposit dynamics and output of more resilient than expected client cash burn trends and the likely catalyst of the move. Jeffrey analyst Casey Heyer says the balance sheet restructuring will boost net interest income and nudge capital ratios higher, but also reveals SVB's financial ecosystem is still challenged due to higher for longer interest rates and a surprise pickup in client cash burn. And Bloomberg, Herman Chan says this comes as a surprise considering the bank's ability to source off-balance sheet client funds for deposit. Yeah. And then that's it. Everyone seems positive about it. You closed on the house. Let's go, Xavier. God bless you. God bless you. The banks are dying, but your personal bank is looking good now with the property. Amen. Amen. That's crazy. This is the biggest drop on the banking index since 2020. The KBW bank index. I think XLF's moving a little different. But that's actually wild to think about. I don't think March 2020. I think like August, like right here. So it's not close to 31 to 17, but even then, this little drop, I think it's like August or June of 2020. Bill pays out for a month. So it's variable. It changes, and that's kind of the problem, that it's kind of skewed. It obviously depends when you get it and whatnot, but I think the dividend on the stock is like 3% a year, or if it is 4%, it's spaced out over the year. That's kind of like the 3-month bonds. So those short-term bonds, they say 4%, but I think everybody kind of is is it 4% annualized? Is that 4% after 3 months? It's kind of hard to tell, but then obviously the variability just depending on when you buy it and how much you pay for it. Intercontinental Exchange responds to FTC. Bond. We'll see. This could be the first time. This will be the first time the bond market is actually fucking up the stocks since we started raising rates. At first, everybody was panicking when rates would go high and they'd sell tech. That was just off of the general notion. But this is the first time we're like, okay, a bank is losing a lot of money off of old bonds. And now if their deposits start to dry up, they need money, and now they don't have the money, and then anything they'd want, they're forced to take gigantic losses on those old bonds. It's very weird. This is the first time in this whole cycle that this has happened, but this is only the first 7 hours of it, and this could all be here today, gone tomorrow, which I'm sure you're familiar of. What happened to the overnight money they were making for the Fed? That's interest on excess reserves. And then I think the problem is now, too, if your client's money leaves, and like we were talking about, there's a good chance client money will leave in banks if you could get more money at the Treasury. So and if your deposit rate is only paying out 1/3%, most people will pull out their money and just go to the Treasury or anywhere else. So that's part of it too. But it seems like for SIVB, it's one part their bad bond decisions, and then another part the fact that they have a lot of clients who are taking money out. And that's because they fund a lot of tech and growth, and I'm sure there's some crypto exposure in there. Tomorrow's data is 5:30 in the morning, 1 hour before the bell. So that's where you're good on. You don't have to wait too long. Real estate been going last 2 months. Is this only short term? It could be, especially if rates are higher here, and then it kind of depends what happens. But that was the first run up in Canada in a while. I mean, American real estate, it's came down, but it's still been up year over year. But a lot of people were surprised that the drop in interest rates in the last 3 to 4 months fueled a lot of activity. I think it's going to be more temporary, but then it just depends on what happens with the rates here. They appear to have mistakenly large deposits because of the tech scene. I think they just didn't expect people to pull money out like that. So now factor in massive tech layoffs, factor in private equity declining, and then even crypto. I don't think they were expecting their clients to need that much money. So they were good. They're holding all of this money. They pretty much just had everybody pull all of this money. I think what's scaring the market today is the anticipation for tomorrow, and then this banking issue. That's it. Just right now, financials, this is one of their worst days since 2020. And it's just now, I think you got a little bit more fear or potential problems starting to worry people left and right. I think fear of contagion or anybody else in a similar position. I don't know if Kramer was in SIVB. AXP, they're down 0.4. AXP just raised their dividend. BJ tonight or tomorrow? I think it could be tonight. Or it could be tomorrow. But I'm thinking tonight based on the clock. So their options are unwind their positions, take huge losses, or run out of money and default on other debt. Borderline, yeah. And SIVB is about to hit the low again. What you need is just all the banks to detach from them. That's it. The problem right now is that they are all going down with it. So if you could get SIVB to just dump and then the other banks don't die, then we'll be good for a little bit of temporary relief. But again, SIVB just got halted again at the low. And then 13 minutes till power hour. And if we start selling off, it's bad. I don't know the 200-day on the ES, but the 200-day on the market is 39.41, and then the 100-day is 39.40, or it could be flip-flop. Oh, BZ's, baby. God bless you, my friend. God bless you. 5 stock market. 5 of them. Where my whore at? I can't find my whore. Where's my whore? Let's go, baby. I had to stand up for that. That was good. Oof. My legs are sore. SIVB private auction price is 105. Oh, my gosh. That's crazy. So they weren't even able to get capital at the higher levels? That sucks. Because then that means they're going to have to dump way more equity. They're going to have to dump 60% more shares just to get the billion. Someone is up 1,000,000% on SIVB puts. That's crazy. I could only imagine what they were at in the morning. Oh my gosh, $90 to $2,700 on the furthest out the monies. Last time we hit over 200, we did bounce, but here's the problem. You already had your free bounce. First one's free, baby. So remember, like I showed you here on like even the 39.60, every single time this has happened, you get to go below it, you get one free bounce. The only other time in June, you got the second one, but any other time we break below it, unless it turns into a massive rip, I mean, that's it. It's usually done. I mean, I guess here in November you had it a little bit, but that one was not looking good. You dropped a little bit of punch in the face, and now you're back down. But VVLC, you're near the low. You're 2 points low on the futures. $39.43. We are coming into the 200-day now. VIX is back on the high, and 10 minutes till power hour. Look at the 420s, 20 cents. Oh, I didn't even look at April 20th. Dude, this percentage is crazy, yeah. They're going for like 40 cents yesterday, gapped up to $15, then went to $7, and then went up to 4,000. The cheapest ones in the morning would have been $6, but if you had those prior, you literally are up, I think, that's 16,950%. Mm. 39, 43, 42, 46. So you're within half a point of a new low right now. Baba coming down. Yeah, you're going to retest the 200 for sure. We have way too much time. I mean, why wouldn't you? Even then, you haven't even, I'm waiting for a 39.60 bounce eventually, but 39.41, and then if you break below here, sadly, if we flush 39.40 and go to 3900, which was extreme in my opinion, but then 39.60 is out the window, and then it's all about 39.40 again. China, I think everything globally right now. SIVB is resumed. 39.41 Chattadonia. That's it. This is your 200-day moving average test. This is big. Very, very big. This is going to make tomorrow that much more interesting. Because now the question is, what happens if the job report comes in good, but then the banks sell off another 4% today? That's the thing. This is just now just getting weird. Mm, 39.40. Very big gap between the yen and even the bonds here too, though. That's the wildest part about it. And then the job, I don't even think the dollar is up. Dollars are still down on the day and then right back to where we opened. So equities have moved by far more than anything today in their own little world. Yeah, I got the Tesla. I'm down like $20 a share almost on that. SIVB calls going up. We flipped it this morning. I'm glad we got out of it. for $10 a share, or I got $100 on it, you would have lost. Even on 10 shares, you would have lost the bag. It's actually crazy. Picked up more Walmart. I haven't even checked that. And I got out of the Google today. I could have got revenge on Mickey D's, bro. Could have got revenge. Mm. 39. This is it. Your 200 days right here. 200 day and the 100 day are literally at the same spot right here. Let me check on the SPY. Yeah, this is your 100 day. This is your, look at, they are right here, Habibi. It's pretty much SPY a little lower. And another new low. 39.40 now. So anything below 39.40, you break both moving averages. And then this is all in the face of just a lot of bank fear for now. 39.39, you have now went below the 200-day for the second time in 2 weeks. So this is where the bid support's coming in, and it's 4 minutes till power hour. So you got a little bit more time, and then we'll see the power hour shift, but this is it now. We're going to start kicking things into drive. Just like yesterday. I think even power hour yesterday, you got a little bit more, and then 30-minute ramp capital. Banks making new lows. That's not good. XI or SIVB still at the bottom there. But if all the other banks keep selling off, that's the pressure. Banks are down 3.5% right now. Materials 2, real estate 1.7. Best on the day is consumer staples down 0.4 now. 1.3 on the SPY, 1.4 on the NASDAQ, 1.1 on the Dow Jones. I did make NVIDIA go down. I sold out, so I got y'all. I got you $600 on that. $6 a share, bro. It's a big move for the Russell. I'm down $200 on the MESs. That one's not that bad, but I thought I had a good entry there. I think we're going to get one bounce eventually today, but it's still, that's it. I think the fear is out, bro. I think today is definitely a big shift because you had a little bit of goodness with the jobs report, but this is definitely like the fears came out today. I mean, at least I'm more fearful off of this bank shit than anything. 39.39 even on the futures. Low of the day is 39.37. Oh, man, that's it. 39.41, nothing below this. I think if you go below here, it's just 3,900. CPI's on Tuesday, jobs reports tomorrow. Yeah, that's next level is 39.30. Even maybe like 39.28 is the previous low. Or next level is just 3,900 flat. Senator presents bipartisan bill to ban Russian uranium imports. Mm-hmm. 39.37. That was, dude, this is massive. It's massive and it's in its own little world. This is more violent than any of the other days. This is just straight up outside of any narrative you've seen today. which kind of I think that's your random headwind out of nowhere. 39.3681. You just hit another new low on that candle here, so it's not over yet. Yang is on the high. Snow. This was just kind of the bank stuff slowly simmering in the market. You had Biden's budget, and then that was pretty much it, though. I don't think you could even put your hand on what, like, the only event today that was bad was the banks. Other than that, you actually woke up positive after kind of slowly being negative. Power hour, first green candle. So 1 hour left, Chattadonia. CCJ off of that. And then watch out. That bounce might not last here. You just had a little green wick at first minute of opening. Oh, CCJ's running. They've actually been holding up good. CCJ on the uranium news. Chemical. The crash continues. This is made tomorrow that much crazier. Nothing really happened since you left. This was just a matter of the bank. I mean, SIVB just got 30-40% worse. And then that just started hitting everything else. VIX over 20 is danger. Yeah, I even quickly got up here, but it's still pretty low. No, we did not add to the LT. I mean, all we've been doing is holding cash that bears interest. And it's good, but the shit we want ain't even low. I mean, 3M kind of, but like Altria is green today, man. It's bullshit. Rita. Nope. Going lower. Chad, you're still below the 200-day. This is why it's wild. You got to realize your next bounce is going to be a test of the 200-day moving average here. You're going lower. 39.35, bro. Chad, it's slipping. So watch 39.28 is your next level, your previous low on the day of Bostic last Thursday. So 1 week, peak to trough. You've already came right back down. The Qs are on the high now, 39.35. CCJ came back down. Even Boeing's even going down. That's how you, Boeing and McDonald's going down. This is how you know. That's it. Your defensives, everything is red right now, and that's after being up. It's about a 2% top to bottom move now. Oh, Walgreens, if it drops a little bit more, let them get to like the low. Yeah, it's getting ugly on all fronts, even Tesla. Everything now. I'm ready. How are you, though? I'm good. I'm disappointed now with that ES. How the fuck did I trap myself twice? But at least I know the NASDAQ's going to come back if this gets worse. So it's good. We're just going to be switching gears between up and down. But I'm just surprised the way this is all playing out, man. I'm telling you, this is now, today is very, very unique. I mean, this is it. Especially day ahead of data. If you wanted any, today was looking perfect to calm down and then just wait for the data. But now this is like, this bank issue fear is, and the part about it is that the worse it gets, the more it could spread. And that's kind of the problem. 39.32, 5 more points away. And I got my child support back. I know. Tough life. SPY pays dividends less than a treasury bond. That's it. Amazon, Apple, Boeing. High ticker is just straight volatility indexes. That's it, man. It's done. Dude, this is getting extreme. If we break 39.28 with no bounce, I think you're going to go to 3,900 flat. But this seems wild to me considering nothing happened except for SIVB. Energy's down 1% now. Hardly extreme. What's extreme about it is both the speed, the velocity compared to every other day of this week, and then now too, every other factor is moving in the opposite way, and banks have lost over maybe like 50 billion now at this point. Sorry. But you haven't seen this velocity at all. I mean, even the other day, this makes Powell, when Powell's comments, today's moving like Powell spoke without him saying anything. And compare, dude, you're at 39.30, so get ready. 39.28 now. You are coming into the level here. This is not stopping. Final hour. I mean, even then, even from power hour, you're already down 10 points from the 100-day or the 200-day now. I think people are digesting Powell. I think it's, and then again, Fed future odds have dropped. They're at 69% right now, which is the irony. Added to the greedy short. You're getting it. I think 39.30, and then if it really gets ugly, you're going to 3,900 flat. Ulta, did they already have their earnings? I know it's coming up. Yeah, 0.01 down. Microsoft's only barely down. That's actually crazy. Apple's down 1%. I think this is just the banks weighing on the S&P, because not every name, but it's still like a solid 1% down on tech now. The VIX doesn't care. The MOVE index does, though. The MOVE index has been going good. PayPal, they're still in the green. NVIDIA, I mean, it's higher than yesterday or 2 days ago, which is the irony of it all. See, 39.30. Chattadonia, get ready. 39.30, low is 39.28, and you only wicked into that for 5-10 minutes the first time around. Yeah, this is no good. You didn't even respect the 200-day. So I don't know, my technicians out there, that lack of respect. How do you feel about that? Because that does not look good. $39.28. Dude, it's doing it. That's it. You flushed 39.28. You're 15th of a point away from there. And then there it is. New low on the week. You are now going through. All eyes on 3,900. I don't know if that's going to be another hour of straight selling, but you've already done in the first 10 minutes of power hour, you did 10 points. So, I mean, realistically speaking, we could be there by 3:30 ramp capital. And then you'll have to wait till the money comes in on that one. It's not everything. There's a couple of names doing good still, but like everything is down right now. Even the safest industries are down almost 1%. But it's still, I think financials is almost 4% in a day. I think the 0 days are exasperating this. I think it's banks. I think without a doubt, hands down, we got to We have a new issue. We finally have something new to worry about, which is kind of bittersweet because now we're not talking inflation. We're not talking all this. Like, you have a new worry today if this goes beyond today. That's all. If you hear about this bank shit into next week, you have a new problem to worry about, and you have not had that in a very, very long time. Now you're coming down at this green candle. It could try to dance around here at the previous low, but the pressure is still very big, and it is borderline lower volume here. We're at 68 million. I guess you might get up to like 70, 80 million, but it's not as high as the last couple of days. It's the bank that broke the camel's back, yeah. Terminal. I think that will be the next stage. That's where we're going to start. If that's where the narrative goes, I could definitely see it. But this has to last beyond today. That's it. Just let the reality of the situation is, if that jobs report comes in good, everyone's going to forget about today. But we got to watch how this situation develops. Because then that's just going to make it to the point of we're finally going to have a new worry in the market where now people are saying, okay, well, now 6% bonds threatens collateral for the banking system. And boom, there you go. Took SIV people to realize this. Well, nobody has had to. That's it. Nobody had to wake up one day and say, hey, we're selling $20 billion of assets and we're going to lose $2 billion because everybody took their money out and now all of our bad bond positions are eating us alive. What? Hear about contagion for the next 2 weeks. It's not even there yet. It's not as if everybody's like freaking out about this just yet. Like, low key, like, we're early on the freak out. But that's why if you ask me to explain today, I would put 100% of it on the banks now, considering there was nothing else about today. And you actually had bullish impulse to start the morning. Bro, again, another flip there. You're going down a little lower. 39.27. 39.27.99 is the new low. 39.27.86. Get ready. You might be able to go down to 3,900 flat now. Feels like when Russia invaded, yeah. You haven't had big move. I mean, these are back to the days of moving a lot bigger. So it's both good and bad, but it does feel like those early Russian days where you just get one of those and then every greedy short would have hit. You haven't seen that in a while. Volmageddon. We were talking about Volmageddon. This is the closest now. If the banks have a bond issue, then there you go. So you just hit a new low, 39.27. put out a stream alert just kind of highlighting this and just being on watch now, 3,900. And then today has just already turned into a big day. That's it. This panic level is kind of weird. We were green by a decent amount. I think the banks will bounce back unless we have to answer these questions, unless we find out there's a lot of other people with this problem. Meanwhile, NVIDIA pinned orderly exit is good. So excited. Tomorrow's going to be insane. We're going to be here live an hour before the bell, or like 15 minutes before the data. I'll come live, but this is it. 39, dude, you're hitting another low. What the hell is happening? Credit crunch of 2023? Maybe this and that. We haven't heard that in a long time. I guess, like I'm saying, the bittersweet part is now you finally have a new worry that actually makes sense. So it's going to be very easy to monitor, but it's just going to be slow. But it's also now you have a new problem potentially. We're very early though. We're very, very early. 39.25, another new low. This is not stopping. 1.8 on the NASDAQ. That's over 2.5% now almost intraday. Quali actually dropped. Boeing 392? Damn, son. So you're lower than this point on Thursday. I think anything below here, 390, that just looks a little ugly, but that is the next level. Short these. Usually, I was going for a bounce play on my MES, got smashed on that, trapped on my ES from 2 days ago, and then I just have the NASDAQ working for me. And I have like 2 or 3 other short plays that are coming back, but definitely not enough there. But the NASDAQ I'm very confident in. He has more meat on the bone. So, again, that ES sucks, but he's going to find a way. And then I'm waiting for I think after tomorrow we'll really know what's up. That's it. And then tomorrow you'll get one final reload or bounce, and then that's it. And then you will have CPI, but if we are dealing with something else, then we'll kind of know what's up. I bought 10. We flipped out of SIVB earlier. Dude, you just flush on that candle? Bro. Oh, man. You have 42 minutes left. Even that fine, dude, 39.21. Let's see where we go from here. But that's, I'm just looking. It's either 3,900, and now, like I told you, instead of 39.60, you're probably just going to bounce to 39.40. $39.22. It's still going. With Biden capital gains, probably not. I don't think it is. I think this is banks. That's it. Banks are single-handedly down $40-50 billion right now. Like, that's it. If you're looking for anything, everything else you got to kind of explain. But you could also just look straight at the banks and be like, oh, something's probably happening. 39.19, you're going a little bit lower now. Bro, this is not stopping. And I've probably said that 100 times by now. So just wait for 3,900, and then you might get a move if you're lucky. Crypto exchange KuCoin sued in New York's crackdown on industry. Damn, Tesla 173 now. Apple's plummeting. Boeing below 200. Everybody's getting the smoke now. Even utilities down 1%. They were up 1% earlier. SPY is down 2%, 1.9. SIVB, we talked about it. I'll probably give you an update on the watch list. And then tomorrow we're going to be here early for the jobs report. But now this is it, bro. This is 100 points in the day. SPY top to bottom is literally 100 points right now. Mm, 39.15. Low Apple like 140. That's just for a short term though, but we'll see. Yeah, Schwab is down a big amount too, but even your other ones are, oh my gosh, 390. You're going to 390. That's it. It's 39.12 right now. That's another 10 points, even since we gave the earlier call out there. That's actually insane. Chad, your panic is setting in right now. This has been nonstop volume of just selling. This has not changed. Volume is still borderline low, but the future's been selling off. You're now well below the last week's lows, at least another 10, 20 points here. 39.11. Futures are even about to test 3,900 too. Volmageddon. I think Bondmageddon. If the bonds lead to a liquidity problem, possibly. Find out on the next episode. How much can it drop? It could drop a lot without CPI. We went up a lot without CPI. And I think actually last CPI was right here. So technically speaking, you're going to be borderline at the same CPI level that you had when this year started. So you're actually back to first CPI of the year, and then you have jobs tomorrow. But even then, though, now it's very, very ominous. I mean, jobs, you could be hopeful that jobs bring you back up here, but it's very like, no, it's like if jobs are bad tomorrow, I don't even want to know, man. I don't even want to know. You're going to 3,900, plummeting. So 39.08. There you go. That's a 10-point bounce from the wick to where you're at right now. Time to make it free. I would ghetto spread it. It's just a matter of if you want to take money for today, you take it, book it, call it a day, and then wait for the data tomorrow. If you think you could parlay it into something big, I would ghetto spread it or hold it. But that's it. All that matters here right now is do you actually, is it 3:30 yet? No, 7 minutes away. All you need right now is figuring out if you want to play the jobs report. EPV. I forgot about EPV actually. So that's good we have that. A little bit. Could be doing a lot better. We need more on that. And the bonds are up today. That's the funniest. A lot of billions have been wiped out. If anything, more money was wiped out from the bank stocks. No, this has nothing to do with the banks pricing in 50. The odds dropped by 20% today. I'm telling you, this is bad. That's it. This is like straight up. This is like it just smells of panic all of a sudden, and that it's very odd because I definitely wasn't feeling that. I was expecting volatility. I was expecting the next 3 days, boom, bang. You know what I'm saying? Like one data set at a time. But nah, this is like, dude, your bonds are catching a bid now. Your dollar is down, and even the rate hike odds are dropping. That's not like, that's how you know it's bad, is the thing that was bad is now turning good and you're still doing bad. Does that make sense? So it's like at first we're like, rate hikes. No, we don't want higher rates. And now they're like, oh shit, the banks, we should probably not have higher rates if something else happens with another bank. So it's definitely it's a fine line right now between anticipation and panic. That's what I'm saying. So it's not like, but it's on the cusp of it. But you haven't traded like this in a minute. If he drops out, he can't now. We run back into that problem again at the end of last year, where now everybody's looking at the data, and now Powell can't raise rates if you have a bank problem. Like I said, today could be another piece of the puzzle that we have not seen in a while. Every other piece of the puzzle has been kind of connected. You weren't reacting to anything new now, and now this is a whole nother issue in and of itself. It could go away here today, gone tomorrow. Yeah, it's only 1.9. It's 2% on the NASDAQ, 2.5% from the top. But like I'm saying, all the other factors, rate hike odds are down, dollar is down, and the bonds and bond yields are down, and then your stock market's down. So there's definitely a new element today of what we got here. It's just different, just slightly different. It's borderline panic. It's panic that we've seen, but like, again, I'm speaking from the context of this isn't anything new. I mean, what I mean by the data or the info today is new with SIVB, but what isn't new is that you have watched the market panic over the UK situation, and within 4 to 7 days, you're back to normal. You're back to where you were at prior. So I think that's still possible. It just depends. I mean, you're not even hearing people really talk about SIVB too crazy today. It's where we go from here. So right now it doesn't look good. There's been days where we watch the dollar or the bonds bounce and the market would drop, but now, you've watched that unwind within a couple of days. So that's all we're waiting for. The bank in question is SIVB. Oh, I thought Boeing was SIVB. This guy right here, down 60% right now. Like, all it takes is people to wake up tomorrow. Like, I read you 5 analyst comments. They even sound pretty favorable towards SIVB. All they got to do tomorrow is say, oh, it's an overreaction. We believe this. We believe that. Money comes in. Then a bunch of people buy the other banks, and they're going to be like, oh, JP Morgan's not as bad. We believe they don't have the same exposure. You see what I'm saying? So it all depends on how this plays out. And then, unfortunately, this is all just correlating now with gigantic data sets and also a very large budget that was released today by the president. Banks have not sold off this hard since 2020. You have not had a collective sell-off on the banks since 2020 of this nature. It's a KBW Bank Index, or KWB, is down 7.5%, 9 or 8% right now. To be honest, I got the MES. I played it on this drop. I thought we would get the flush because I'm like, dude, bonds are up, everything. I thought we would get a little bit of bounce, but no. Oh, this isn't going to load up. Yeah, bank index is down 7.8. So this is a modified cap-weighted index of 24 national market system stocks representing national money center banks and leading regional institutions. So the chart on E-Trade, don't look up. Watch out, 1230. 1230, if this turns in the ramp capital sell-off, that won't be good. So get ready. Apple's even coming down here too. Oh, bro. I'll show you two charts for now. So this is the BKX bank index, or BKW, but as you see here, this was from what? That's from January till now, and then this little segment right here, I mean, this compares to 2020. So if you actually take from January, so right here, this was 2019 to the low of 2020. That was from 114 to 56. You've already dropped from 147 to 95. So that was $60 in 2020, and this has been about $50 from the beginning of this year. So $60 for this, $50 here so far from the beginning of 2022. Actually, so it's not that bad. But then, as you see here, this chart, you see this little drop, that reflects equivalent to here, where we're at right now. So that is your problem. And then, I don't want to scare you, but here's where it gets better. Take a good old look at the max chart. Again, 2008. This is your drop. This was 2020, 2019. And then, where is it? How do I need to get my, oh yeah. And then you're kind of right here doing about half of it, but it looks pretty big on a quarterly. Hey, Rita's going up. Rita, at least they went up. That's good for now. Yeah, I'm surprised how bad even the Bank of America. Dude, I'm shocked. I'm shocked. That's why today we're going to be, or tomorrow is, I'm excited. I'm just giggling because I'm like, dude, this is, I already thought this week was going to be a shit show, but there you go. That's a big pop, but it doesn't mean you're going to test 39.40, and then we're either going to close above or below the 200-day. That's really all that matters right now. It's 330 ramp capital. That's where we bounced yesterday, but this is violent. Biden unexpectedly stops by to meet once famed Putin whisperer. Let's see. You need this to hold. Otherwise, I don't know. The Putin whisperer. Pac W, another Cali bank. I don't think it has to do with region. It's just anybody who bought bonds at a very, very bad time. Let me see. Total loans, $75 billion. They had $140 million in non-performing loan. I don't. That's the crazy part. None of that is their issue. Yeah, they're just losing on securities gains. So really, just if you want to get ahead of this, find any banks who bought a shit ton of bonds, and then that's it. And then just look at their investment security gains. That's it, and see what the value or the mark-to-market value on those bonds are today. And then if you get into a problem, there you go. They have $12 billion in cash or cash equivalents. They have $88 billion in long-term investments. It's most of their money. I wouldn't short them. No, not now. I mean, you're 60% down. I'm saying if you want to see if there's any other banks with exposure on this. Could be worse. Tomorrow's going to be wild. Amen. Amen. The news, I feel like it's debatable. You could argue it's the banks and people reacting to this SIVB collapse borderline, and then just anticipation for tomorrow. But like I'm saying, yeah, there's just a lot of factors here. They're talking about it a little bit. I'll go pee. We'll see. We'll let them talk about it here. Follow me on Instagram at The Trading Fraternity. I love you. God bless you. And I'll be right back.
Bank of America strategy is Bloomberg finance reporter Catherine Doherty. Catherine, we do have to start with you here on the market moves because you're seeing Bank of America now trading at book value. Nothing more, nothing less. And I think it tells you a lot. Why is Bank of America, similar to Fortress Diamond, feeling the pangs of what you could understandably see as issues for the industry?
We're seeing general negative sentiment across the street, and it's for the smaller regional banks. And then we're seeing the larger JP Morgan, Morgan Stanley, Bank of America. Everyone is in the red today. And I think that it really stems from the fallout that we saw starting last night when Silvergate just announced their liquidation. It's not a direct contagion. We need to be very clear about that. But in general, it's this sentiment that a seemingly very safe environment, and there's differences between these businesses, but I think people are starting to realize that everything that has been discussed as rosy. Brian Moynihan is talking about his business and the deals that they're doing. Well, there's some skepticism, I think, from investors about how rosy that picture actually is.
There certainly is some skepticism here, and some of this also tends to be, I guess, how people are trying to extrapolate in terms of economic conditions and, of course, deal activity. And, of course, if you have SVB and, of course, Silvergate under pressure, even though it's not a direct correlation, maybe there's something broader. You bring up Moynihan, though, and I just want to get, because there was a story on the terminal today, and it really caught my eye because it was talking about his focus on tiny deals. Yeah, well, and I don't know if I want to see hear a big banker to the world talk about tiny deals.
He said middle market deals, I believe, was the exact quote.
Not so tiny.
So not so tiny. Okay. But what he is saying is that he's basically talking about a market that is something that he says they can serve, and it might not be these jumbo deals. This is not also a word that he used, but I'm just talking in free speech here, that those are the kind of the money makers or the rainmakers that people talk about within M&A, within deals. He's saying there's still activity. It's just that they're being very strategic about where they're deploying their actual bankers, because they say middle market is what needs to be served. It's not it hasn't pulled back in the same way that these
banking executives.
Exactly. It's not just unique to Bank of America, but they're saying this is a strategic shift for them.
All to preserve jobs. You've been following this bank so closely.
Yeah, so they're just calling it negative sentiment across the banks. That's what they're saying. But yeah, I mean, I agree. but I think it's a little bit bigger. Or it could be. We'll find out on the next episode of The Stock Market Hates You. Traders woke up to a positive jobs report ahead of the jobs report, only to be dashed by SIVB. What will they do next? Interest rates are good. We can handle it. The economy's booming. But everybody bought bonds at a low price. We have to sell $20 billion of assets right now and take a $2 billion loss so we could go buy $20 billion more bonds. It's kind of like refinancing. It's like Trump tried to do the same thing with government debt. Yeah, I'm gonna do a budget today. We're gonna bring the budget to $9 trillion. Everybody was confused. What will happen next? Tune in tomorrow, 1 hour before the bell. Yeah, that's where we're at right now. Very wild. Very, very wild, man. It's crazy. Commercial real estate, well, I think that depends on what happens here with some of these bonds, realistically, but we'll find, and just interest rates, but commercial has the most risk. Tomorrow is Friday, yeah. We're going to be here before the bell for the jobs report. If you're not excited for it now, I mean, shit, you better be. You better be. It's getting crazy now. Super chat not working. It's probably just it's a banking issue right now with all the banks. Nobody talking about Troca anymore. I said that one day, just be careful of the rug pull, but yeah. Yeah, I think that was literally that day I said that. But then Rita came back up. There's a couple of random movers. I don't even now. That's it. No one's going to give a shit. This is big money tomorrow. We're going to find out what happens here, and then we got to deal with everything else, man. What's exactly? They had $90 billion of long-term bonds. That's it. And then they had customers take out money, and then they needed more money, and then they're worried about higher interest rates, so it's kind of a future move to protect their balance sheet. They're rolling over. So that's it. They're saying, well, shit, if we have money coming out here, we have this. It'd be if we were expecting more losses on there. It seems like the only way they could have kept going there was just sell bonds for a loss, rebuy them to kind of keep the balance sheet better. But now you're at least getting a higher yield. Take a $2 billion loss, dump shares on the market to get the $2 billion back, and then see what happens next. So that's the extra part about it. You got to realize they took a $2 billion loss on this bond play, right? Just realized they're down over $19 billion. But then they dumped shares on the market and they said we're going to do an offering to get that $2 billion back. So they're like, we lost the $2 billion because of our bad trade a year ago. So, and then we had customers take out their money. So what we're going to do is do an equity raise and raise $2 billion so that we could change our bonds around to higher yields and then still have our $2 billion. The offering's still going. I don't know if they fully priced it or sold it, but I know at least $1 billion was committed from 2 different parties. One was like another little bank that bought him, or bought the $500 million. They're not really it's like SIVB is not a bad bank. I mean, it's not like they grew their assets. Like, they were big. They still had $60 billion in 2019, and then that grew to $189 billion. But then they took all of that money and then put it towards bonds at a very low price. The budget could be playing some of this today, but I really think it's the banks in general. Bro, and Fed future odds are at 63% today. Very weird. It's a zombie move. No, I think it's like a ghetto margin call. Like, that's it. I think they needed money. Somebody pulled out money probably because of crypto or whatever reason. They service a lot of tech companies. And then I think they needed the money. They said, they're like, we have money, but we got to take a loss. So they're like, all right, let's just take the fucking loss and then roll over so we could stay alive. So then they could roll over and then have 4% interest on their balance sheet that makes it look like they're not losing that much. And then just try to get as much money and capital by doing an equity raise. So I don't think they had a margin call. I think they just... shit changed and they needed money, and then they rolled over the bonds and said, let's just take a $2 billion loss and that'll buy us a year of time. Borderline. Department of Energy considers creating hydrogen trading hubs. All day has been red candles. You'd be surprised even if you flip the time frames. You had way more red candles than green today. And then once you start getting into like 10-minute and 15-minute candles, it's done. It's been all red all day. And the size and the velocity is wild. ACAT, I don't think it's supposed to move too much. The premiums aren't too crazy, but there's still a couple of days. Last Raul to 39. We might, but now it's all about 13 minutes to go up 20 points and close above the 100-day, the 200-day, or this will be your first close below the 200-day. Because did we even close below there? The one time? I don't think we did. I don't think you've had a close below the this will be your first close below the 200-day moving average. Yeah, last time we closed right above it. You've hit it a couple of times here, but this will be your first close below it. Bro, look at that even wick. Rita trolling for now. XSVM with the small cap value with momentum ETF. I thought that was another bank. I was like, oh no. And then bonds are catching a bid today. Voted red. Everybody voted green because I put the vote out late. Actually, it still turned red. Y'all just voted late, huh? Went short SPG, commercial real estate. Oh, Simon? They had a bad earnings not too long ago, and they're up a lot. That one could be decent. Bernard Kern. Fed futures down to 58. That's not good. I see 63, but now that means people are tilting now more to recession fear than inflation fear. So that's kind of the problem that we have right now. But we'll see if that lasts tomorrow. It's going to get very weird now. This whole movement today is just like, shit. It's definitely, we might have a new introduction. 10-minute rigged, actually right here, right now. Market on close, 720 million to the sell side. Smaller than the last couple of days, I feel like. Is it the pump tomorrow? That's what sucks, because even if you get a good jobs report tomorrow, guess where you're going? You're going back up to where you were. It's not even like, so even if you go up 2% on the jobs report, you end up where we opened up today. If you go up 4%, you're going to end up where you started the week. So it's not even now. This is it's kind of a shit sandwich for everybody. And then you still have the other events, and then we're going to have to start monitoring banks a lot closer for now. A good jobs report would be if the jobs came in lower. So that would be good for the market. If the jobs report came in, what would be bad for the market is if it came in stronger than expected. Shout out all the VCs and the crap investing. Amen. Thank you, guys. We appreciate y'all putting us through this. Thank you for giving all of your money to Sam Bankman. Thank you. Thank you. Well, you only got 8 minutes left. Tomorrow, we'll be live. It's an hour before the bell. I usually go live about 15 minutes prior to any of that. On top of recession fears. Well, today is a recession fear. That's not even recession, just your first ever bank blow up. And I don't even, SIVB technically hasn't blown up. And I read you the comments. All the analysts were like, well, we think this is good. It's just balance sheet management. So it's like, it's not even like I feel like we are the most fearful sounding. I haven't listened to the news as much today. I don't know how other people are talking about this. I'll read analyst comments after the bell, but for the most part, I feel like we're early reacting to this. So, we will see. My time frame on it is a couple of weeks. Just give it a couple weeks and you'll find out. Because then we're going to really see if this spreads, if it actually turns into a narrative or not. And then that's it. I can make today's video on all of this. I'll just make the whole video on SIVB and why it's a market, how it could become the next issue we have here. But then it could also be nothing. That's what I hope you guys are used to it. That's the shitty part about all of this is like this could easily become the next big narrative and event. But it also, like I told you, give it a day or two and wait till these mother effers are like, we think it's an overreaction. We're going to buy it. Oh, we think this and then if you have the jobs report fueling anything. So you just got to think about it in that sense where it's like it could easily get reversed or this could easily become now the new big fear of 2023. So it's that's why it's like 50-50, Habibi, 50-50. The final 5 we'll find out here in 17 minutes, but if this shit don't boost you, man, you're closing below the 200 day, and I think that's going to terrify a lot of people here. So final 5 in 5, 4, 3, 2, 1. Yeah, Kai, looks like they're off to a running start there. The Bulls, they've definitely been beaten down here today. All of the velocity is looking to the downside. The Bears are taking over in the final 5. They don't want to let the offense get anywhere near that 200-day moving average, but the offense has something to prove right now. They're making an advance down. It looks like they're pulling back here. The Bears are taking the lead. They're making a move into the final 5. The low ticker is unrelenting. It keeps going down now. They're making a plunge. I think they're going to try to go for the touchdown here at 3,900. If they could get it, if they get any wiggle room, it's going to be good. At the very least, the Bulls need to make a bounce back, get it up to midfield, but I don't know if they could accomplish that. They only have about 4 minutes left on the clock. We're going to see what's happening here. It looks like everybody in the Bears stands are already cheering. They are getting off. I think they're leaving the stadium right now, but you're getting it, and the Bears are moving it down. Wow, they're doing it in lockstep. You see this move right here. They're moving it down. It's autographed. It's this choreograph right now. We're going to see how this plays out here, but the Bulls still trying to show that they got something to prove out here. You can't leave the field without making an honorable attempt, but it looks like it's very hard to do right now. You don't have much time left. Enter into the 3-minute, 52nd minute mark right here. We're going to make it, but the Bears, they are unrelenting and keep going down. The low ticker is not letting up. Even Biddy, any of the Bitcoin ETFs, they're even giving up here. All risk assets are losing here. Oh, my goodness. Yeah, final 5 not looking good. T-Fest. They need to be muted. I don't think they will be. Bears led by the Captain Raul. Captain Raul seems to be coming back after a 2-day hiatus. He is back. Yeah, right, ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please stow them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly Watchlist and main channel layover around 4 p.m. Pacific time. And then we're going to be taking off promptly around 6 a.m. or 5:30 a.m. out of sunny San Diego, California. So we make this final approach into San Diego International Airport. It's about 60 degrees and sunny, looking like a beautiful day, unless you got the rug pulled by Raul and you thought the banks would hold up a little better, and now you got to deal with a potentially new narrative and a little bit of market panic. But we are no longer under COVID guidelines, so no masks are required, but we do ask that you exit 1 row at a time and drop a GG on your way out. As always, we appreciate you guys' business. If you're interested in your Colt Rapid Awards program card, please flag down our flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Let's go, baby. What you got for me? What you got? You got to do. Tomorrow's going to be insane. You better be ready for the morning. We're going to be live and early, but Chad, this is the borderline of imagination or the borderline of panic right now. And the next couple of trading sessions might very well decide all of it. A lot of weird moves, a lot of weird bank activity, but you're bringing it into the bell, and you better finalize all of your plays for tomorrow, because an hour before the bell, it's all moving. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to bring it home. Finalize your plays. Speak now or forever hold your peace, because you better finalize it. If it's an option trade, you're locked in till the bell tomorrow. So wrap it up. Make up your mind. Get ready for a shit show tomorrow. You made it through a crazy day today. You have less than 15 seconds remaining. Let's go, Chattadonia. What do we got? What do we got? That ES, I'm going to try to hold that one till the morning tomorrow, but that one was already crazy. Man, what a day. Even that rollover play was $6,000 from the roll. This is insane, bro. Ding, 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 ding. Oh, nah. Let's go, baby. Wow, we did it. We made it. You made it through a wild day, bro. Oh, it's crazy. I need that GG. Let's go. It don't matter if you made money or lost money. I know you learned something. Everybody in the game, everybody who contributed, I need that GG. Let's go, baby. You made it to today. Tomorrow will be crazy. Oh, my gosh. All my laggers, all my lurkers, all my lovers. Where's that GG? God bless you and thank you. Let's go, baby. All the stream alerts, all the members, all the non-members. Let's go. Wow. Welcome to March. Welcome to fucking March, baby. Oh, I see you too, Twitch. I see you too, baby. Let me get that good game. Let's go. That's how you play. Shout out all the donos, all the people that held it down, all the people showing positivity. Anybody who hasn't quit yet, let's go. Wow. Opinions and thoughts, but they don't mean a lot. And my money on stocks, I can show you the top. Every bottom of my pop, the key in the lock. Don't believe me, just watch. Use my freedom a lot. I need me to rock. You won't see me a lot. Monday through Friday, you need me, let's talk. Wow. Oh. You like World War II, but we know what that's in the line. Oh, man, that's a good song. Let's go. Chattadonia, that is the day. Chattadonia, we made it. My goodness. NASDAQ closes down 1.8 on the SPY, 2% on the NASDAQ. The day is now over. You ain't even got any earnings or nothing. Let me check Fed future odds real quick. They dropped to 62% today. What a shit show. What a shit show. But Chattadonia, that's the day. Damn, we ain't even get 2,000 likes. Oh, it's okay because it's coming in, baby. Hard. Let's go. Oh, man. Let's go, Chattadonia. So God bless you and thank you. Today was a wild one, man. It's not as if the numbers were too crazy, but a lot of things happened, man. And all I can say, Chad, is thank you for being here. I'm grateful to be able to share this opportunity with you. For real, man. If you held it down today and you were involved, you contributed, man. You gave me a second of your time. Just God bless you and thank you. And thank you for making this community so great. You know what I'm saying? Thank you for making this community so great. Thank you for contributing. Thank you for keeping it positive. And if you didn't keep it positive, I encourage you to try again and keep it positive. But you a baby back bitch, and that's okay. It happens. I know there's a lot to deal with in the market. Okay, I got to deal with it too, baby. But God bless you all for real, man. In all seriousness, man, the great community that we have. Thank you guys for your time. I hope we made the most of it. I hope 7 hours of effort every day shows you how much we care. And I'm glad to be able to share this with you because it's getting crazy, baby. You know what I'm saying? Let's go. Let's go. Oh, what's up, Jay Nickel? He said, been listening for the past couple of months. Thanks for all the education. My first day trading futures. Started at 1K. I'm up to 5K. Oh, woo. You were trying to play options. Well, let's go, baby. Be careful. Be careful. The futures. Right when I get myself out of my other future, I trap myself in another one. It's like I have a problem of liking to be trapped. So we're going to see. We are going to see. But that one, I deserve that one because I didn't take my extra out on that. But be careful and good job. That's all. That's what I can say to that, baby. But God bless the Chad. Thank you guys again for another day. Amen. Amen, baby. But that's it, man. Check out the links. First link for the Scream Alerts Bootcamp and Real Estate course. Second link for the Nightly Watchlist and main channel. I hope
you're going to crash.
Oh, look at yeah, that's me. I didn't even like my own video. Yeah, we talked about some things. I don't know if you saw it. You should, if you're interested in cash management, bro. Cash management, you got some things, bro. We were showing you some stuff. It was cool. I got to stand up yesterday. You guys like the stand up watch list? I never got to stand up on a watch list before. It was very unique for me. I don't know how I felt about it. It was actually crazy. It felt very, very odd. I don't know how I felt about it. It was like good and bad at the same time. You know what I'm saying? It's crazy, actually. It's crazy. But check that out. We're going to talk about SIVB tonight. We'll see you there. That's pretty much the main issue that we had today. Third link for that membership badge, baby. Shout out to all the members. First link for the Scream Alerts Bootcamp and Real Estate course. Follow me on Instagram at the Trading Fraternity, baby. Don't fall for the fakes. Okay, that's me. I'm the private one right there. Let's go follow me so I have people to follow. I need to get my following up. I need to start following people out there. Say what's up, man. Don't be too shy and don't fall for any impersonator Joshes. Have y'all noticed impersonators going down lately, though? Have you guys been harassed less by impersonators? I've definitely had less people ask me about that on Instagram. So I don't know. Have y'all been doing good on the impersonation? Is everybody good? Have you seen a noticeable downtick in all of that? You know what I'm saying? Is that good for now? I haven't even seen. Let me even check how many fake ones. I haven't seen one since you went private. I think it's hard for them to do it. I think that's why. I don't think they could do it. I think we made it a little hard for them. So that's good. Yeah, you have. That's good, man. My Snapchat is Josh Answers. That's it. You can see my Snapchat here. That's my Snapchat right there on my Instagram. So there you go. Yeah, they can't access. Gap sinks 5% post-market ahead of earnings. But yeah, check it out. Follow me. Don't fall for anything negative. How option pricing works. If you're still on that, you could go get it. Great tutorial. I'm sure you'll learn a lot. Tesla's dumping after hours. How to set up the long-term, baby. And finally, the prayer request wall. Let's go. So me and my mom pray for y'all. You know that? That's what we do. That's what we do every Friday, every Sunday. It's actually, we kind of do it twice a week. You know, it's actually quite beautiful. But Chad, we believe that if it can't flow through you, it won't flow to you. So I hope you could bless everybody in here. I hope you could pray for your fellow brothers and sisters. I hope you could send a prayer out for me. And I hope you know, even if you don't fill it out, we praying for you. You know, that's how we do it, baby. That's how we do it. Yeah, you pray for me too. Amen, baby. That's what I'm talking about. That's what I'm talking about, man. That's what I'm talking about, man. That's what I'm saying. That's what I'm saying, bro. You feel me? You feel me? But that's it, man. So check out the links. Read Richest Man in Babylon, Proverbs, New Living Translation, Strangest Secret in the World. That's a good one. I don't know. I could. Maybe we save it to tomorrow. Oh, wait. What's tomorrow? Friday? Oh, no. Shit. Damn it. No, I don't know, actually, because I have one for you, but I have a tighter schedule today. But then Friday, tomorrow, I may be able to stay around, but only for like a small amount of time. I forgot it's Friday. Oh, yeah, you get Josh Answers on Facebook now. Yeah, be careful. Be careful. Yeah, Chad, I don't think we're going to be able to. Yeah, earnings out. I don't even care about the earnings now. Earnings don't even matter anymore. I mean, Oracle's kind of big. DocuSign, they said CFO's transitioning. Ulta beats forecast. But all that matters, dude, tomorrow. So, Chad, we'll save it. We'll be here early tomorrow. We'll be good regardless, but that is the day, man. So read the books, Richest Man in Babylon, Proverbs, New Living Translation, and The Strangest Secret in the World. Chad Adonia, I hope I know that we love you. I'm going to see you on the watch list tonight, and we are going to be early, bright and early tomorrow. Okay? Bright and early tomorrow. That is where we are going to be at. That is where we are going to be at. So we'll be here about 15 minutes before the data, and then it's going to be around, 15 minutes before the data, about an hour 15 before the bell. That's when we're going to go live. That sound good? That sound good, man? I hope it does. I hope it does. So, Chad, I love you. God bless you. And, yeah, don't forget why we're here. Why we do this every day. while we keep going, while we stay in the game, while we ready for the whole year and understand things may look different at various times throughout the year, but that mindset don't. And all we could do is grow. Even if you pull back a little bit, you could always go a little further to the upside because it's growth, baby. Up and it's down, but it sounds like progression. Ladies and gentlemen, why are we here? Why does the faith, hope, and love never go out of style? Why have you shown that determination, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. So, Chattadonia, I love you. I will see you tonight. Email me questions you have on SIVB. Otherwise, we're going to go over everything we talked about today on the watch list. I think tomorrow is very simple. We're waiting for the jobs report. We talked about it a lot today. Worst case scenario, we'll see you here in the morning, baby. And get ready to play. But, Chad, that is the day. I love you all. Have a wonderful, beautiful, glorious day and evening. And that's it, man. Peace out.
Yeah, what about the budget? What are the budget about to lie? Hold on, huh? Come on. You watch places on YouTube the YouTube.com/the trading fraternity. There's a second link. Come on. Just check out the description. I love you, okay? Thank you for supporting the channel. You know that? Thank you for all your love and affection and showing and you were here. And I love it. Thank you, okay? Yeah, but I'll see you later. I'll see you in the morning, okay? Goodbye. What you talking about, Joshua? Quickly, you got to get to the bond yield. Why am I ending the live stream like this? Everybody, quickly to the yields, the bank stocks. They made bad bond payments. Hurry, quickly, no time to delay. Jobs report tomorrow. Hurry.